we are going to be streaming stocks, options, futures. Keep an eye on some of these Chinese runners. Looking at technical analysis. BBBY, of course. Sub up, like up, comment down. Happy money sticks around. Get set up here. BAOS. There's like 5 or 6 stocks. I'm keeping an eye on it. See if they have a rally today. BOAS looking like it's wanting to maybe start going here. We'll see. Probably better to wait till market open. At this point. GDC, that one that ran yesterday. Keep an eye on this one as well. Which one of these have some strength today? A lot of upside potential. Here's our Discord server. Morning Ace. We got more SHF? Really? Morning rally. What's your plan? Are you gonna sell them today, or are you gonna hold? Are you just averaging down? Morning tree, morning rally. I don't know. It's a little bit weaker at pre-market. It's kind of bouncing back up a little bit though. OWLT is another one. I'm not gonna trade this one. Too liquid, man. Let me get this shared on Twitter. Gotta have a stock market crash tagged. It's coming. So I do it every day, and then one day I'm right. Whee! Thanks, guys. Thanks for you guys that retweet and stuff. I appreciate that. Oh, I didn't put the tweets there. I was nervous. I was doing it in front of everybody. I like to see what streamers are doing. So I try and show everything. Okay, so I brought up I listened to PB show last night and they were going on about it, how it's just being suspended, it's not being delisted. Okay, LEJU is another one. I don't know what they were basing that on though at all. So I'm just assuming they're basing it on the form. It says it'll be suspended at the opening of business day, May 3rd. So suspended tomorrow, so not delisted. Well, technically, I think that's true. I think it gets suspended before it gets delisted. That makes sense. I don't think it just goes to delisted. I think it gets suspended and then delisted. However, I'm talking on Discord about this, trying to figure out what you guys think, but it seems like I mean, I've seen stocks that get suspended, you know, suspended pending news usually. So potentially it could be suspended tomorrow, and then there's the news release. So they're suspending it, but it's not suspending based on news though. That's the thing. I mean, because NASDAQ is forcing them to be suspended. So, but potentially maybe while it's suspended, they could release the news, a buyer or whatever, or that it got bought out at a certain share price, say, you know, a couple dollars a share or whatever. And then when it's resumed, I think it could have a huge gap up. I think it could resume at a much higher price and never even go to OTC. That's what I'm trying to kind of figure out. If it's possible that after it goes suspended, that it won't go to OTC. If that's even a possibility, which I think it's still going to, but I'm not sure. Maybe it's a possibility that it just goes suspended and then gets resumed on the news. So I'm going to read about that and figure it out. Or to know that this would not necessarily affect the company's ability to continue operation. Yes, we know that. Due to being delisted. Even Bullions is saying the delisting requires Form 25. Thought that might not necessarily be true in Chapter 11 delisting, but maybe it is. Then 10 days from that is delisting. So, let me see. I don't think it gives you more time, because once it's suspended, that's even worse. Then you're holding an asset that is not in a tradable market. So suspension isn't good. At least OTC you can trade it. You can sell it. Little doc, little morning doc. Thanks guys for your likes, appreciate it. Still kind of getting set up here. slept in a bit. We've got 6 likes. Let's get those cranked up before the bell. See if we can get 20 likes before the bell. Got 6 minutes, and I'm gonna try and get to a bottom here, because to me there's a huge difference. I don't want to hold into OTC, but it looks like we're getting suspended tomorrow. However, if there's a possibility it's going from suspension, if it could be suspended tomorrow and then resume however many days after at a higher price after news comes out, then I might not close. I might hold. So that's what I'm trying to figure out, basically. If that's a possibility, I'll probably still be closing today, but just. Hey trader, good morning. Morning, Dennis. Happy Money Tuesday. So pre-market had a pretty big dip down here to 9 cents. Maximus, let's see, IXEH or L? You can even see that sketchy of a ticker. Oh, it's definitely L. Nice. Another morning runner. This wasn't even on my list. Chinese education? I mean, that's right up HKD's alley. No, HKD's like media, never mind. Hype from Maximus. Well done, sir. Put this one on my watch list. See what happens. I'd be careful holding it at open. You probably know what happens. But it might just have a little dip at open and then keep ripping. But it's not going to be able to make these moves. It's going to just be halted, of course, because it's going way too fast for the corrupt stock market and not the after hours market. Look at that thing go. What are the, oh, JZ I think was an education one. This one's not moving. HKD's not doing anything. I've got keep an eye on LEJU, BAOS. All these had pre-market moves. Just be part of this story. Unfortunately, that story won't matter probably in a year or even a few months. No, probably a few months. Unless something crazy happens, then it'll be fun. AGL. Not sure. Looks like a nice double top there. Like an earthquake going on outside. Let me get some levels drawn here. Hold on. We got to our 20 likes. What do you say? 22? 22 likes before the bell, guys. You have 3 minutes. Yikes. Yikes. So I think the SPY will probably continue to be choppy into PAL tomorrow. So yeah, looking for like range trades. Kind of broke out a list, like act like it was breaking out yesterday, but it ended up coming back down. So that's little false breakouts are probably likely if we're even at the breakout area, which it doesn't look like we're going to be up there anyways. Like so if we're thinking about chop and trading in a range, you can see this range is pretty large. Like, you know, it can come all the way down to maybe 410, or maybe even, yeah, maybe even down here like 405. Definitely during this week, I think we could see a range down to here. On the high end, maybe after tomorrow, if we super bullish for some reason. Have a move up. 1 minute to open here. Guy tells me we're going. Trust me, bro. What do you do with any? I'm gonna close back out. I've been day trading it, trader. So they've been doing these liquidity pumps every day on it. So I've just been popping at the lows of the day, and then the next day on the liquidity pump, popping out. And then yesterday I actually tried to even take the short. I popped out and I was not take the short, but I know day trades on that account. And the other account I couldn't do it because I guess it's not margin. But yeah, probably trying to be out of all the positions on it today. So there's the bell, but you won't hear it. Get off. The XAI, maybe another move on it. So there's that one you just mentioned, LXEH. It's probably halted. LAJU. Yeah, I saw Top actually making a little move this morning. BlackBerry had a gap up. Yep, LXEH is halted. Top is up 11, 12. Yeah, CXAI with a gap up. SPY's coming down. Broke the pre-market low already. 414 I have. The XAI is starting to rip 10%. Oh yeah, see what happens over here. 414 on SPY. Oh, wow. SPY's flushing out of open. 13.24. Interesting. Yep, CXAI moving up 1480. He's in a nice trend. MSGM is up 14%. Fun. And BBBY2 for we'll exit. To jump to the top, maybe, yeah. My red candle, BBBY even down. Well, it's down 8%. Yeah, to 9 cents. A lot. Actually, just speculating costs about 17 cents. Yeah, I know there's a lot of weird stuff, but if you just read into everything all the time, you get burned most of the time. Yeah, AST has been down. We've seen it where FGD data doesn't get released or it's late or whatever. That's not happened. Yes, I know there's speculation on this huge thing going on in the back end of naked shorts getting closed down and a big investigation, but yeah, been here too long to put money on that. News about buyer then OTC. So yeah, that's where I'm wondering if let me see if Bullion's had anything to say. I'm wondering if it's possible if it gets suspended and then never goes to OTC based on a buyer buying it at, say, whatever, $1 a share, $5 a share, and it gets worked out just while it's suspended. Tops at 22%. I want to see it break that pre-market high though. OST was on my watch list. That's a Chinese runner? Yes. I missed some of those. DXAI. It's pretty high up there, I think. SPY is kind of flushy. Let's see, so 15 it's at now. 16. I mean, maybe just like the psychological level of 17, but this thing. Yeah, I mean, there's really not much until the high. Basically just the high after that. IDEX, yep, IDEX is ripping. It's up 15%. SGM is up 15%. Oh, it's a gap up. BAOS is halted. LXCH is still halted. So that's the thing with these. They can't move the same speed that they do in pre-market. So that's where top was kind of unique, that it just would halt and then there was no like extreme downsides until after the whole run was over. Not projecting that resistance. It depends on how it's negotiated. You'll keep your shares, but your shares might be worthless. Like literally worthless. So yeah, no reason to have a share that's worthless. So BBY is acting a little bit different this morning. We're not getting a pump out of the open. We'll see what plays out here. Kind of testing the supports from pre-market. See if it holds these. It's not on the list of delisting because it's by flushing there. Maybe it should have taken that short. It's being suspended tomorrow. It's not going to go to OTC tomorrow. Not getting delisted necessarily tomorrow. Just being suspended. So, trying to figure out, it might be in a suspended state for, I don't know, 10 days or something before it even trades OTC. Right. If it's suspended, it's not tradable. You can't buy it, can't sell it. It's like a halt. So this one right now, BAOS is halted. It's the same thing, but it's suspended. It's not tradable. So when stocks, when they get news that changes the structure of the stock, it'll get suspended. Not from like volatility or anything. It's just from news. Sometimes it's a merger acquisition, like that could suspend a stock. Sometimes it's a spin-off or a carve-out or, you know, any fundamental news. They will suspend it and figure out the news and figure out what to do and then resume it. However, in this case, I think it's just being suspended because it's not compliant, and then it will trade on OTC. My understanding, but what's weird is the gap from suspension to OTC seems like it could be large. Could be a lot of time, not like right away. That's potentially why we're not seeing it on any of the lists yet of you know, delisted stocks or whatever. But yeah, that's something we can look at. OST coming down. So on here, actions, let me look. Symbol change. Yeah, BY is kind of flushing here, 11% down. Everyone planning on selling today. I think we're maybe actually seeing it. Stock split. So it's testing the pre-market low of 910. I guess I just looking at stocks that go to OTC, they on average have like an 80% drop the first day. And if they don't drop 80% in the first day, by 2 weeks time, most of them have dropped 80 to 99%. That's the main reason. It's shutting off the buy button basically, because it just keeps a lot of people out from buying the stock. New low there on BBY. Jeez. Well, this is another thing I saw when stocks were getting going to OTC. That's the thing. All the ones that went to OTC, it happened. That's what's confusing. Actually, the day they went to it was a big drop too. BoxD maybe wasn't. So there was a gap on this one. BY is down 12.5 to 9 cents. Yikes. Alright, I'm probably not going to be making a profit today on this thing. Be looking for a bounce to probably close. Ooh, flushy. Oh my gosh, 16%. Oh, 20%. Yep. BoxD 30, 31, and then it was the 4th. So this had a couple days before it went to OTC. Maybe it was suspended on the 31st. Yeah, I can show the order book, sure. Where'd it go? There it is. So that was more than a weekend, 31 to 4. So there's a little gap there. Wow, look at that huge candle. Look at that huge wick. When I think you dropped the 1K on BBY, I'd probably wait until OTC because you might get it a lot cheaper. All these Chinese ones that were running are halted. I mean, that's the risk though. Yeah, so if you think it's going to get suspended and then it's not going to go to OTC and it's going to have a crazy gap up, then yeah, you'd want to put it in now or today. But if you think it's going to OTC, I haven't seen a single case where it rips into OTC, so if you want it for a better price, I would most likely wait unless you think that's doing the other. That was a crazy wick, crazy move. So what was some of the other ones that recently went? Let me just look at this list. Pair. So pair, April 18th. This one didn't have any gap, so it just went straight to the OTC, I think. There were some gaps. There was a gap back here. Doesn't had a gap back here, so potentially this one was suspended. Resumed trading for 4 days. And then went to OTC. And free by all. 7-4. Yeah, so you get suspension. It's suspension based on news. This isn't a suspension based on news, though, as far as my understanding, because this was submitted by the Nasdaq for non-compliance. I'm a little torn on what to do here. To be patient, but yeah, it doesn't seem like we're gonna get a high today, a higher high. That'd be crazy. So I just try and wait for a VWAP move. Might be waiting a long time. LXCH is halted again. Yeah. The dilemma. Yeah, LXCH. We get halted going down now. Oh, never mind. The thing's gnarly. Yeah, that's the thing. One halt down, and thankfully with these Chinese stocks, they don't usually halt down and then have a huge gap down. They usually open pretty close to where they halted, like not a huge difference. And I don't think any of them ever offer shares. They never have like share offerings. An American stock, if it was up 300%, that was that cheap, they would definitely have a share offering. And then the stock would halt or be suspended pending news, and it would open up way down. Icon's down 10%. What, Newell, or what do you mean? Well, top kind of broke that resistance. Is up 7%. Ah, good earnings. FedEx 15%. Yeah, that's a nice continuation on IDX. Have a single rally before today? What do you mean? Today we didn't have a single rally on BBY, or? Oh, you should be on this trend down. I know this has been one of the craziest stocks I've ever watched, as far as just continued sell off with nothing. this would be the death spiral Barry was talking about. This little one right here. But hard, I mean, not even counting that. That's not even a retracement of anything. That's nothing. Down 15%. It's at 86, 87. See if this is a dip before a rip. By rip, I don't mean something crazy. Just maybe back up to some support. Something, maybe back up to 10 cents. Be nice, but I don't know. I mean, breaking the support the other day was, TA-wise, was not good. Breaking that 10 cents, or no, was it 11 cents? Yeah, 11 cents. So it found support, built support, and then broke through it. So it's, yeah, momentum's down. But I guess I was going long in the unlikely event we have a rip before OTC or suspension, I guess. The odds, I don't know. I mean, it's really cheap market cap wise. I think this is the float, 465 million, something around there. That gives it a 40 million market cap. You know, they make over $1 billion in revenue a year. It's not profit, they're not profitable, so they can just make that profitable then. Yeah, but whatever buyer there might be, they want it for as cheap as they can get it. No red candles on SPY on the 5-minute. Or no green candles, I mean. IDEX 40%. Yeah, look at that thing go, 41%. Nice. LEJU. LXEH is halted down. Did you get out of that one? Oh, BAOS is halted down. That's a pretty aggressive halt for Chinese stock. This is what I'm saying. They haven't been doing these Chinese ones, but that's bad. Maybe it'll resume back up here. It's just a graphical error. Oh, BBBY, new lows. 20% down. So the sell pressure of everyone saying they want to sell today, going to lit with those sells, and so they're not having to pump for liquidity potentially. See what happens by end of day, I guess, but what it's looking like. Yeah, LEJU is resumed. It didn't halt down there. So You halted? Aw, oh, dang it. I put an order in for it. I missed it. A lot of you guys run on IDEX, huh? Nice. Solid continuation. Back in Puebla. And Bella. Can Enterprise down 20%? That's, do they just have earnings? What's his ticker again? IEP? What? That's very weird. BY is flushing even more. $0.08 there. This is very strange. Oh, it's a Hindenburg short report, that's why. Yeah. I mean that's a big move from it, but that's what happens. They short it, and then they put out their distortion report. BBY got acquired. If BBBY got acquired, theoretically it would from here, yes. Because you would, they would acquire it for a higher price than it's at right now, some kind of premium. Market cap's 38 million. No, it shouldn't flush all day long. I know, I was like gonna get out here and I'm like, well, it's at the low. I'm gonna just probably be patient and wait for a bounce, but yeah, it kind of kept flushing. So we'll see. I mean, you can have big down days. 20% day can turn into a 50% day. Probably should have known better. Pretty much all of you guys were saying you're gonna sell today. Pretty easy tell. And then yesterday, when we looked at all the stocks going to delisting, even the day before, they all like flushed quite a bit. I don't know. All hindsight, I suppose. The AOS is still halted on the downside with the LXEH. I don't know if I'm gonna get one of these ones that's halting. SPY is just very weak out of open. I did open up some shorts here. Got 5 of them on the futures. Maybe this is the spring test. BBY. Maybe this is the dip before the rip. I don't think so, but selling into this is usually not the best idea. IDX, yeah, I guess when you mentioned it yesterday, it already went up so much, why didn't it jump in on it? And wasn't necessarily looking for a play. I mean, a lot of Chinese stuff has been going crazy, like much crazier than this. So it's kind of not going for it. But yeah, this looks nice. I mean, it's consolidated above VWAP now. I guess I would look for. Oh shoot, I forgot that order's still out. I just bought LEJU. Yeah, that makes sense. Dang it, I should cancel that order. Totally forgot. Okay, well. Let's get on with the halts. Is it halted down now? Yep. Whee. Pretty weak out of opening. We do kind of have this head and shoulders going on a little bit with that extended hours, I guess. But yesterday's candle was pretty bearish. That inverted hammer at the resistance, or MACD is still bearish. I don't think it's gonna break out before Powell, but like I was saying this morning, we have a pretty big range. We could trade in potentially down to 405 or so. Yeah, SPY's still drilling down. GME, you guys are wondering about? Let's see, gaps not filled. Nope, 1827 it needs. There's one at 1775. There's actually another one at 1688. So very likely both of these could get filled. On the day that I only saw the one at 17 something, which now it's not showing there. Sometimes Weeble likes to just add wicks. Oh yeah, 1775 and then 1688. And GME has earnings this month, I think, right? Export 18. I mean, there's not a whole lot of good supports here. Kind of threw that one, and that wasn't even a great one. It's really just these gap fills is what I'm thinking, which is 17 bucks. That range. Little support here at like 1760. Tap in the public fountain naked. ADP? Oh, Keurig, yeah. That's Dr. Pepper, right? ADP. Wow, they didn't like that earnings. So BBY hammer candle, which could be bullish. Yeah. SPY's kind of just flushing still. 1204, 1261. Wow, more fleshy. With the RSI 16 on the SPY right now on the 5-minute. A lot of pressure. Up after unhalted? I hope so. I don't know. It's got the momentum going up this morning, and it has that pre-market high of 1357. So, go back to where it is right now. There, it's unhalted. Maybe just consolidates around VWAP. I don't know. Yeah, IDEX holding up above VWAP. Got an engulfing candle there on the 5-minute. Yeah, maybe look for support back at that breakout at like 48 cents if it breaks VWAP. I swear, Tree, you have every stock ticker I've never heard of. Liberty TripAdvisor. Earnings today after hours. Yeah, that's just an earnings play. I didn't even know TripAdvisor is publicly traded. Hey, Jew, no. Those new stupid shares. That was fun. I got my taste for Chinese stocks for the day. Jeez. Out of LXCH. I made it all the way down there. 412.76. Yeah, big fleshy flush today on BBY. I mean, you saw in chat, everyone said they were going to sell today. Oh. Guess we should have seen it come out a little better. And it's consolidating at the lows, so not looking good so far for a bounce. SPY is just drilling. Hold it down again. Okay, I closed out of them. I took the loss. any puts going on GME? I did. I closed them. Look at that flush on SPY. I closed them when we started consolidating. So I picked them up here and rode them like 2 or 3 days. No, actually, I maybe rode them this whole time. I closed them somewhere. Where was it? Somewhere around here. I didn't get any more. I said I was going to on a little bounce, but I didn't. So, it's just flushing. There's just no relief on this thing. It's crazy. But yeah, it's actually moved pretty slow, really. Still looks like a fixed stock, or fixed stock. But look at this. This is breaking through all these lines I have, all these support lines. Crazy. Casa tree. Low there on BBBY, 79 cents, down 23%. Crazy. BBY has just been flushing all morning. So when we looked at it yesterday, we saw the day before, on some of them, the day before it delisted, they had a big red day as well. Thing is, I don't think this is getting delisted tomorrow. It's getting suspended. Maybe the next day it will be on OTC. Look at the 1 minute on SPY. Find an exit. Nice BK. 77 cents is down 25%. Definitely should have killed this loser quicker. Once it broke that level from this morning, it was a pretty easy tell. Broke that 91 cents. It would still have a liquidity push, which it might, but it's probably not going to be, where's it going to start from? It's going to go down 50% first. Or it has a little relief rally. Lush. Yeah, this is crazy on the SPY. Wow, actually very crazy. 0.84%. We get any data today? US job openings was at 10. Okay, so that was what accelerated this drop. That makes sense. Sorry guys, wasn't up on the news. I was watching BBY just suck all my money out. We had job openings at 10, which is causing this. Let me see what they came in at. US factory orders was plus 0.9%. In March, consensus was plus 1.3. That was pretty far out of consensus. US JOLTS job openings, 9.59 million in March. February is 9.974. What's the estimates though? Get that right on my support line. The wick might be where I close. Yeah, I'm gonna close here. Alright, close my shorts. See this wick and the support, I mean we're down 0.84%. Would look like to re-enter. Maybe even try and scalp it on the way up too. But I'm gonna be patient for that. Might consolidate for a while. Or not. I mean, oh, RSI is at 12. I remember last time we saw that on SPY on the 5-minute candle. Yeah, I might actually go back long. Yeah, I took the long here. See where we get a bounce to. Let's see, red book. Okay, so actual was a 9.59 million. Forecast was 9.775. Much lower than forecasted. So that's bad news, I believe, and market's responding poorly. So bad news equals bad news. I might get out of the long here. Looks like it's consolidated before maybe more downs. Getting a whole lot of buying pressure yet. One-minute candles get me all juiced up. Right? Isn't that's like bearish for the economy? Fewer job openings. Seems like the market is reacting to recessionary fears more now than interest rates. Morning, Mohammed. Okay, there's a bounce. I'll put a stop limit maybe on this. Probably, yeah, I just got stopped out. It's fine. I won't give away any profits on just over trading through chop. Consolidating. LXEH on the move back up. I suppose a break at this level and I take a short again. It's gonna give us that. Yeah, look at that. Blushiness. Be patient. Patience. Can't get above 8 by 220. 6. $220's in quite a while. Workhorse is up 15.4%. I don't have any tin. I guess technically the filing that BBBY said they got says it will be suspended tomorrow, so not necessarily going to OTC tomorrow, but suspended. But this is in the context of a delisting notice. So suspended, going to be delisted. Yeah, look at that. Break down here. Well, I'm happy with the move I got. Might come a little further, but yeah. My puts finally come. Oh, I do have GME puts. Never mind. I only got one of them though. I didn't get filled on two. Guess I could close this. It's in the money now. What's MU and NVIDIA doing? They got away. I flush a new low there. Whoa. Alright, I took the short again. Put a stop limit on it. Don't want to trade back profits. Ooh, fleshy, fleshy. Another level broken. I have a bigger position this too. Feels good when it's going up. Yeah, 410. I said that this morning. Oh, that low level is like 405. Yeah, I don't think we'll hit there today. But yeah, 410 is a kind of a spot. Look at this. Look at these candles. There's no relief on the 5-minute. We're gonna see this level at least today. 410.22. That's a solid support. Probably close shorts and go long there. Any signs? That volume this morning too. Large volume. RSI 7, 10. Whew. Single digit RSIs on the SPY. Party. Gonna relocate on again? I don't know. Yeah, I guess if he wants. Morning, kitty. New foils to fold into hats. I feel like if we hold through delisting and somehow get releasing. So if it goes to OTC, that depends on how it's negotiated. If there's a buyer that comes through, they could just basically wipe that ticker and say, start a new company, and then those shares are worthless. Or they could. They could be a good player and support the shareholders and then you just keep value, but not necessarily. Up MC production. And the buyer ticker change. Yeah, ticker could change, and that's depending if there is a buyer. IDX flag away. Broke through VWAP. Maybe. Yeah, it is just a 50% retrace right there. So could be. Little bull flag after that consolidation. SPY is the most exciting to me today. Got another little bear flag build here on the 1 minute. Considering closing these shorts, but it's been so flushy. Okay, yeah, I'm closing them. Make a little profit. I think we still could see a lower low, but let it breathe for a bit. Yeah, I shorted the futures up here and closed and reopened on this hill. Actually, I went long here for a minute. We'll just see if it's consolidating here again like here in the new lows, or if actually start to break to the upside. I think if it does break to the downside, probably just one more new low, 410.22 area. A potential hammer. Yeah. I think I'll hold my puts on GME. I guess PAL is tomorrow, so probably going to cash before then would make sense. He's not till 2 o'clock FOMC, and then he speaks at 2:30. $1. Any news could come out at any time. Ding. Cue the comment about sunken cost fallacy. LEJU, make it back up. Yeah, these Chinese ones are not halting anymore. Calm me down. I think SPY's wanting to break that low. Yeah, there's a new low. I think I'm gonna let this one go. Already down 1.16%. Over 100 points just since this morning. It's wild. Maybe look for the long. Sold my 12 SPY puts to the 414. No worries. I mean, this was a crazy sell-off, really, out of the gate with no relief rallies. So taking profits is how you make money. I mean, look at this hour candle. It's huge. Down over 1% in the first hour. So looking for a little consolidation, and I'll probably try and play the upside even. Upside will probably be short-lived though, as the broader momentum is down. So looking for a nice entry really for another short. Share is still above, still worth, still kept by stable. FCL, is it doing stuff? Talking about the other day. Yeah, it's in a nice pattern here. We got bullish MACD, green over the 9. Got a lot of volume yesterday on it too. Yeah, this one looks good. That little bull flag on the hourly that's already repeated once here. So don't have options. Has options. What? And the tight spread. Yesterday's inverted hammer on it was not a great sign, but not bad. We've been selling some premium on this thing. BBY new low there, 77 cents. I was about to say 76 cents. 7 cents down 25%. LXEH halted again. Does IDEX have options also? Careful on these options, man. These are totally very illiquid. Just huge spreads. Oh, they're way out of the money, that's why. So it's gonna be hard for that thing to basically gain in value. Ask me about my birds. What I do like was FCL though. They make no sense. Yeah, they don't make any sense. That's true. A line there, 117. Well, it's been an hour in. Quite an eventful morning. Thanks for your likes, guys. Appreciate it. We got 20 of them. Rough day for a long BBY holder. But thanks for 20 likes, guys. I mean, it's a process, so they wouldn't just say that out of the blue. They're going to start with a suspension, which starts tomorrow, according to that filing, or according to BBY. And then... Ooh, SPY down there. And then we'll just see where it goes from there. Probably delisted. I mean, just like... I don't know, YouTube doesn't say that anymore. Too many snowflakes. Had to get rid of that. I don't want to go long here. Ooh. This is a big level for it to drop. I don't think it might just wick down here. Down 1 1/4. Yeah, see, candle. I think we might just wick. Well, sometimes inverted hammers can be reversals to the upside too after a downtrend. That's what's confusing about them. Oh, this bounce is gonna be pretty epic, I bet. If it happens. Still flushing though. Wow. New low on SPY, down 1.3%. 409.30 is the next level I have on here. Wow, what a day. Let's see, what did I miss? Missed this drop from here all the way to here. It's fine. This is now definitely playing with fire. Shorting at those lows. About 2024 calls. The whole delisting thing and having calls, I don't. Basically, yeah. I mean, I guess trading them in OTC though is going to be pretty much worthless, I think. So it's more under the notion that either the ticker comes back on the market, and so do the options, and then you can trade it there, or you're just looking to exercise. It's over on the, where's the window? I'm on the first floor. Oh, we've already made it to ground level. Wait, we're actually in the garage. There's no window to jump out of. Alright, might grab along here. Okay, I did grab along. It might be early. Could be. SPY's getting just drilled into the floor. A little engulfing there on the 1 minute. This starts to just accumulate, or yeah, I guess consolidate down here. I'm gonna close back out. Might be seeing another low. Not much bid support. No amount of foil is gonna save it. Let's see if this is bear flagging or a reversal. There's some pressure. BBBY also looks like it's actually flattening out here. It's much better than the drilling it's been doing all morning. Some buying pressure on the SPY. Not crazy though. Just popped up to that little resistance there, 410.22. The first time the MACD's been bullish on the 1 minute. since open? Since we started flushing after that jobs data. Crazy. So jobs data came out this morning. It was pretty bearish. Market took it bearish. Meta puts? I don't know. I'm not looking at Meta, but looking at the SPY. Hopefully we got a lot of time or close to the money, because this probably isn't a good time to buy him. I think it just is dumping out of the gates also. So, I mean, SPY was at the high, at the very highest end of the range, the whole market. So I think we're still going to just be in a choppy range, given with big candles and volatility, until tomorrow at 2. But yeah, yesterday, I mean, this whole rip has been insane. We're just back to where we were. Oh, don't look at it intraday, look at a bigger picture. We're just back to where we were. Just came down with a vengeance, using the excuse of the jobs data as a catalyst. But yesterday's candle was inverted hammer, which is bearish, and it's at a resistance. So it had a lot of stuff pointing to down today. The aggressiveness of it, I think, was just from the jobs data, though. It came out at 10. You can see we were starting to sell off before the data came out. Just into here, and then it came out at 10. That's when we just started flushing, so. I think it was bad news. I think bad news is bad news now. We're looking at recessionary type news is bad. Not good anymore. That was my take on the job data. Yeah, I don't know. Maybe just consolidating now. Not a strong bounce. Yeah, trader, you were the one saying that. Lowest price. Pack W, really? The bank? Going both ways? I'm gonna wait on my long here. I think we could be just accumulating before a rally. Banana. 75, yeah, 70, or not 75 cents. 7.5 cents. I don't know if I like the SPY. Be patient. Today, using the 1 minute to enter and exits has been helping me a little bit. Here we go. So here's inverted hammer, but this could be a sign of a bottom. Little double bottom here, maybe. Upside to VWAP's pretty large at this point now. Lucky millionaire. Someone's buying the bonds, it looks like. Just risky, yeah. Could be a good play. It just continues to get more risky. SoFi continued to flush. Low there on SPY. Low of the day. I'm gonna hold these longs. No, one and a half. Possible we don't come back up here today, but RSI divergence on the 1 minute. Yeah, if you look at the cycles on BBY, I think it's for like June. If you're counting the weeks. Upstart broke through that support also. Oh, eye flushing again. I'm gonna keep my long here. Yeah. I mean, we can see like 3% days on SPY, even 5% days on SPY. I just don't think that jobs data is gonna merit that big of a move. And not before Powell. Meggle down again. Look at that bounce, literally right on my 409.30, like on the line. That's crazy. Twerks is running. ThoughtWorks. How illiquid is this thing? Oh, 91 million. SPY, that looking like it wants to bounce now. Glad I didn't flip. Or just close even. There it is. RSI divergence kind of played out there. MACD's holding its strength. It's liking it. ThoughtWorks, yeah. Meggle, all these Chinese stocks, I mean, you gotta be quick in and out. These runs don't, this isn't something to buy and hold. Unless you're buying it after it's been just plummeting for like months, you know. Like here, like just averaging down and just hoping that it runs at some point. Or you wait for the momentum. But just buying it after it's already had crazy moves, without the momentum again is sketchy. Like here, it had a crazy move up, a gap up. You could have bought here on the momentum, breaking moving averages, etc. But then you had to close. You have to close and take profits somewhere. But then just dip buying these, I'm not about that. Not at all. You're gonna dip buy something that's on a trend up, that's safe, that's new lows of the day, of the year, all-time lows on Bed Bath & Beyond. 27%, 7.5 cents. Shares outstanding. Let's see, that it should be free float's 465 million. We're not sure the exact numbers, I don't think. Shares outstanding 466 million. Somewhere around there, I'd say. Looking weak though. Not much of a bounce here. That's 6.5 RSI. Oh my. I think we might get another new low. $407. Let's get nuts. Get nuts. Yeah, it seems like it wants to flush again. I don't think I'm gonna hold through. Yeah, I'm closing out. Dang it. Okay. Too early on the bounce. Don't think I'll take another short though. Not here, no. No info from a broker about suspension or delisting. Oh, still don't have any ideas. So it's getting suspended tomorrow. So your brokerage won't likely give you information on that. Excuse me. But after it's suspended, then it can get delisted. So suspended first and then delisting. But with that info, it's possible it's it's suspended for however long it takes before it has to get delisted. They have to file the form 25 or whatever, and then I think they have 10 days until it's delisted. So I'm not sure, but potentially it could be suspended for a while before it's actually delisted. Oh, now we get the bounce. Waiting for me to close. Real? I got back in the long. Right where I closed for a loss. I've got a little engulfing candle in the 1 minute. Don't like trading the 1 minute, it just makes me trade too often, but for entries next, it's kind of nice. BBBY is still kind of making this rounding bottom. BBBY has made it all the way down to 8 cents. This is crazy, this weakness. No, I mean, so what I've seen is that it's 10 days after they file the form before they get delisted. But during that time, it could be suspended. So you're not going to be able to buy, you're not going to be able to sell, you're going to hold an asset that's untradable. There's not a tradable market. Let's see, it's coming up on 11 o'clock. We've got EU close in 30 minutes. Thank you guys for your thumbs up. It's a tough day for BY long, even for a thumbs up, I get it. But we've got 27 of them. Appreciate that. Took a quick nap. It's a good day to take a nap. GME have a bounce? Yeah, a little bounce on GME. Nvidia's down 2.5. Need a big move down now. This thing. It's not crazy. I just need it down here. What happened? Did you take a nap before we sold off? Yeah, everyone said they wanted to sell today before OTC, so that's what you get. Those sells go to the lit market and adds pressure to their shorting. I think what's even crazier is this SPY chart. I mean, this is zero relief. We're an hour and a half in. And this is the only green candle we've had on the 5 minute. It was barely green. And the RSI's at 6. 5.94. I don't know if I've seen that since actually COVID. RSI being that low, a 5 minute. Yeah, it's not done. It's gonna keep selling. Wow. 407.76. Might flip back short. All this choppiness that screws me though. You just see like some volume and some velocity to the upside, firm some sort of bottom or bounce. ADEX, bounce off VWAP, all up to VWAP. New low of the day, they're on SPY. Wow. there's some buying pressure. 408.80. Yep, meta. Oh, more sells. Oh my, 1.6%. They did that bad? That's insane. There was a 50% decline in software development job postings compared to a year ago. $408.27, below the day on SPY. Fed swaps now pricing in bigger decline in rates from expected peak. Thirty-four percent of Americans 45 and older have said they will have less than $250,000 in retirement savings. And we'll fix this market.
Billion or 97
Let's get some
cents
Jennies in the chat.
Or about 123 on an adjusted basis. Revenue dropped almost 29% to 18.3 billion, but also did beat street forecasts. Now their biopharmaceutical business fell 29% to just shy of 18 billion, while revenue for their primary care was also down 39% year over year. The bright spots were actually specialty care was up 3% and oncology was only down 4% on a year-over-year basis. The CFO did say their first quarter results give them confidence of achieving expected growth now for the full year, with most of the growth occurring in the second half of the year due to the timing of some of their new product launches. They reiterated their 2023 guidance ranging from EPS between 325 and 345 per share.
Fly's getting a wick down here on the 5-minute.
To 71 billion. So all in all, a beat on top and bottom
She's so
line.
Smart. She hates the Mondays.
Now for the full year, you'd think would be seen as
genius.
A positive.
She doesn't like to go home in traffic, so she leaves early.
Weighed on this reaction here, Nicole.
And Mondays are lame.
Understood. All right, so we'll continue to follow that.
BBBY looks like it might climb back up to the WAP.
NXPI Semi.
And this name is actually
if this was another day, I'd be dip buying this.
A little bit more exuberant off the close when we initially got these results.
Given the uncertainty on tomorrow
rose as much as
and it being suspended, I'm not buying back in at this point.
A nice quarterly update. When they report first quarter adjusted earnings of $3.19 per share, revenue did decline to $3.12 billion from $3.14 billion a year ago. As auto chip sales rose 17%.
Are the banks having pressure on
$1.8 billion.
right
the
now
chip makers now forecasting earnings to fall between $307 and $349 a share.
Yeah, big red candle on XLF.
3.1 to 3.3 billion. Both metrics did exceed what the street had been previously expecting. And the CEO highlighted that guidance for the second quarter, as well as their strong first quarter metrics and their early views into the second half of this year, underpin a cautious optimism that NXP is successfully navigating through the cyclical downturn in their consumer-exposed businesses, while they continue to see strength in their automotive and core industrial businesses. Mind you, NXP, unlike some of its semiconductor peers, gets more than half of its sales from automakers. So I think go figure that we've seen some degree of underperformance in NXP versus the semiconductor strength we've really seen so far this year. Last week, we did see another big supplier, Texas Instrument, give very similar guidance. It seems like these companies are putting all of their eggs into the basket of that being the second half of this year. But this name is still up about 7% on the year. It's down about 4% over the last 12 months and up about 28% from its 52-week low. So the fact that we're able to at least hold on to a slight gain on the day is seen as promising.
Yeah, okay. Thank you for all of that. Jenny Horn, great to see you. Appreciate it. Thank you. Let's get some insights in the news shaping the markets. We have to welcome in Rob Fleming, Senior Market Analyst for the Schwab Center for Financial Research. We are watching what's going on here. These names in the regional banks are being halted again and again. Traders running to the post at least a half a dozen times. With Western Alliance, I call it WAL, right, is down over 20%. PacWest is down over 36% right now. This is a highly unusual day and one that spooks folks.
So this is from the banks too, then it sounds like.
Yeah, well, good morning, Nicole. Thanks for having me on. Yeah, definitely you can see there's some uneasiness in the markets, especially with the Fed tomorrow expected to continue to raise rates. And that's been at the heart of some of these problems that have flared up here is the tightening, the rapid tightening of monetary policy. So given the data that we've seen that showed some signs of slowing economic activity and the Fed continuing to raise rates in that environment, and then just given the turmoil that we've seen in the four banks,
not to raise
most
tomorrow.
Recently yesterday when JP Morgan took over First Republic. So there's definitely some uneasiness there in the markets, and then you add in the debt ceiling deadline there. It looks like it was a little bit sooner than expected, the early June there, June 1st, from Janet Yellen, Treasury Secretary. So just a lot of bearish currents here right now that seem to be driving the market action right now.
It's amazing how it all just came on like a tidal wave, right? I mean, I think there was always this question, was that the last domino of First Republic? Was that it? And most people said no, right? Most people said, I'm still worried about some of the other banks. And it's amazing how quickly this can pop up in this way. We just showed these regional banks, and they're really not being spared at all. I mean, Zions, KeyCorp, Comerica, across the board, they're all getting hit. So I'm not really sure what drove that in such a fast and furious way today, because I keep asking and people don't have the exact answers. But we are, as you said, up against the Fed tomorrow. In the meantime, let's look ahead. I mean, I think most people are expecting 25 basis points, almost like a big yawn. But it's the language, what we're going to hear, and the outlook. What do you think we might hear?
Yeah, well, tomorrow definitely the high probability that we will see a 25 basis point hike again, and we won't have the updated economic projections or the dot plots, if you will, so we won't get a good sense of where policymakers are feeling towards where the end might be or the peak might be. But the probabilities are showing that possibly in June, after tomorrow's rate hike, they will signal a pause. But that just brings more credence to the press conference after the decision tomorrow from Fed Chairman Jerome Powell, and see what kind of language he uses. Does he push it back and continue to be steadfast about inflation? And what the statement language has in their actual statement that the release will be highly scrutinized to see as the markets try to determine if, is this the last one? Or are we going to pause? And then, got to also keep in mind that, there's still that disconnect between what the Fed is saying and what the Fed is projecting and where the markets are pricing in. Well, they have, I believe, in the second half of the year, some rate cuts, being expected. So that's something that's going to have to be hashed out there, and that'll definitely, probably cause some further volatility in the markets.
Look, the Fed certainly has made it known that they are going to battle inflation, and that is their goal. And they almost, it's also been made very clear to folks, they'd rather slow the economy, cause job losses, than have inflation pop up again and then have to cut. I mean, they said it in I don't know how many ways, trying to say this is what we're doing. In the meantime, job openings fell more than expected, lowest in nearly 2 years. You had 9.59. That came down from 9.97 in February. Also, factory orders rose less than expected. This is what the Fed hopes to see, right?
Yeah, I mean, the job openings, definitely came in well below expectations for the second month there, suggesting that, the tightness may be easing a little bit in the labor market. Also look at, layoff announcements were I think the highest since, October of 2021. And then look at the quit rate as well. It ticked lower there. So yeah, suggesting that we might be seeing some easing of the tight labor market, which is going to be interesting to see how Powell reacts to that.
Look at this weak bounce.
I wonder what's the
bounce.
investment outlook. I know you'd say do things in
Crazy.
small lots and take it easy,
Why
but
just shut
really,
down?
Trying to have this long-term goal or sort
It's
of
literally been 1 day
rebalancing.
in May, and
I mean,
we're
how
already just
often do you expect someone to
started
rebalance?
off with a bang.
Yeah, I mean, at least on an annual basis for sure, just to make sure your targets are being met in line with your risk tolerance, time horizon, and your goals there. But in times of volatility like this, like we saw that first quarter where we saw some of the, technology and mega cap companies, lead the way, it might be a, good time to use that volatility to take a look at your targets and maybe trim high on some of those names that have, outperformed and got you overweight in those particular areas, and maybe add low on some areas that did underperform. And, as history has shown that, they go in cycles, and if you're getting in at good entry points, over the long haul, you're going to have, good returns.
Yeah. All right, Rob Fleming, thank you. Schwab Center for Financial Research. Thanks for being here. Plenty more to come right here on Trading 360 and our 360
Check out the Phantom
Spotlight.
shares.
We will take a look at the economic picture ahead and the big Fed announcement that we are waiting on tomorrow. We'll have a special show for that too. Our disruptor, Uber, rallying after those earnings this morning. George Sillis all over that. He'll break it down and show us an example trade as well. And in our 360 round, we'll discuss today's.
You better. A big daily candle. I was not going to OTC. Maybe. That would be assuming the stock isn't manipulated and retail is in effect. Kitty Daddy's hyped on that. This is weak sauce. Selling man, go away is playing out quickly. Could see a big rebound tomorrow with Powell though. Tons of volatility. ENS is down 8% today. Not bad for his huge rip yesterday. This is crazy how the SPY is not bouncing at all. It's just shut down here. Slow market of slow buyers to come in with the summer already starting to show up, it looks like. Brad is broken through that low. 1930.
The ego on you.
Get it, Daddy. Thanks for becoming a member, man. Appreciate it. That Ace. Thanks, Ace. Appreciate it, man. Who are you trying to snipe with that one?
Watch him play and be very watch this very closely.
All right. Yeah, and I think you make a great point just about the range, and that's something that I was talking about yesterday as well. Let's get to NVIDIA. It's trading at 282 and change today. Joel, what are you thinking about this one?
This is one that, quite frankly, I was a bit shocked to see some of the higher momentum that we saw yesterday. The bulls really pushed it. I want to say yesterday, very close to about that 290 mark. And 290 seems to be a swing high from maybe a few months back.
I think people are buying this dip.
If I look at the chart here in front of me, it looks like that 290 level goes back to
There are BBY buyers.
Looks maybe a year from now. So that's one of the last April, if you would.
And
since then, we kind of got there yesterday. I thought that if the bullish momentum could continue, I thought there was
yeah, Juice Spot shared this morning.
A test about the 300.
A little early, maybe.
But in the short term, I think that those bulls are a bit exhausted. And because of that, I'm bearish and definitely looking for some short-term pullback here. And as walking through the chart, it looks like that's my favorite right now.
And when you see a stock of 93% year to date, I understand what you're saying, pushing that upper end of that range, just like the market. Ben?
Joel, Nicole, good morning. Nicole, I'd have to agree with Joel in terms of this stock just hitting a key area, an area of resistance. I don't necessarily agree with the fact that it's showing any indication of a bearish signal as of yet. It's still trending higher. Let me show you why I think so. Beginning of the year, we were trading down around 140, 150.
Yeah, it's getting BY's getting suspended
tomorrow. To the upside, a bit of consolidation that we just broke out of actually as we just traded up to just shy of $291. Look, a vertical phase up here recently. I actually wrote this out as, are we starting to balance? It could start to see something a little bit more overlapping and rotational, but you can see along the way we've seen quite the staircase type pattern. Areas of consolidation forming at higher and higher levels with limited retracement on a significant basis. Again, the bulls are looking for a new area of consolidation to sort of solidify that working assumption and that mindset that values forming at higher and higher levels. Taking a look here at what's going on in terms of the bigger picture here, I've got the daily time frame, and we always talk about the well-defined trend following method that these principles, these theories, these kind of philosophies follow in terms of value.
This is one of the worst opens I've seen.
Horizontal and the two phases of development. Here you can see that, well, not only does it tell us when we're trending higher, the move we just looked at off the January lows, but it also indicates when we're no longer trending lower, which we had been on the bigger picture from 347 all the way down to the lows last fall.
No buying pressure
down around 100. And the move up that we've seen this year, I went ahead and mapped out some of the areas of consolidation just to help us see again that we've retraced and we're taking out key areas. Once we got above 240, the bears definitely should have reconsidered the thought process that we're forming value at lower and lower levels. Taking a look at NVIDIA, above the 50, above the 200, there you can see 93% year to date. So Joel's right in terms of retesting those March highs that we saw last year, 290, 291, but I don't think necessarily that this stock's showing any indication that it's losing momentum to the upside as of yet.
Some on NVIDIA.
Right, thank you for that. So not losing the momentum, but you're waiting for the pullback there, Joel.
Absolutely. I would agree with Ben. I think it's tough to kind of stand in front of that bullish momentum. That's it's like a freight train. We've seen it. We see that chart. That chart is just stair-stepping itself higher, making those higher highs off of those lows. So because of that, I am bearish, but I'm going to be a bit strategic. I'm going to be selling the 305 call that expires next Friday, simultaneously buying the 307.50 call that expires next Friday, picking up a credit of about 43 cents. Break even is 305.43. So taking words from Ben and kind of structuring my trade around that, if we do get to 300, we do get to that 290 mark, those are levels that I think we will have maybe a bit of a stop, maybe consolidation. We chop around that range between now and next week and just don't exceed that 305.43 area, then this trade can work out in my favor.
Understood.
407.46. Let's see what happens below there.
For you. Let's get to Snap, right? We've seen obviously this group goes
That's a big level too.
407. And TikTok and no TikTok and users. And I mean, what are your thoughts on what's going on with Snap at this point? The parent of Snapchat, $8.33.
So, Nicole, it's like you're reading my mind. That's exactly the point of this trade. It's amazing because, quite frankly, I think this Snap's opportunity to really kind of explode to the upside has, in some cases, passed us by. I mean, they've tried to do everything to gain the momentum to rush people into the buy side of this stock, in my opinion. Everything from, TikTok is going to get banned. There's some AI stuff going on. And all of these narrative has not really catapulted this stock the way that I think that it should, and the way that I think a lot of traders are anticipating. So because of that, I am bearish. I just don't think that there's a lot of momentum in the name. They haven't done anything right now to really rush investors or even the price action there to the upside. So I'm a bear here.
Yeah, and let me tell you, it had that one day in end of April, dropped like 20%. I mean, it moves in some big increments and gets hit hard. This is after its earnings and had another gap down. Ben?
Well, Joel, I am loving this chart here and really looking forward to the next name as well, because both these stocks that we're talking about and about to talk about are really good examples of the two phases of development. In this instance, I went into a more granular period, the 1 hour time frame that you can see. Look at this. Horizontal consolidation. You get overlapping rotational price activity, not a lot of conviction, not a lot of trend, basically randomness, right? Upper, well-defined, lower extremes that are established, but just kind of sideways and waiting for more information. And then you get that information. That's earnings. It creates the imbalance, and you can see the high conviction trade. Look at this. A big candle to the downside. The market falls into an elevator shaft, and then again, acceptance, sideways consolidation. So this is exactly what I look for, whether it's on the 5-minute time frame, the hourly. Again, in this instance, you can see, whoops, hold on one second. I actually have this marked as the 15, but again, migration of value, 1075, 875. Let's move away from this intraday chart because I want you to see how, well, taking a look at shares of SNAP, and this is
actually I have an order for FCEL.
I think it gives you a really good picture of the story that we've seen in terms of this move. From 840, we rallied up sideways around 11, and then look at that move we just identified in terms of that high conviction trade to the downside, that elevator shaft that we fell in. I want to point out here that as you look at Snap, you can see a very well-defined trend to the downside on the bigger picture. This is a daily time frame. We're going all the way back to the summer of 2021, where shares fell off a cliff from 83. They gapped down, and look at what's been going on since, you guys. You can see disappointment for the bulls, to say the least. 75, 56, 33, 14, currently forming this area of consolidation right around the $11 level in a very well-defined trend environment to the downside. Snap, high conviction to the downside intraday, high conviction to the downside on the longer term as well.
Yeah, understood. And when you talk about all of this and the pressure that it's seeing, at the same time, I mean, I think the teenagers are still using Snap the most. I mean, I don't know. Are you hearing anything else, Ben? What are they using the most?
That's actually, I'm probably the furthest away from that to ask, but
when my kids come home, I'll save you, and I'll ask my kids when they get home from college. I'll see which one is the hot one, because the truth of the matter is, Joel, and I'm sure sometimes you just use color. If you go into a store, I mean, during the pandemic, for example, there were only a couple of stores that had a line outside the door, right? It was Lululemon, Nike, Chanel, and you can see the trends that are just sort of undeniable. I mean, the kids have always liked McDonald's and Chipotle, and those have done incredibly well over the last decade. They were always hot on Nike. There was a time where Adidas got, remember, with all the Yeezys, and then it went back to Nike. And, you know,
you don't have to spend the 1,000.
They have free money, these teenagers.
Ash is
so
a great
it's good to watch them, to see that. I mean, they moved Roblox, you know, higher when we saw them doing that. All right, let's get to a good old name that the teenagers have no interest in, and that would be General Electric. Joel?
Absolutely. General Electric, I think this is a chart that has just weathered every storm, every narrative.
Mullen's actually up today.
I mean, this one here, since the start of the year.
Whoa, what the heck?
Right around that $65 level, and has really traded all the way up to slightly over 100. This is one that I look at it sometimes and I'm like, wow, I'm wondering when we're going to see some kind of a pullback, a significant pullback, if you will. And I haven't seen it yet. Bulls have liked this chart. But because of that, I'm not going to fight the trend. I'm going to get bullish, but I'm not going to chase the highs. I definitely want to kind of see how long this train can last to the upside. So we'll see what happens here, but definitely a bull here.
Okay. General
Got filled at 10 cents up there.
You know, Nicole, I mentioned here in terms of these names, last stock and this one, definitely two names to keep an eye on. Very well-defined trend in terms of what we're seeing, Snap and GE. In this instance, we're talking about high conviction to the upside, trend environment, migration of value. But look at the very well-defined, again, two areas or two phases of development. I mentioned that horizontal, overlapping, rotational. Here you can see the separation, the vertical move up into the end of the week. We get higher highs and higher lows, and then we get a stopping price, so we get a little bit more rotational around 99. Similar pattern playing out to begin this
big
week.
Orders. I don't think anyone got filled up there, though.
Into, again, this area of consolidation we're forming right around this $101 level right now. Let's step away from this more granular 5-minute time frame because I want to show you what's going on in terms of, hold on a second here, Nicole. Oh, it's going to take me a second. Let me get this chart back to the shares
up to 10 cents.
GE.
It's rallying.
Sorry. Here we go with a little bit more of a longer-term time frame. I'm sorry, in terms of shares of GE, but basically what we're seeing here is high conviction to the upside.
There's not much else in the world you can buy.
Chart, and then as we look at the daily time frame, you can see that kind of feeds in with what's been playing out over, again, the longer term. High conviction trade up, 56, 66, 80, 91, currently starting to bounce around this $97 level. So the trend we're seeing on the intraday feeds right into the trend we've seen on the longer term here. But again, while the charts were a little bit out of order there, two perfect examples, textbook examples of the two phases of development that I look for. And I think your viewers should watch to try and help determine trend and figure out the direction that it's following.
Yeah. All right. Thank you for that. Final thoughts here, Joel, on GE or just any of the
2 hours ago it had news?
Absolutely. I completely agree with Ben as far as identifying that trend.
1,000 vehicle order.
Especially as a trader who trades options, you know, location, price action, direction.
SPY, it looks like it wants to come down more. That's crazy.
Just kind of piggybacking off of that, he mentioned that 97. I'm going to actually sell the 98 put that expires next week and buy the 97 put as a hedge, picking up a credit of 14 cents. My break even on the trade is 97.86. So definitely just kind of piggybacking that narrative with Ben, using that 97-ish area as my break-even point, because again, I do want to be bullish, but I definitely don't want to chase it up at these $100 levels, especially on a day like today where we're seeing a market that is definitely weak. We're going into some major catalyst news. We're still in the teeth of earnings season. There's anything that can happen. I don't want to just buy calls or just buy stock at these higher levels. So just using this trade to as a bit of a hedge and a bit of a protection.
All right, Joel Hawthorne, the Morning Snapshot, and morningsnapshot.com, and Ben Lichtenstein. Thank you both very, very much for being three today. Appreciate it. Coming up next,
I forgot to cancel an order. I opened the order and it said good till canceled yesterday, and I forgot I had it till filled. I meant to not cancel it, but I guess I had it good till cancel because it's open today. Cash secured put on SoFi. So yeah, it's getting to a nice level, but I waited. Well, look at the SPY right now on the 5-minute candles. We have one that's barely green since we opened. You guys that watch the SPY, you know how crazy this looks. %, 16 cents. Yep. Exactly. That's why OTC you get, yeah, huge, whatever, 1,000, 1,500% moves. But where is it starting from? Just moving a decimal place over. A 1,000% move from here and you're not even at $1. $4.86 on the RSI on SPY, 5 minute. The first hour, it basically erased 3 days of gains, of big gains. These were big daily candles too. I guess 2 gap down from yesterday. Yeah, cash accrued puts on SoFi. It seems pretty good. I'm just getting out of that support, so I was a little early. Good wait though. New low of the day on SPY, 408.09. I mean, you even heard Nicole. She was saying how people were running back to their desks.
Alliance, PacWest,
which is
Comerica,
very unusual.
Zions, just to name a few. The entire market obviously also focusing on the Fed tomorrow, slowing economy. The S&P now below 4,100, down 74 points at 4,094. The Dow is down 575 points, and that's at 33,475. The NASDAQ is down 1.2% at 13,058, and the Russell is down almost 3% at 17,17.
Flushing again.
For developing stories, I'd like to bring in Kevin Green, senior markets correspondent here on the TD Ameritrade Network. You're looking at casinos. Penn Entertainment gets an upgrade this morning. I saw a buy rating. I did see not that long ago Las Vegas Sands was doing well and brought some optimism to the group on its footprint and revenue growth abroad in Asia.
On the RSI.
What's going on here?
Yes, we are seeing Roth MKM upgrade Penn Entertainment to a buy from neutral with a new price target of $40. That's up from $35 here. They do believe that the company is going to be able to beat expectations as well as raise their guidance here when they report Q1 earnings, which is going to be on May 4th. They also see some strategic alternatives when it comes to Penn's digital segment, and that the opportunities that are involved when it comes to Barstool is really not being priced into the stock. The stock's trading at about a 3-year low at this point in time, and so they believe that there is a good risk reward to the upside as the market starts to price in the value that's going to be gained by Barstool, as well as some of the other alternatives that the company is going to be able to implement here in the near term. So that's what we are seeing for the stock, and you are right. We're not only seeing a move to the upside when it comes to the casino stocks like Caesars or Las Vegas Sands, but also a move to the upside for the digital gaming space as well, which is Penn Entertainment's really foray in this marketplace here. So that's where the optimism is coming from. Even though we are seeing a down day today, we are seeing some of the gaming stocks still being able to weather the storm, if you will, Nicole.
Yeah, understood. Kevin Green, great to see you. Thank you for that. Senior markets correspondent here on the TD Ameritrade Network. Appreciate it. Let's get back to the economy, the economic outlook, right? It's Fed Day tomorrow. We're getting in a lot of prints, and I wanted to welcome in Anne Milletti, Chief Diversity Officer and Head of Active Equity at Allspring Global Investments. Thank you for being here.
Thanks for having me.
So we've been getting in bits and pieces of data. I'll get to the Fed in a moment. Are any of the pieces of data standing out to you? I mean, I certainly see the theme, slower growth, fewer jobs, right?
Yeah, I think, depending on which side of the fence you're on, you can find some data to, pick your argument. But there are pieces that are very concerning to me, and in particular, the PMI data that came out this week, that was concerning. I think we are seeing a manufacturing slowdown. Some of the things that our investment teams are looking for, even within reporting from management teams, are looking at CapEx spend and what that tells us about future state. But the global economy is pretty telling itself, and we're seeing some challenges there. And so I think there's more weakness to come. Clearly, we're not seeing it in the jobs data yet, and that's the biggest. For the bulls, that's their biggest ace card.
I think you hit the nail on the head, and this is what the Fed could really use as their, rebuttal to folks. Is if you look within any print, there's something in there that's still very inflationary. And even those that come down are still at high rates on the average. And what they don't want to do is stop raising rates and then have it, come out again, inflation, and then have to cut. They said they do not want to do that.
Might make a 5-minute green candle here.
Of course, the Fed will be before that. Tell me what you think the Fed may say, because I think that Q&A tomorrow is key, right?
I think you hit the nail on the head there. The Q&A is going to be the most important. I don't think the market has it so wrong that they're going to go ahead and raise 25.
Right.
But what they say is probably the most critical. The market is anticipating that it's 25 and hold. What if it's not? What if they say, no, we're going to pay attention to data, and if the data suggests we have to go further, I think that's going to be negative for the markets. I also think if they send a more dovish tone that they think inflation's still problematic and the market believes that they're not going to lower anytime soon, which we're in that camp. We don't believe that they're going to flip and suddenly start lowering rates toward the end of the year, even if the economy weakens. That's going to be problematic.
It would almost be in their favor to continue a somewhat hawkish tone, because if they have a dovish tone and the market takes off and and the economy that is not what they are going for. So it's almost better to have the threat of the raise, and even if we don't get it, just mentally, I think in general, right? Because we see the markets trickling higher. I mean, we beat on earnings. We'd had lowered earnings expectations. We got right up, getting close to that 4,200. We haven't been there. I mean, we've been 38 to 4,100 on the S&P, right?
Yep,
so now at the top, look, the banks are failing. The concern about the high end of the range.
You're right, and you don't see smoke and smell smoke. No, there's a fire coming with no fire. I actually do think there's real problems coming, but we know the Fed is focused on inflation. They, I think, believe that they've lost a little credibility before. They don't want to lose more. And so I think they're going to continue to take a hawkish stance while telling the market they understand that there's some weaknesses and they'll pay attention to those. Yeah. So they're going to try to balance it.
What kind of worries do you have? You said coming. What's coming?
Well, clearly, I guess the best unkept secret is the fear about commercial real estate. And we just spoke about this a little bit off camera, but I don't think that that's an unfounded fear. Commercial real estate is, particularly office space, there are some problems there, especially for that C class, the properties that nobody really wants to be in. Right. There are, I don't think it's going to be our biggest problem though. Over my entire career, what's been the biggest threat to the market is the unknown. And I do feel like there's some uncertainty creeping up out there. And the next shoe to drop is likely to be something that none of us are really worried about right now. And when
sort of like another black swan event.
Yes.
I see. And people have talked about that. Not to interrupt you, I'm sorry for that. No. But I will say, just moments ago, a headline crossed about Fed funds futures, and now with what's happening with the regional banks today, the likelihood of a rate cut at the end of the year has now gone up.
Yeah. I actually don't buy into that either. Again, I do feel like the Fed is worried about their credibility. I do think they're focused more on inflation. They said, we don't mind a weaker economy.
A little bounce here. Got an engulfing candle on the 5 minute.
and where I could be wrong.
Pretty weak,
on
but it
that
looks like
is,
maybe
like we're headed into an election year.
And that's another thing. I think that's a great point.
Yeah. And look, if the economy really does show huge signs of weakness, if we do see another breaking point, a real big breakdown in the system, then all bets are off. And you know, but that's not going to be a good scenario for the markets anyway.
All right, let's talk about the opportunities.
Yes.
You have a few areas of opportunities. I want to make sure our viewers get to get some of your experience and thoughts here on that.
Yeah, well, the one thing that I do want investors to realize is I might be a little bit bearish about where we are today, but it's not time to really think about making changes to allocation. You know, you don't want to operate in the field of emotion. Nobody has the crystal ball. You don't know the direction we're going. But you might want to make some tactical changes. And some areas that do look a little bit more attractive, the emerging markets, an area where people have been underweight for a long time, you know, there's opportunity there. Many emerging markets had rate increases well ahead of us, some in the double-digit area of Brazil, for example, mid-teens, now starting to lower interest rates. And the dollar, which we know is reverse correlated to emerging markets, has been flat and now is starting to weaken. That's actually really positive for emerging markets. So emerging markets could be a hidden area of strength in the back half of the year.
Would you include China in there, or is it ex-China?
I think, you know, China could be okay, although I think the recovery we've seen in China has been China focused and China internal and not outside of China. So I think the broader recovery of China is a question. So I like ex-China better than I do including China here.
I'm glad I asked that then. Yeah. It's great to see you. Anne Maletti, Allspring Global Investments. Thank you for being here.
Thursday, Friday. I mean, tomorrow's going to be the day with Powell, so we'll see what happens by then. Probably trade in a range. Tomorrow's Wednesday. Yeah, I think the direction will be decided tomorrow. Or at least this week. If we break out to the upside or the downside. But we should know by this week, I'd say. I'm not counting one way or another. Gene. What we did see was basically this blow off the top yesterday, though, with that inverted hammer and false breakout. Which broker to DRS now? She said ace. Ace up her sleeve, that's right. Good. Well done, Ace. You're making it on the Nicole Petaliti show, too. Do it. ACW's halting up now. Yeah. I mean, the market's getting a bounce here. The banks definitely had some bit of a pull, not just the jobs data. 75 basis points. I think our market direction would be pretty well decided if we got that. Deadline for suspension today. I think it's tomorrow. So yeah, you should have until 8 p.m. after hours today. It should still be trading. I think it's 8. Is it 7 or 8? I think it's 8 that it closes. They won't let you hold it. So what do? Just liquidate you? I promise. By slowly climbing up here. Got a long ways to VWAP. I could have been much more patient on my long. It's not funny anymore. You know, it's funny that you say that. That's funny. Say that. BAOS. Halted up. Look at that. Halt up. Is that real? Halt up to VWAP. Geez, oil's down 4%. I need to be trading these futures. That's a nice move. I'll close my GME put. Only up a tiny bit on it, but 17 days. Just GME moves so slow. So slowly now. Can still hold on 212. Can't buy. Yeah, that's how some American brokers are too, I think. That's why I say it's like turning off the buy button. And it's just individual investors just don't trade OTCs nearly as much, so it's the back alleys of the stock market. Look at that. 409.30, SPY rejecting it. Says no to your bounce. Mullen, did it keep making that move? It wants that 10 cents. Felt it.
And at 44% year to date. I mean, I think people started to really feel disheartened when it was down to $20 really last summer. So thank you so much, George Sillis. Good to see you. Thanks.
Sure, Nicole, you bet.
Coming up next, our 360 round is.
Makes more sense with when seeing news come out and talk for suspended, avoid any pump. I mean, if it's bullish news and it's suspended, I think it can just open back up way higher. So that would be the pump, and then it would probably keep pumping from there. OPEC is pumping less, we're using way less diesels here. Yeah, demand destruction on oil hasn't really hit at all. It's just been propped up with yeah, all the lack of supply. But yeah, like you said, we're not using nearly as much. Sue did her interview 3 weeks ago. Last whimper. Big red candle on SPY there. Jeez. That really... Dang, I should have closed. I was actually green a bit on there. Oh my. Wow, big red candle. 4930, fully rejected.
Expected that were available, right? So you had that at 9.59 million March. And what's interesting is the layoffs really jumped. I saw layoffs in construction, healthcare, leisure and hospitality. Finance has been cooling. We know that, and tech has been under pressure. Is this what we were expecting? I mean, is this what is on your mind?
Nicole, happy to be back. Obviously, this is something that the market and all analysts have been expecting. So we're seeing some more softening in terms of labor demand, even though some can make the case that it's not quick enough for inflation to go to the target rate of 2%. But I think this is eventually is going to be a very good news for the Federal Reserve tomorrow when they decide whether they want to hike 25 basis points or not. Our base case is still the point, but today's data will help the Fed to make the case that whether they want to pause after tomorrow meeting.
Right, and the layoffs, they said, are approaching pre-pandemic levels. So, and what's interesting is it's some of those jobs that started to drive things. And now you're seeing sort of an about face. On Friday, what are you expecting here? The unemployment rate likely to rise, right?
We're expecting about 3.6% in terms of unemployment rate and about 150 to 200,000 job gains in terms of the payroll report. Now, when you look at the jobs report today, what really gives me pause when I look at the data is that not only you look at the top line, there's a slowdown in terms of job openings, but if you dive deep into the number of job quits by firm sizes, you can clearly see that big companies with more than 5,000 they have been on a layoff streak, you might say. So they've been freeze hirings, they've been announced layoffs, but most of the job quits are coming from mid-size and smaller size companies because they still struggle.
I haven't seen any, Tony. I mean, I've seen no examples of stocks going OTC and ripping.
Particularly important because
eventually they might.
On your show a couple of times,
but
I have been making the case
typically,
that the labor market
pretty much with all of the examples I saw, they sold off 80 to 95%
exactly 1 year ago,
within a week or two of delisting.
Saying that excess labor demand was actually not sustainable and was actually unhealthy for the economy because some of the job openings that we are seeing at the moment first come from companies that are trying to keep their laborers, trying to be on the offensive when it comes to high quit rates. So they try to keep their workers. They try to have more job openings available, right? And second of all, I think that yes. Second of all, I think
so
that...
I'm going to leave it right there because I want to bring in... Let's just hold the thought, Tuan, because I do want to bring in David Hay to join us in this conversation, Co-Chief Investment Officer and Partner at Evergreen Capital. Thank you so much for being with us. So your thoughts on what... Obviously, we've gotten the jolts. We're seeing more layoffs. We're waiting on jobs on Friday and the Fed tomorrow. What's on your mind? I mean, what do you think might happen here and what should happen?
Well, if you're not like the Fed, I think they're going higher. So that's, I think that's pretty much fait accompli, at least at this meeting. I think what's really becoming questionable is the next meeting. And I think belief was pretty pervasive that there was not going to be another hike come June, but I think that's very much in doubt at this point. As far as the jobs number, I agree with your last guest. I think that there's a clear erosion going on in the jobs market. And I do believe that when you look at the JOLTS number, you got to take that with a grain of salt because it's likely that a lot of companies were double, maybe even triple reporting their job openings because it was hard to hire people for quite a while.
David, give me a few seconds just quickly on what's going on with the regional banks, but how it affects the Fed's decision, because we're seeing Fed funds futures rising for the end of the year for the likelihood of a rate cut.
Right. That's what the market has been saying. I think they're wrong. I think the Fed is going to stay tight here for a while longer, despite what's going on with the regional banks, and they are acting very poorly today. The belief was that after the First Republic JP Morgan deal happened, that the worst was over. That's what Jamie Dimon was saying, but that's not what the tape is saying today. So the Fed's in a tough position, sure, because a banking crisis and particularly the tightening of the credit standards, which is really dramatic, is a major problem. It's especially a major problem for the small business community, which of course is a big provider of jobs.
And we know the Fed has noted the credit crunch and how that could step in and help them to not have to do as many rate hikes. Tuan Nguyen, David Hay, thank you very much. Good to see you both. That's going to do it. Trading 360. I'm Nicole Petalides. I'll see you at 2 p.m. Eastern Time. Fast Market is next.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our active trader is designed to help you develop a deeper understanding of technical analysis.
I'm Nicole Petalides, coming to you live from the New York Stock Exchange every single market day, from the opening to closing bells. Tune in to the TD Ameritrade Network.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave them Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Good afternoon, traders, and welcome to Fast Market. I'm Tom White. We've got a great lineup for you today, including discussions and strategies in AMD and Yum Brands ahead of their earnings. And Lifefolio will break down consumer sentiment data on Starbucks, which has rallied about 14% this year into their quarterly results after the close. Now, 2.5 hours into the trading day, stocks are selling off, led lower by declines in bank shares as traders braced for the latest Federal Reserve policy announcement. Weighing on sentiment Tuesday was word from Treasury that the country may hit the debt ceiling sooner than expected. Treasury Secretary Yellen warned that the U.S. may run out of measures to pay its debts as early as June 1st, much earlier than expected. Now let's take a look at the four major indices, which are just off the session lows as we speak. Benchmark S&P 500 down 1.7%. The Dow Jones Industrial Average off more than 500 points. The NASDAQ 100, tech-heavy NASDAQ 100, down 1.3%. And the Russell 2000, the small caps, down 2.7%, led by steep declines in a lot of the regional banks. But to help me break down this market action, let's bring in my co-host, and that's Kevin Hinks. Kevin, seeing a big sell-off here. It's led down by financials and energy. We got crude oil down nearly 5%. What's your take here on the market action ahead of the Fed announcement tomorrow?
Yeah, the weakness in the Russell, Tom, is really starting to bleed into the other markets, and regional banks are under pressure again. It looks like what we thought was over with 3 regional banks going out of business is not completely over, or at least that's what the price action tells us in the regional banks, and that's what the Russell 2000 tells us. And some of these names, you'll read about them tonight when they come out. Some of these banks are, you had some banks stop trading. You've had some imbalances show up, Tom. This is getting pretty interesting. And I'll tell you, Tom, for a first week in May, there's a lot going on in this market right now. A lot of news, earnings, obviously economic data coming out the start of a Fed meeting, but there is going on out there, Tom. So for sure, there's something for everybody.
Yeah, IBM said they're going to pause hiring, maybe start using AI for some of those positions. Morgan Stanley announced another round of 3,000 job layoffs. But, Kevin, I was pretty surprised that the VIX got below, 1.5-year lows as early as yesterday. This ahead of all this data and the Fed meeting on top of it, along with jobs data. So we'll have to continue to watch that. But one of the stocks that's pushing it against the downturn in the overall equity market, Kev, is Uber post-earnings. Let's bring in Caroline Wood, senior markets correspondent here on the network, to break down this story for us. I was going through some of the numbers, Caroline. This is just astonishes me. We talked about it yesterday on the show. 24 million trips on average per day, 2.1 billion trips during the quarter. That's amazing. How is this company not profitable yet?
Tom, how does this relate to your Twitter poll? How does it reflect in your Twitter poll? Because I voted that I'm taking less Ubers, but I'm curious because it seems like people are taking more Ubers. So you're going to have to let me know about that. But yes, CEO Dara Khosrowshahi said Uber's off to a strong start this year, and these metrics really demonstrate that. Uber posted a narrower than expected first quarter loss of 8 cents per share. Expectations were for a loss of 10 cents per share.
BBY's coming down here.
Revenue rose 29% to $8.82 billion. That also topped expectations. Strength in rides and delivery offset weakness in freight. Freight revenues fell 23%, but gross bookings for the quarter, so that's the value of transactions made on the app, that came in at $31.4 billion, up 19% year over year. Mobility gross bookings were up 40% year over year. Delivery gross bookings up 8% year over year. And yes, as you said, trips during the quarter grew 24% to $2.1 billion. That's approximately 24 million trips per day on average. Now for Q2, Uber said it expects to report gross bookings between $33 and $34 billion. An adjusted EBITDA of $800 to $850 million. So investors clearly happy with these results. Uber up almost 10% right now, up about 45% so far in 2023, and only less than 5% away from its 52-week highs. Should also note that its biggest rival, obviously, smaller competitor Lyft, also higher today. Shares only up modestly, though, about 0.2%. Lyft reports on Thursday, so we'll be able to compare in a couple days. But I almost would think that this would make Lyft shares under pressure, but we know that Lyft has been cutting, 30% of its workforce to try to cut 50% of its costs to better price.
This rallies on Spire.
So we'll have to see if Lyft gives it a run for its money at all.
Might not even see a VWAP move today.
These were pretty strong results from Uber, and shares are being rewarded because
put a stop limit on the next little rip here.
Caroline, for a company that's still not yet profitable, these are big numbers. And if you are a fan of Uber and the stock and ride sharing in general, here's the quote that I feel is the game changer from their CEO. It says this: ride share providers no longer chase market share at the expense of profitability. Those days are over. So if these firms start shifting to concentrating on being profitable, like has been the trend in the market these days, this could be a game changer for a company like this that really hasn't worried too much about profitability.
Yeah, we're at 7 cents now, Tony.
It seems like their focus, like a lot of CEOs, is
0.783.
changing, Caroline. And if you like Uber, are a stockholder of Uber, or a fan, that's a game changer, Caroline.
Yes, the days of chasing market share at the expense of profitability certainly over. They made that very clear on the call. That being said, Uber has long pointed to adjusted EBITDA as kind of a signal of its path to profitability. And when you take a look, Q1 adjusted EBITDA came in at $761 million. That beat Wall Street's estimates. That they're projecting adjusted EBITDA of $800 to $850 million for Q2. That also came in ahead of consensus.
What are you talking
targets.
about? Suspension illusion tactics, Tony.
$549 million. Far higher
you got a
than
filing
estimates.
from the company itself.
Certainly bullish on this name.
Saying
I mean, I was taking a
they're
look.
being
90%
suspended
of analysts still rate Uber as
from
a buy,
the
despite
SEC
the fact
themselves.
that it's up 45% so far this year. There's only one sell rating on the street. The median price target of $45 still implies more than 25% upside from current levels. Keep in mind, this is a company that did IPO at $45, and when you go back to, say, April of 2021, it was trading in the 60s. So it's all about the perspective there. But yes, it's certainly no longer going to chase market share at the expense of profitability. I also think that it's key. I was taking a look at the transcript. Dara Khosrowshahi talking about Lyft and some of the changes that it's going through in this transition period. He said it's a very, very strong brand. It's not going anywhere, but said really the fact that it's going to create more competitive pricing sets up a constructive, competitive environment going forward. So also interesting to note. But obviously, Uber has done much better than Lyft has done this year. Lyft still negative for 2023, down about 3.5% right now.
Yeah, and Caroline, the results of my unscientific Twitter profile.
My GME put closed, actually.
People taking no Ubers up to 47%.
Oh, I keep coming down, but I just don't like how slow it's
taking more Ubers about 23.5% and less about 29.5%. So, you know, I think people may be lying a little bit that they're not taking any Ubers because we see some substantial gains there. And they've got one
You're
new
just friends with the cheapskates, Tom, like me.
Maybe that's it. But I think, you know, one of the game changers could be them. The new thing that they're rolling out is when you call an Uber and say it's going to be 10 minutes or 15-minute wait. Typically, we don't have that in Chicago. But now you can actually pay more to go into the front of the line, so maybe that'll be accretive to their balance sheet.
I saw that. Meanwhile, I'm the one that opens Uber and Lyft at the same time, price shops, and if both are surge pricing, I say, you know what? I'll check again in 10 minutes or I'll start walking. So I won't be paying more to prioritize my place in line.
I use both also. Caroline, Kevin is not a Lyft devotee yet at this point, so we'll get him on board soon.
I'm only Uber.
Yep, that's right. All right, thanks to Caroline Wood, senior markets correspondent here, breaking down the story here on Uber post earnings. But Kev, I kind of wanted to bring up this whole what's causing a little consternation, I think, for the equity market right now is, you know, after the FRC buyout from JP Morgan over the weekend. Yep. Everybody thought that this stuff's going to go away. We've got 3 banks that are gone now.
Too bullish check on Blanche. Is he too bullish for you now, Ace?
But if you look at stocks like PacWest, PACW, and Western Alliance, WAL, they're down over 20%.
Circa 2021 on GME for me.
Down 27%. These things are getting hammered, and it's almost like the market's telling you that wasn't the last shoe to drop as far as FRC goes, right?
Tom, what started the problems in the first place was these stocks selling off because of withdrawals, right? Yeah. So where there's smoke, there's fire in these regional banks, Tom, and there's a reason that some of these banks are selling off. Now, we don't know. We have no official data from any of these names, but this stock activity is very suspicious. You've got the Russell down 2.8%, Tom. That's not a joke. I mean, there's still something more going on there. And remember, we talked about on yesterday's show about Charlie Munger and his views on commercial real estate. So, yeah, there's still issues out there, Tom, that we have to work through. And if this is not over or there's more problems, waters could get a little bumpy here, Tom.
Yeah, and then you look at another stock, Kevin, that reported, and we talked about it on yesterday's show, is Marriott. That stock's up 3.5%. Yeah. They see no easing. They actually raised guidance moving forward. So this pressure that a lot of people are talking about where people are going to start pulling back on spending, we're seeing a slowdown in the economy. GDP numbers were below estimates, isn't coming to fruition in some of these spots in the market, right?
Yeah, I agree. Marriott's numbers were big. And remember, we talked on yesterday's show is, are they going to look forward to any softening in the U.S. economy? Their guidance says that they're not. They're keeping their pedal to the metal here, and it's all systems go in terms of travel, Tom. We've seen it from airlines now. We've seen it from hotels. We've seen it from cruise lines. It's pretty consistent across travel strength, Tom.
Yeah, and Kevin, JOLTS report today came out earlier, just under 9.6 million, just below expectations. But that's trending in the right direction. We got the Fed meeting upcoming. I mean, is this another data point that you look at where you can say, okay, some of the, the policies that the Fed is taking hold of right here by raising interest rate is starting to play out in that one area that they've been trying to pound the table on and get
you weren't around in the GME days,
to get hurt a little bit.
Happy Money.
Yeah, you're still seeing announcements of pretty high-profile layoffs, but when does it hit leisure and hospitality, Tom? When do those numbers start to soften? Remember, those are the numbers that have been, strong in the data, both in JOLTS, both in the ADP, and both in non-farm payrolls. So, again, tomorrow when we get ADP, let's watch for leisure and hospitality, see if there's any back off to the strength that we've seen in those numbers, because that's been the sector of the U.S. economy that has stayed strong throughout this, and that's restaurants, that's bars, that's
looks like it's just consolidating down here
in the service sector. So let's keep watching those numbers
see a new low
and see
today.
if we get any softening there. This economy, Tom, is really not as weak as Jerome Powell would like it to be. Let's put it that way.
Yeah, especially on that services side. That's where that sticky inflation is coming to fruition. We had the Bank of Australia raise a 1/4 basis point. That's after they paused at the last meeting.
You're
Kevin.
pausing. You're right.
Yeah, I think that's a
exactly.
key. That's a key point because everybody's, Bank of Canada paused. I believe New Zealand did too, but now Bank of Australia raised. And look at our yields today, Kevin. That 10-year yield down to about 3.43% at this point.
Yeah.
You got Treasury spiking, yields down, and then you've got the dollar down, but it's not lending any support to equities. What's the takeaway from that?
See, I think some of the economic data made yields go up yesterday, but some of the dissipation of the banking crisis, I think, made yields go back. And what happens the next day? Right back down with more banking issues, Tom. I think bonds are up, yields are under pressure because of issues in banking. When they thought that was dissipating, yields climbed back up yesterday. They're right back down to where they were before, Tom. So incredible volatility in the bond market.
Yeah, that and crude oil, Kevin, as I mentioned at the top of the show, that's putting a lot of pressure. That's the biggest sector losers within the S&P 500 as a sector, down
That's incredible.
5%. Kevin, OPEC Plus, they said they're cutting the production. You would think you'd see a little bit of bump in crude, but this is probably all based on a slowing economy, right?
Well, you're going to hear from OPEC Plus pretty soon if these numbers keep coming down like this. You're going to see a big line through the 1 million, and it's going to go higher. You know they're going to be competitive and try to keep the prices of crude oil higher. Yeah, this is counter trend to what you'd think crude oil would doing after cuts and going into driving season. This is not, what you think you'd see from crude oil, Tom. So real counter trend there for sure.
Yeah, definitely. Okay, Kev, let's take a quick break here. When you and I come back, we're going to talk AMD.
Cruising online, trying to see if there's any new news on what's going on with BBBY. But yeah, the banks are all taking a huge hit today, and actually a write-up on Superstonk talking about, share it on BBBY, talking about the 100% collateral haircuts today. So possible we're seeing it from that, which would be crazy. Due to compliance concerns, DTC to apply 100% collateral haircuts all securities issued by affiliates of LOC lenders effective today. Not sure if that's part of the reason for the bank sell-off, but it's a big list of banks here. So if you're over leveraged, 100% collateral, thanks. I'll urge to halt interest rate hikes by Warren Sanders. The share of wealth held by the top 1% of earners has continued to climb, up from 29.7% when COVID hit to 31.9% as of mid-2022, according to the most recent Fed data. Shares of U.S. regional lenders down as collapse of First Republic Bank revives contagion fears. U.S. to temporarily send 1,500 troops to Mexico border. Ace, is that because of you? Number of U.S. job openings fell to 9.6 million in March, the fewest since April 2021. Still well above pre-COVID levels. Here's the data from this morning, the JOLTS job openings. I don't know. This is a weak bounce here. Much predicted U.S. recession still hasn't happened thanks to consumers, thanks to printing of money, giving it out. Tempted just to cut losses on these longs, but pretty confident we're going to see a bigger bounce in this by end of day. Chamath previously claimed Bitcoin has replaced gold and would eventually get to 200,000, has said that crypto's dead in America. The combined assets of the 3 bank failures this year is 548 billion. That's a new high for a calendar year, surpassing the prior record of 373 billion set back in 2008. Not only did it surpass it, it almost doubled it. Yeah, BY just kind of barcoding. Low volumes. It's consolidating at the lows, so it's like it wants to make a new low, honestly. Not sure though, you also have kind of this little inverted head and shoulders here. But the bounce up to that resistance was with a lot of selling. That was a huge candle. Quick. 419.30. 1,600 shares for $996. Crazy. The calm before the flush, then the rip before the delist. I think you nailed it. 8 on Wednesday, 55 on Thursday, 150 on Friday. So no suspensions tomorrow. Busting through all that. Are other ones taking a beat down? I mean, this market is down 1.5%. It's a huge red day, so you could have basically thrown a dart and gotten a good short position today. That being said, actually GME, if you consider that a meme stock, I don't know what a meme stock is. Most people do though. 2.25% today. Not bad at all. People also consider AMC one. 4.3%. This is after a pretty significant rally. Let's look at some banks, some safe bank stocks. Whoa, Wells Fargo 4.6. That's a huge down day on Wells Fargo. Tesla's pretty flat. People consider that a meme stock. These wicks on the SPY. Wiki. Your website saying, that's what Chapter 11 is. All stores closing. So if something changes, then maybe they won't close, but that's what the plan is. Liquidating all their assets. Everything must go closing. I mean, yeah, it's drawn a lot of traffic. I mean, the stores are bumping. We went and checked one out, and tons of people in there. Even the shelves are almost empty now, but definitely getting a lot of people in there. Not too worried, Collard.
Hi, just yesterday. Earnings are after the close on this one. Stick around.
This is their final trick. Enough tax laws, but you want to sweep and have tax rates. Yeah, that is one of the appealing points for a buyer. It's a huge tax write-off for sure. It's like, oh, it's like over $1 billion, just in credits, tax credits. Which could have been why Elon Musk bought Twitter, even for that crazy premium. It's a bluff. It's a trap. Meme stock equals stock who gains popularity through social media. So that would, I mean, SPY I see on social media more than GME, or I guess Tesla you consider one. I think social media trades a lot of SPY. So I agree. SPY is probably my favorite meme stock because it only goes up. Close it down for 10 years. Alright, let's see. We're getting a little double top here. See if SPY can break out of that. VWAP is a long climb. The highest paying US internships are still in tech, despite the numerous layoffs. There's a 50% decline in software development job postings compared to a year earlier. Ford cuts prices on Mustang Mach-E up to 8% on some versions. Ford trims prices. New models have moved to lower cost batteries. This is the second time this year they've cut prices. I saw Tesla actually raise their prices again. The car pricing is very dynamic lately. I think Musk maybe started a trend. Schumer gives no timetable for possible Senate vote on debt limit bill with no spending cuts attached. NATO and partners have delivered 230 tanks and 1,550 combat vehicles to Ukraine.
Customers are starting to push back against that a little bit. I think they've kind of hit the limit of what they can do from a price raising perspective and how much they can pass through. And I expect the company to come across in its
Look at that consolidation on LXCH
and start to admit that
China #1
when they come out. And so overall, we think
Workhorse having a pump today. It's up 18%.
Starbucks, very good company, very, very good and loyal customer base. The mobile app usage continues to improve and continues to be a bedrock of how this company creates such a loyal customer base. But the price raising strategy is starting to test its limits, and we think Starbucks stock is as well.
Andy, you're making me break out my Economics 101 book to look up elasticity of demand, right? When those prices get up, eventually people start making other choices.
And
they are,
summoning
what I like about Starbucks,
double tax rate compared to
for
the price of
a
stock.
non-coffee drinker like myself, I appreciate that they continue to throw new products. This
brick and mortar becomes Tesla stores.
channel development segment that is really
it.
growing. They combine with Nestle to make off the shelf.
That's a lot of big Tesla stores.
Combining Starbucks and Nestle, that's an incredibly fast growing part of their business. And you're right. If you look at the stock by definition, this stock has run
tax liabilities
a long way, and it's overbought.
Plenty taken care of at this point after Twitter.
They depend a lot on the China recovery for this stock to stay up at these levels or continue to go higher. But I applaud Starbucks for constantly adjusting their and pressing their customers to see how far they can take them up that cost ladder before they back off. So far, they haven't backed off, Andy.
Yeah, no, they haven't actually. That's,
I think these are liquid ones.
My key point here is I think Starbucks has gotten away with moving its customers up the cost ladder very effectively, very well, and like you say, admirably. I think they deliver exceptional value. I think they finally started to hit that saturation or stretch point, that elasticity point that you talk about. That's what we're starting to see in our data. It'll be very interesting to see if the company comes across and says, look, we've been relying on getting a higher ticket per customer for a really long time, and we're not sure that we can continue to do that. That's what I expect to hear, because I think that's the truth, but we'll see how the company comes across in its call.
Andy, you know how they get you, and they've got a great segment with their loyalty program and the stars and ordering on the mobile app. But that's the problem, I think, for a lot of people is, like, when I'm ordering a couple drinks and it comes out to $14, I don't really pay attention to it because it's linked to my app and my payment. And then I look at the receipt later on when I get a notification. I'm like, what did I spend on 2 drinks? So they kind of get you there. But do you guys consider this at Likefolio? Because we've seen brand names do really well this earnings season. McDonald's a perfect example. Yeah, it was overbought on a technical level, as Kevin mentioned Starbucks is. But at the same time, is Starbucks more of a staple now than a consumer discretionary item? Because that's what kind of gets me at this point, is that this might be a staple where people aren't going to give it up.
Yeah, I think there's absolutely something there. I don't think people are going to give up going to Starbucks. I think it's almost addiction level. You could throw it in the same bucket as Altria and some of the Vice stocks at this point. That's how powerful their brand and their consumer base and loyalty is. And then, you mentioned the app and the loaded cards and how you can put the money on there. One thing I do think that's very interesting to think about, in 2022, consumers put over $3 billion onto those Starbucks cards or prepaid into their app. And now when Starbucks has the opportunity maybe to take that float and make, 3-4% rather than 0.5%, that could be a really interesting line item in a quarterly report. So something to watch for there. They really have a large balance sheet of customer funds.
Yeah, and Andy, when you look at this, scale is I think key here. 36,000 stores worldwide. I know you guys don't cover a lot of data overseas on China. I think that's going to be a key point in the report this time as they've reopened more. But when you look at this, what kind of earnings score do you have on this one? As I mentioned, just off of 52-week highs.
Yeah, slightly bearish. I think it's purely because the stock has run up so much. Like you say, there's a caveat in there. We don't know very much at all of what's going on in China. We rely on the company for that. But from a U.S. English-speaking perspective, we think they've hit their limit with how far they can push the customer on a per-ticket price item, and we think that the stock is due for a pullback on earnings.
All right, great stuff, great data as always, Andy. Appreciate it.
Thank you. Have a good one.
Yep, you too. That's Andy Swan, co-founder of Likefolio, breaking down the data for us. You know, it's hard to argue, Kevin, about the stock performance. It's if you look at some of their past results on a quarterly basis, ticket prices are going up per consumer. The consumers going in, traffic's been really heavy at this point. The adaption of their omni-channel presence with the app has been doing really well. It's hard to bet against this company, but Likefolio seems to think that maybe at least some consolidation or pullbacks warranted here.
Yeah, and if you look last quarter when they released earnings, the stock broke to the downside. They disappointed slightly on earnings, so you can't rule that out. And the fact that this stock is now higher since that disappointment is another reason to look at this. But it's overbought, Tom, from an RSI perspective, which is just one tool. It's not the Bible. So I did kind of a passive bearish play here, Tom. I went in and sold this week's 118, 120 call vertical, Tom, and that's this week. It expires Friday, so that's about $4.50 above the market right now.
Breaking above that level.
And then I went in, Tom,
very
and
subdued though.
Used that credit to buy the 1 week 108 put calendar. So I used, it's a complex trade, right? That combines two. It combines a short
all right, 2 o'clock margin calls
and a put calendar to create a four-sided trade, Tom, that you're getting about a dime credit. It looks like it's up to about 12-cent credit now, Tom. But this is one where you get a bearish tone, but this is one that if nothing happens and it stays right here, you collect your credit on that trade, Tom. But it's a slightly bearish play, short about, just under 8 deltas, collecting about just under $24 in theoretical theta, Tom.
Yeah, let's break this trade down. As Kevin mentioned, we've got a 3-cent credit. That's where it was trading earlier. It's more closer to a dime credit, which is actually beneficial when initiating this. But in that May 5th weekly cycle that expires in just 3 days, selling the 118 calls, buying the 120 calls, so a short $2 wide call vertical to help find it. You could receive a credit on that. And then you're buying the May 12th 108 put, selling the
do you have
May 5th
any experience with that?
Put. So just a 1 week wide put calendar on the 108 strike.
If any stock gets suspended
credit,
pending news,
cents here. That takes your break even down to about 118.
We'll just start with that. If the stock gets suspended pending news,
you've got 10 days till expiration on your put
can
calendar.
Can it resume at a different price?
Trade, and you've got some assignment risk on your short 118 call and short 108 put in the May 5th weekly cycle into the end of the week after the next over the next 3 days. Your risk on this trade is all to the upside.
Remember,
above
I thought that
120 strike on that. So your risk up there is going to be about $200 per spread because of the $2 width minus
something was halted
that you
pending
collect
news.
On it.
Suspended.
So there's all your risk to the upside along
and the
with
news
those
was a buyout or something basically that changed the fundamental value of the company. Then it would resume
this thing's going to grind lower over the next
at that
10
level.
days. This type of combination type trade where you're using a short call vertical to help finance a long put vertical may work for you. The apex of profitability, of course, near that 108 strike.
This suspension,
also,
though, is not
from all right, good look at that four-legged spread there, Kevin, and Starbucks into earnings.
This is a
but coming up after the break, we're going to take a look at Yum
suspension
Brands,
on May 3rd
which is at an all-time
because of
high today
it going,
into earnings ahead of
getting
tomorrow's
delisted.
opening bell. Fast Market's coming right back after this short break.
So this isn't a suspension from like some kind of news catalyst. However, it being suspended before it gets delisted, because I think it'll have up to 10 days, from what I'm seeing with that form being filed. It being suspended, when it's in that limbo state. News could come out. And then it could continue trading at that higher price before it ever goes OTC. Is that basically best case scenario? And that's kind of what I'm wondering. If that is possible even. Or if the suspension and it's no matter what going to go OTC after they file the form. Because they're getting suspended because of the delisting, from what I understand. Get an issue shares and we get nothing. Yeah, oh yeah, for sure. I'm saying it never even goes to OTC. It just gets suspended and then resumes. It's like basically a halt, but it's suspended based on that news.
Days a week on TDAmeritradenetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Welcome back to Fast Market here on the TD Ameritrade Network. Before we take a look at Yum Brands ahead of earnings, let's bring in Ben Lichtenstein, Senior Futures Contributor here on the network, to break down the market moves today, Ben. Off of session lows, but weakness across the board here.
Yeah, significant losses here, Tom, as well. I mean, when you look at the Russell down over 2.5%, and you know, I do kind of keep a close eye on some of these nice round numbers, these key levels, these milestones that we've taken out, and I think it's important to point out that we're still holding up above. You've got the ES, the S&P is holding above 4,100, and the SPX, you've got the NASDAQ holding above 13,000, the Dow above 33,500, and the Russell still holding above 1720. So, you know, some uncertainty out
saying there though. Do you have any thoughts on that?
Ultimately, you know, you had the RBA that raised rates after a pause, kind of signaling that, well, we could be in for further rate hikes, and maybe the market is wrong in terms of suggesting something come this fall is going to shift as far as cuts. But we had the JOLTS number this morning suggesting and kind of feeding into the trend we've seen where labor conditions aren't necessarily cratering, but they have slowed. Openings have slowed another month with those numbers declining. Earnings obviously on the radar for traders and investors. Just a lot to focus here on, Tom. And again, as mentioned, regional banks seem to be weighing on concerns as well.
Yeah.
Is anybody listening? Do you guys have any thought on what I just mentioned about the possible outcomes? You can always buy the shares back, Ace. Wait, I can start looking at suspended stocks and see what happened with those, or try to. And if you're going suspended, I mean a lot of stuff. Banks are going to cash out BBBY investors to cover some debts.
I think if you just look at the price action in Yum Brands, it actually looks very similar to McDonald's. Both the stocks are higher 8 consecutive weeks in a row, with Yum Brands higher by about 22% over the last year. Even
so that the one scenario is basically if that's possible, that'd be the only reason why I would have some exposure to this going into a suspended state. With the possibility that it then gets resumed at whatever price, you know, $5, $10, $1. I would assume there would be a premium from where we are right now. I don't know how much, but you figure I'd say at least $1. Because the float's been, as far as we know, it's been diluted basically 4 times, and $4 was basically not the all-time low, but that was the low from decades. So just getting back to that low with the 4 times dilution is like $1. I don't know what market cap that is, but I think it's, I don't know, 1 or 2 billion. I have to do the math. It's still very low, but
I think this business has done very well in the past 6 months or so because of the trade down effect. I think people are going to them because they have scalability. They're able to keep prices at bay compared to potentially grocery stores.
I mean, you carry over your losses, Ace. So
of the dietary
there's 100K this year.
People's lifestyle choices, but again, I think the trends for the fast food restaurants are still intact, with the stock, like I said, higher over the last 8 weeks. You also have to consider digital trends, you know, digital apps, and of course online ordering. It's so much easier now to get these fast food products to your door. And I think that's one of the other catalysts behind why the stock is quite a bit higher over the past 6 months or so. But I will say this, you know, looking at the forward estimates for earnings per share, or EBITDA, it's about 7.5% on a forward basis, and it's trading from a multiple standpoint, a forward multiple around 28 times. So it's about 3 times its EBITDA growth. One would say, historically speaking, it's a little bit rich in valuation.
If you make 100K next year,
but right now, I mean, the trend is still intact until otherwise
it'll be a wash
to move to the downside.
No, there's not a limit on how many years. Just
go ahead, Cap.
Just keeps carrying over.
Oh, George. You know, George, when you look at these 3 main companies that we talk about, Taco Bell, KFC, Pizza Hut, now you throw in their new Habit Burger Grill that is growing nicely. But George, how much of this exit, it looks like in mid-April, they finished their exit from Russia. They exited all those businesses. How much are earnings going to take a hit, do you think, from that exit from that business? Because without that,
I mean, you can double check with your tax guy. I don't know who your brother does it or whatever, but
and really Starbucks as well.
Yeah, that's what I've seen at least.
Guidance on this stock
activity
is a lot like those, and those had at least Chipotle and McDonald's had pretty good earnings. George,
being a foreigner too. I'm assuming you're like dual citizen.
But if you look at the price, it's a great question too, Kevin.
Yeah, if you look at the price, it's making money out of the country. I don't know how all that works.
The second quarter of last year, so I think
technically you would say
it's Russia business.
I don't know if you have to, but you would say your gains were made out of the country.
We actually see the price action we see.
Right.
I think again, if you look at companies like Chipotle, which don't have exposure in that region of the world, they've done exceptionally well. I mean, all these quick service restaurants, I think, have been a value
tax strategy is very
proposition
important
for consumers. I think that's one of the
plays
reasons
a
why
very
they've
tight
been
role
so,
with how you
so robust
trade and
in terms
invest.
of the returns on investment over the past year or so.
There's lots of strategy. You want to make sure you have a tax guy that has a strategy for you, and not just filing taxes. You want a whole strategy with how you manage your money,
how
you spend
it's actually been down. But if you look at the consumer aspects
companies need to open, close,
purchasing power, people's
a lot of strategy.
Consumer bundle, they generally are going to pay up for food. And I think if you look at the value proposition a lot of these businesses provide, plus inflation is cutting into the budgets of households, I think these are positive catalysts for the business. But nonetheless, you know, at some point in time, you know, companies like McDonald's, Yum Brands, they will reverse trend. But right now, I mean, if you look at the last 8 weeks, it's been quite a tear, to say the least.
Yeah, you could say that with an RSI above 75 for
SPY
fast
just
food
fighting its way back
company.
up slowly,
Pretty astounding move that we've seen since October. All right, thanks to George Tillis, senior markets correspondent here on the network, breaking down Yum Brands ahead of earnings. Kevin, that just always like red light sticks out to me as far as when you see a stock like Yum Brands, but then we're seeing it in Chipotle. We saw it in McDonald's. They're still having really good reports, even though their valuations are expanding.
Yeah, listen, I think these companies, just look at the charts on them, Tom. They've had all incredible runs as, remember, lower price points, or in Chipotle's case, they say that their price point and their customer base is a little bit immune to inflationary pressures. So all these companies has been able, like Starbucks, and we just said with Likefolio, they've been able to raise prices and see no real drop-off in some of their volumes. So that's a real good
people awesome. You can write it off. You just have to,
some of these companies.
have to make money.
They're all overbought on the upside, as you know. So it doesn't
major
mean they're
brokerage will
going
let BBY
down.
trade,
They
even
just
if it
might
gets
not go
out
up
of
from here. The bar is really high for their earnings, Tom.
Okay, yeah. So, Kev, on an example trade perspective, if you think this is
you think brokers will keep
too far, too fast,
people
that's the way
from buying
I
it?
approach this.
Or
Just to
retail from
look
buying
at
it?
a strategy example here, where maybe
Well,
you
if that's the
take
case,
advantage
that's
of a
more of a
pullback.
bullish
Now,
reason
they
to buy it
don't have
now.
weekly options
If you
in
have any hope
Yum,
for it.
so you've got to go out to
And
the
that's kind of the thing
monthlies.
I'm
Look at
saying
the
too.
May monthly,
If there is
Kevin,
the event
about,
where
2 weeks until
basically
expiration on
it gets suspended or becomes untradeable, and then whatever goes through OTC or not, and then resumes at a much higher price where I couldn't, there was no kind of exposure if I didn't buy into it now. If it goes into OTC, I'll be able to buy it there with TD. I can buy on there. But if it suspends and then resumes at a higher price, that's the only window where it's like I wouldn't be able to pick it up.
If it goes back down to 135, that expands
now
to
moving
$10.
up. Here we go.
So you've got a decent risk reward setup on this one for maybe a flow down. But that break even about 141.60 to the downside, Kev, that's only about 50 cents below the current
definitely
share price.
assuming
So you
there's
don't
news.
need a massive move, right?
Not according to this filing. My interpretation on this is it's
so
not
quickly,
being
Tom.
suspended
The
based on
50-day
news. This is
moving
from Bed
average
Bath &
on Yum
Beyond.
Brands is 131.
Being suspended
So
because
you
it's a
can
notice of
see how
delisting,
far it's
or failure to
deviated
satisfy
from
continued
those
listing rule,
averages. It's
and a
out
transfer
there.
of the listing. So it starts with a
it's
suspension.
overbought. It's stretched away from its 50-day moving average
Wow.
and the 200-day, frankly. So I'm
Because
not saying the stock's going to go down. We don't
a
know
suspension
that.
from
but boy,
news
the bar
is
high, Tom.
an unknown.
And
It's not a
so
future. It's not like,
this
oh, we're going to
trade,
suspend it this time for news.
does it
News
have
is
an
something they didn't know
opportunity to be
about. So
profitable?
it's like a
If
halt. That's why it halt
Yum
in the
Brands
middle of the day,
doesn't
suspended.
blow away earnings, then you get a softer move down. You don't have much till you get to your break even.
Oh, BBY's
Tom.
website? Because they said they're selling
Kevin,
everything.
When you look at directional, option strategies such as this one, it's directional bias because you're buying this put vertical to the downside.
They've had this up, since they filed Chapter 11. This is totally normal.
Does that give you the flexibility when managing a position
that is
like
the
this
point
over
of
the
Chapter
next
11 is to
17
liquidate
days in
everything
expiration where,
and not have to pay
we saw
debtors.
McDonald's fall after
Or have
earnings.
protection
and it was
from
a
it, at
pretty
least,
good report.
interest payments
but
and all
now the
that.
stocks move back higher. So this kind of strategy, Kev,
Well, if something
in your
happens
opinion,
before they go bankrupt,
you
fully,
have
like actually go
a little
bankrupt
bit of
and
flexibility, right,
liquidate
to
it,
actually
then
manage
that's
this
great,
if the
but
market's open, liquidity is provided,
that's
right?
not the path they're on at this point.
The easiest
As far
way
as we
to
know,
do
maybe it
something
is, we
like
just
that,
don't know,
Tom, is if let's say you were to fill around this between $3.30 and $3.40.
This is what got you?
You could right then put in a limit, $7 or something around that sale, a limit order. And if you get that move down, you fill on that resting order right there. Now you can put it in 7, you could put it in 8, you could put it in 9, you could put it in anywhere,
delisted, yeah.
right? It's whatever you think that move is going to be, but
yeah, I mean, it might be worth a little risk.
Trade these is have a resting limit order
just because of the market cap and the value that it potentially has.
The news that comes out.
Just have to practice good risk management in this case and figure out what's worth the risk to hold.
Trading with limit orders.
If there is a scenario where it gets suspended, and then there is a buyout, a carve out, a merger acquisition, whatever, and it's not tradable until it's at that higher price of whatever they buy it out at, $5 or whatever.
This is just a way. It's got about
40. So if there is a possibility for that, which I think there is,
it's a significant
then you
short
should have to figure
delta
out what you're willing to risk for that.
The GTC, you know,
yeah,
that
so you
way
can wonder
you
a
don't
penny.
have to watch
fractions of a
something
penny.
like this to exit it if you want to at a specific price. Kev, real quick
Red
here,
sale sign.
Markets off of their lows. I mean, volatility. Should we expect more
Michael,
of
is
it
that a huge
into the
rip
end of the
rally?
week, or at least until the Fed tomorrow?
I think there's still
probably
a
just
lot
keep
going
coming
on
down.
here, Tom. You got, we'll start
Just
getting
had a
ADP tomorrow.
600% move.
You get Jerome
Still up
Powell speaking
150%.
tomorrow. That'll be the biggest move of the week, if you ask me, Tom. Not the banking problem. I think the banking problem is one of those lingering problems that's going to be out there. But Tom, today is just the beginning of movement this week. You've got a big Wednesday, Thursday, Friday trading environment.
Yep, definitely are going to be highly watched on that. Watch for Fed Chair Powell's comments. I think that's going to be key. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up.
Stocks are squeezing OTC. You just think because of the illiquidity and so they move faster, or why do you think that? See if I can go under a penny. Sometimes under a penny. Yeah, that's true. Worst thing is we can't. I know the question on the float and stuff is kind of annoying. The fact that they pulled the S1 filing is good. It's bullish. I'm kind of taking it at the face value of what the brokerages are saying. Still, 465 million market cap or float. Yeah, they have 10,000% gainers. No, I know it is crazy, but that's because they're trading fractions of a penny, so it's much easier to move. But it's crazy to try and trade them because there's no liquidity. Just like a few sales here and then a few sales there and a few sales everywhere. Round and round you go. I was trying to sing that song, but I forgot how it went. Here a sale, there a sale, everywhere a sale, sale. Uber on the rip, 10.5%. Hey, Julian. Earnings continuation. MSGM having a big move too. Doesn't look big on that crazy chart. Minutes ago. Yeah. Even more sketchy than many stocks. The next level of sketch. Yeah, buying it today would only be under the hopes that it gets suspended and there's news and then it resumes back on the NASDAQ, much higher price. Other than that, I think I'll be able to buy it in OTC if I want at probably a substantial discount. Happy brother. Yeah, he says he's my brother. That's a legit account though. Happy brother one. I mean, I can ban him too. He's not active, but yes, no reason to ban him. It was a real person. He was a pretend stalker. Called himself my brother. Matt, NASDAQ retract listing. See, I don't know. I don't know if they can retract the delisting. I imagine they could though. They just have to come into compliance. BBBY hasn't even filed the Form 25 or whatever it is. Close my long here. I have a small profit on it. Yeah, this is definitely a good day to short bounces, so I don't want to ride along anymore. Yes, but like I said, I assume if they come into compliance, they would retract it and it could become, could be traded back on NASDAQ. Yeah, basically, Joshua. It's $10 is crazy, but yeah. If it runs up an OT, I mean, I've not really traded OTC stocks like that. Like I traded Sears briefly. Never really been something I've gotten into, but maybe BBBY going OTC would cause me to trade it. But it's gonna be no different than another stock in OTC. You know what I mean? So I could just be trading stocks there already. I could be trading Sears and Blockbuster and without some news catalyst, I probably wouldn't buy back into BBBY in OTC. Something that would be very bullish that would pull it back onto the exchange. Kitty, shut up, dude. Next month's mortgage payment. Big deal.
The most modest decline on the session of our upvote and downvote stocks
Jenny's in the
today.
chat.
We are expecting results that would see declining PC sales and concerns about broader technology spending by these large corporations. Analysts are expecting revenue to come in around $5.3 billion, which would mark a year-over-year decline of about 10% on earnings that are expected to fall almost 50% from a year ago. But AMD has been gaining market share in the CPU market, steadily gaining over its closest rival, that being Intel, in both the PC and server markets. Now, while Intel did face production missteps as it had transitioned into these smaller, more advanced process nodes, AMD really faced no such issues so far this year due to its reliance on Taiwan semiconductors. So that does, I'd say, set the tone more positively into this earnings event, considering the fact that Intel surged after its
if it goes to OTC
last
though,
week. AMD
my point is
being seen as the more favorable among the two.
I should be able to get it for much cheaper. I don't see a scenario where it only goes up from here into OTC.
Performance ratio than Intel's.
The only thing where I'd want to buy it now is if it never makes it and it gets suspended and then resumes from super bullish news.
This name's still up about 30%.
Which I guess could be a possibility.
Now it is down about 0.5% now over the last 12 months, but all in all,
SPY still melting up
the
a little bit.
12-month period that has really been volatile for so many of these.
I know. I've thought about that, Twinkle. Like
this name's now performing.
That's. I'm assuming he's gonna trade like other stocks on OTC, but
this is one of those names.
I'm very curious how it does trade if it gets there.
Over the years, particularly the last couple years, that
with all the liquidity that's on there, and yeah, maybe the spread gets tight, and maybe it trades more like normal. I don't know. It'd be weird.
You go back 5 years though, Jenny. It's gone like 9x still, even after getting cut in half. So again, this one, it just depends on what time frame you want to quote. It's been all over the place. Some resilience, but also some weakness, also some recovery potentially here. This is going to be one to watch. Client and gaming both could see declines sequentially. We'll see if that's the case. Big part of this is going to be data centers, like you said, though. AI, see if investment spills over. Not only NVIDIA is going to benefit, maybe a company like AMD can too. Next one, though, here on the list is Match Group. This is a name that is a premier player within this online dating world.
But it seems like, as we've talked a lot about reopening and experience and spending, these type of names, while still very prevalent in everyday lives of many, just haven't been the front of conversation, at least in markets. I know, and you'd think from looking at this chart, there's no one online dating anymore because Match is down 16% this year. I mean, faring a little bit better than Bumble, which is down over 18% this year. So both
plan
of these
holding,
names
goes OTC,
really
goes to $3, relisted, going to 50.
Earnings of about 40 cents per share, which would be a pretty sizable decline from the
At least you
adjusted
have a
earnings
plan.
reported of 74 cents per share just a year ago. On revenue that's pegged in just around 749 million. Now, last quarter, they did miss their earnings estimates, reporting earnings coming in around 30 cents versus estimates of 46 cents. And the stock did drop 5% the next day in reaction. Now, it's amazing to me because despite how honestly ugly this chart looks, the street's consensus estimates are still very strong. 7 of the 11 analysts that cover this name, Alex, do still lean bullish, as we have 2 analysts that are neutral, no sells in this name. And the average price target of around $61 a share does imply about 65% of upside from current levels. So the street sees something perhaps that I'm not seeing, and maybe we'll get some clarity
Got shaken out of
when we
that
get their
spiral.
financial results.
It looks
today.
like it's going to keep melting up, but
yeah, this will be
I don't
one to
wanna hold
watch.
through
It
red.
is a little bit more niche,
Just
though.
scared.
However, I think you could bucket it into the kind of that online digital advertising world. And we've heard so much about that spending drying up. Well, if it's drying up, you have to think about, is it all going to kind of come out equally? Or are sort of those second and third or fourth choices for places to advertise going to feel the brunt of it? I think you could make an argument, particularly after seeing Meta, particularly after seeing Alphabet's earnings, that those companies are going to fare a little bit better in a digital ad decline than the Snaps of the world, than the potentially the Matches of the world. So we'll see. I'm going to say downvote for this one. Just a little bit too niche, I think, but certainly one that I'll have my eyes on, and maybe one that we'll come back to post earnings. Caesars Entertainment. This is another player within this gaming world. But notably entertainment, of course, whenever you're talking about these legacy players, you're talking hotels and conventions and all the things that come with those giant hotels and the experience thereas. But stock's under a little bit of pressure here today, Jenny. It is. Shares are down over 3.5%, and we are expecting this first quarter bottom line to improve really sizably from a year ago, as they did report a loss last year of about $2.11 per share. We are expecting now this quarter to be profitable on revenue that's also implying growth of about 19.5%. Now, analysts are expecting their first quarter performance to be benefiting from pent-up demand, as well as the expansion of retail sports betting and property development initiatives. Also, improvement of group and convention trends in Las Vegas and international travel recovery are also seen as pretty strong tailwinds into this earnings event. They did even say on the last earnings call they're really optimistic about booking trends as they've witnessed increased booking for banquets and convention room nights, and anticipates this to only uptrend now into 2023 and beyond. They did reveal they've been witnessing the pre-COVID return of conventions and group business to Las Vegas specifically this year. So that's really positive. It's positive for the entire space as a whole, Alex, but this name on a chart perspective is not really faring up to some of its peers, frankly. Names like MGM, Wynn, Las Vegas Sands, they all look really strong on a year-to-date basis, showing this recovery. This name hasn't really gotten the same bid. It is up 7.5% for the year, but definitely an underperformer in its respective sector. And I'm also going to say downvote just because I feel like we've gotten this picture. This is just going to be the latest of these names to give us their financial picture. I think the question is, or the situation is fairly straightforward. All these companies are slowly but surely coming back, but it's still kind of interesting when you compare it back to 2019. So things are coming back. We'll see where it goes from here. Going to say downvote, though, for Caesars. Let's talk Ford, because this is the last one, so clearly it's going to be an upvote. This one, I think, from a trading and investing standpoint, has been kind of a boring stock, but the story, I think, is arguably not as interesting as AMD, but getting up there. I agree. I feel like Ford has been so busy this quarter. They have a lot of developments underway. We'll have to see, of course, if those pay off. We are expecting, at least in terms of revenue, that would increase about 12% from a year ago as the automaker tries to stabilize its operations as a result of the supply chain problems that weighed on it a year ago. They did previously issue guidance for this year with adjusted earnings coming in between $9 billion and $11 billion on roughly $6 billion in adjusted adjusted free cash flow. This quarter, though, they are reporting their financial results by their business units instead of by region for the first time. And they already did release revised results for 2021 and 2022. And those revised results include billions of losses on their electric business. And they said those losses could total as much as $3 billion this year. So Ford did say on Tuesday, actually, it would begin cutting the starting prices of its Mustang Mach-E by thousands of dollars as it increases production and reopens order banks for the crossover models. So this is not new sentiment. This is something we've heard from Tesla now 7 different times this year. But I think hearing it from a legacy player like Ford and a company, and in terms of its unit of electric vehicles that is not yet profitable, Alex, that's a little bit concerning to me. We'll be also watching their legacy business, that being their more traditional autos, and I think that the guidance will be so important for this name going forward. Is this going to be enough to now get investors excited about Ford again? Because frankly, with shares pretty much unchanged on the year, like you said, from a trading perspective, this name has not been very exciting. Yeah, and that's not necessarily a bad thing. Obviously, it's under a little bit of pressure here, preempting the earnings. We'll see what comes out on this one, but I will say upvote, we'll take a look at it. So much of this story is understood as well, too. Falling prices, falling demand as supply is finally starting to get back online. Not the recipe for outperformance for these type of companies, but are they faring better than their peers? That could be enough, especially reporting later in the quarter. So we'll say upvote. Excited to hear what they have to say. Yeah, and Ford down 2.5% now ahead of this earnings event, which is now AMD slightly unchanged on the day, so not necessarily a negative story there, but we'll be diving into 2 charts in both AMD as well as Ford, as well as some example trades. Stick around. Next Gen Investing. We'll be right back.
SPY still melting up here. I might go back long. I wait for a pullback and see. It's an experience. So what I just did was I just bought 50,000 shares on a paper account. So I'll have the same experience. Make money. It'll be fun. I did cash script put in this account before too, so it's showing me I'm down 92K, but oh, never mind, about 150. Oh, I didn't mean to buy that many. I'll do it again. I want to be the amount that I would be buying with money. The amount I had basically this morning. There. So now I'll get to share the experience, the paper account. All the funds, no risk. Forgetting about your investments is a great idea. You just have to make sure you buy into investments that are smart to forget about. So ones that'll be here in 10 years that you know and use. So Fidelity had a survey and found that the best returns on investors over the last however many years were the ones that were dead, or the ones that forgot they had a portfolio. So totally, you got to pick the right ones, and this is not one to probably just forget about. The DTC post, so looks like DTC maybe changed collateral requirements for banks today to 100%, and that might be triggering part of this crazy sell-off in the banks today and carrying over to the entire market. Let's see the SPY. This is the craziest first hour I've seen on SPY, I think maybe since COVID, as far as just no relief rally. Wasn't like super violent in a sense of like halting like COVID, but it was just, so yeah, that's all that post was about. Yeah, then the news on BY probably won't come out before a suspension. That's probably true. We'll see. I mean, if it is, it would only have until 8 p.m. tonight, so I guess it'd come out after, but think it'll be suspended tomorrow. Yeah, it's just a risk management decision. Bobby explodes in OTC. Yes, they'll all try to go to OTC. I see the potential for OTC in a way that I feel like it's maybe less manipulated. In a weird way. You can always buy back in, Color Greens says. That's true. There is the one scenario which I was weighing in my head where you won't be able to buy back in and it will resume at a higher price. But most likely it'll be a scenario where you can buy back in and probably for like an 80% discount. Yeah, I don't know what happened with that Mullen candle earlier. That was strange. More melting up on SPY. Should have looked at the 1 minute to exit also. That would have saved me. Last 10 minutes? Yeah. We usually get a lot of volatility in the last 10 minutes. Is that true, Kitty, about calling a Ford dealership or having them call you? Seems crazy. Which price would I buy at BBY? It's not like about a price for me, I guess. Up until now, it's just been TA, and the times when I've lost has been when I've been trying to time the bottom, which is usually always a bad strategy to time the bottoms and tops. Not catching the momentum, but it's difficult when the thing has only had momentum to the downside for 4 months. So, yeah, trading the OTC most likely will be much more difficult to use any kind of TA, just because how it trades. But that being said, with all the attention, maybe this will have tighter spreads and it'll be more liquid and it'll look normal. I don't know. But I'm not sure I would even buy in for a trade anymore, like without fundamental news.
Strategy. What we're looking at in particular is buying the 95 call calendar, selling this Friday's expiration, buying next week's. We're able to do this for a 50-cent debit. That would limit the risk to $50 US on the bullish strategy. But we've talked about this before. With this particular risk profile, Jenny, you can overshoot your
50% of all vehicles,
so it's more about precision and accuracy than it is just
like
up
worldwide. That's
down.
crazy.
And so I selected the 95
even in the States,
strike.
I think that'll be
Pretty nicely to the market.
I don't know if that tech will be what
looking at real-time
keeps pushing
prices, spinning out a 1 standard deviation range, but that's just under $6 here.
I mean,
for a stock that is trading at 89.
Yeah, maybe electric
so
vehicles.
Pretty close to,
I don't know if
60% to the
but
upside here on this.
Maybe not powered.
If it is to test
not
that,
storage with lithium,
with
hydrogen or something else. I don't know.
That is best reflection of where you think the stock is going to be.
But I mean, electric isn't
as early as tomorrow.
Like a new thing. We've had electric vehicles.
And
now first vehicles were electric,
and look at Ford, which also does report today after the closing bell. We are also seeing some consolidation now into this event, Rick, with Ford shares somewhat disappointing on the year, not really doing a whole lot now. When you look at the year-to-date performance, they're up about 1%. So walk us through what you're seeing, because Ford has been, frankly, very disappointing. It seems like it never really has good news to share. So I do think traders and investors alike are sitting on the sidelines waiting for some financial updates.
Well, sadly, I think I'm going to continue the trend of not really giving good news here with this name.
Was that during like 2000?
The overall shape is more of a
2021
triangle here. So we've
GME
got
was ripping.
horizontal support with this green dashed line
from 11, maybe 11 to 11.25 or so would be typically where prices have bottomed out numerous times during the past year. We also see that we have a downward sloping trend line beginning with our yearly highs here, this white dashed line extending downward across some highs that we saw here. We had a little bit of a breakout to the upside there, which quickly slapped down.
That's when like all the zombie stocks started waking up.
We're having an increasingly narrowing
the margins
range
were getting
of
over with GME
our price
squeezing.
action between this
that's when I bought into Sears and
trend line and our stable horizontal support here.
Moves,
so it's
like
looking increasingly like we could see a breakout.
If it was that time, I'm imagining it's when Toys R Us did it too.
And really, the descending triangle type pattern is more
still melting
bearish
up on
in general. It really can go either way, though. What you're looking for is a breakout beyond either this white dashed line to the upside or the green dashed line to the downside here. In the more recent price action, we topped out near 13 recently.
No, you were here yesterday. We looked at
another level that stood out to me. That was
6 examples of stocks going OTC. They all dropped
and where prices topped out
on average like 80%
recently as well.
Then the first week.
Our moving averages trending downward, but not very severely quite at this point here. We did look like we were going to have a nice day yesterday.
Yeah,
we crossed
Green,
above our yellow 21-day exponential moving average, but we stopped short.
Yeah, you can make huge gains. Like, I mean, something like BBY, if it's trading OTC and it gets super cheap, you know, fractions of a penny, and then it's a big buy or whatever,
which can often
comes out of OTC,
support or resistance, in this case resistance. Since then, today we gave up our yellow 21-day EMA once again. We're down more than 2.3% on the day here, but we're not making any new lows or anything yet here. RSI, mostly following price action, tilted more toward the bearish side at this time. So in terms of support and resistance, 11 to 11.25 once again is the place to watch to the downside. There's not really much else to say in terms of that. You could perhaps see a little bit of support near this volume node just above 1150, but
much was sold up here? 300
of extending downward to this $11 level. So beware if that starts to, if we start to make some new lows in the short term here. To the upside, 1230 is where our 63-day EMA is, roughly in line with our volume profile point of control. That seems a likely area to watch for some potential.
Yeah, I should probably have a video up today.
Yeah, and Rick,
it's
sort
of
concerning
that
right now
we're nearing that $11 level because the yearly high is only I'll probably put a video out just comparing
so we are
other OTC stocks.
Right now our 52-week lows here.
The biggest
but
BBBY FUD video ever.
As always, Rick Ducat, our chart master, and Alex.
Now when trading
this name, I mean, I feel like
that's a pretty severe drop, even for a short and short like they had
all year long. This name, relatively lower price than
their earnings didn't help,
but I will say that from a price activity standpoint, 13 just seems to be the magic, or I guess unlucky level for Ford.
Yeah, and it does seem to be a little bit far away, unfortunately, though, for Ford. It's still
see, here's Toys R Us. All these ones are mentioning. They're all OTC.
When I look at this name, I see a boring
Sears used to be I think the biggest company in the world, at least in the United States, but I think maybe the world.
You're somewhat handcuffed by the low stock price and the low volatility in the name to essentially be directional, and that's okay. It's just sort of the situation when you're looking at this. Unless you want to do something in the premium selling strategy that doesn't collect much for the risk, you're sort of, again, sort of stuck picking direction.
I can go through some of them.
Strategy, though, here, Jenny, one that benefits from maybe a name that has just had all this bad news and all this weakness, and maybe even if it just delivers that
we'll
same
show you some of that
it's
point.
already priced in. So to me, I look at it, sometimes I'll ask the question. Doesn't necessarily always work out. But you know, where is the asymmetric risk? If everyone's bearish something,
when the music stops on
down on it,
a rally after a sell-off like that. I assume maybe VWAP, but
kind of be that case,
maybe not. Might not get there
with a name like Ford. And so I looked at buying a call vertical, one strike in the money, one strike out of the money. The real beauty of this, though, the 50-cent line strikes. This is a very, very small trade. You're risking $25.
This got delisted.
$25. So break even at 11.75.
On April 14th. So right here.
So it's basically in line with the current share price.
A big sell-off probably on the news. Had a rip before.
Associated with the trade. Just need a little bit of a rally here.
Because the day it got delisted. So this is what's weird to me is.
Cents, actually, at the time right now, about 21 cents. Seems achievable, but this is, of course, a very short-term trade, though.
Why is BY going to suspension tomorrow?
Only a couple days until this expiration.
And then
just falls below 11.50, of course. Max loss.
Go SPY should have helped. Why is it being suspended tomorrow? Isn't that kind of strange? I mean, that's not the case with all stocks, because this one went. There was no gap from it being suspended to then being delisted. And a lot of them that I checked were like that. So this just traded normally, and then it got delisted. So it was from a Thursday to a Friday, right? Yeah, 14. No, was it here? Yeah, right here. 14. Was that a weekend? Yeah, that was a weekend. Anyways, we're looking at percentages. So I mean, from where it closed to where it opened, that was a 32% drop. End of day, close to close, is a 52% drop. But then the rest of the week, it was 87% drop on that one. Given, yes, BBY's come down a bunch. Maybe it won't keep dropping. Who knows? This one went OTC on the 18th. Which this one didn't have a very big gap for that. Big gap up here. See that? There was no gap there though, like in days. This didn't get suspended on the 17th and then not trade for 10 days. And then open back up on OTC. That's where I'm confused. At a 13% drop, it got delisted, but you know, the following couple weeks now it's 82%. Why did I close the longs? This one went OTC on the 12th. Oh, that was probably on the news of it. And then yeah, right here. So not a very big drop on this one. This is one of the examples where it didn't drop too much. CDA KQ. I went OTC on 4th. So right here. This big drop is probably on the news of being delisted. And this was actual date. But look, there's no gap again. There's no suspension for 10 days or anything first. I had a 20% drop from low to high. Close to close was 50%. I'm doing the benefit of the doubt on all these, like best case scenario. Not going low to low, which I should. But close to close, 50%. Close to 2 weeks later, 85%. Like 85% is like pretty common, it seems like. Box D, this one we've looked at and we've even traded. It's now OTC. So I had this big gap down. That wasn't even actually the OTC. It was right here. Where was it? Oh no, it was that. And this one actually did have a little gap. So let's see. So from March 31st, it didn't trade from March 31st until April 4th. So it had what, like a 4-day gap before it traded OTC. Here's the first example we've seen where this was probably suspended and then went OTC, and that was an 87% drop from where it was the day before OTC to the close of the day it was OTC, and 2 weeks later it's 99%. I'm gonna keep doing examples, but that's the first one I've seen where there was actually a gap in the time. Remind me of the Sears catalog. Yep, buying a house in the Sears catalog. Yeah, potentially let's Less corruption in OTC. BBBY haven't stated if they're going to OTC. I mean, they have a filing here. They don't state it. It's not voluntary. NASDAQ told them they are. This is the filing from BBBY. Pull us up on investor relations. An 8K. And notice of delisting or failure to satisfy. We read through this. Pretty straightforward. NASDAQ has determined that the company's common stock will be delisted from NASDAQ. There's not much question, really. The company does not intend to appeal this determination. Trading of the company common stock will be suspended at the opening of business day, May 3rd. So it's suspended May 3rd, tomorrow. Opening of the business day, I'm pretty sure that includes pre-market, so yeah. I don't know who's saying that BBBY said they're not being delisted. The regulators could deny the stock OTC. That'd be even worse. That means they're getting delisted from NASDAQ and they have no market to trade on. That's basically just stuck in suspension. No buyers, no sellers. Might be hitting a temporary top here on SPY, right at this line too. Is it possible? It seems like it's possible. I'm not certain though. I don't know. Seems like it's possible. 8 cents at the top of the day. Yeah, right at VWAP maybe. Nickel after hours, oh boy. At the opening of business day, yes. Pre-market opens at 4 a.m. So, is that the business day? Or that's just what we'd have to assume. $212 rep is $212 a brokerage? A brokerage rep's probably honestly not going to know what's going on. Yeah, the suspension starts tomorrow, according to that filing. And that's all we know for now. The suspension came on because of this SEC filing saying they're being delisted. So in the context of being delisted, they're going to be suspended on May 3rd. That's the reason they're being suspended. NASDAQ has not reported yet. I think they still have to file a Form 25. So it's possible it's not going to be delisted tomorrow. It's just suspended tomorrow. And it might not be delisted up to maybe 10 days where it's just suspended without being delisted. Which isn't a better position to be in. You want to be able to trade. You want to be able to close your position and open positions. All in running up. I doubt it's 9:30 a.m. I don't think it's going to trade all pre-market and then 9:30 it's suspended. I mean, maybe it could. Could be right. I'm not going to risk it. I'm saying if I wanted to get out before it got suspended, I'm not going to risk that they're talking about 9:30 a.m. and not 4 a.m. Little move up there. Climbing up again. OTC measures volume not accurate. Oh. It's probably like Webull doesn't. I don't even know if I can't trade on Webull. I don't think anyways. So it's probably all screwed up on here. Anyhow, $1 still on the table. You're saying there's a chance.
What I will say though, and you're kind of alluding to this with the costs and the prices and sort of the
last time to push the buy button. Yeah, that's what I'm saying. That is what I'm saying. So
you have to go through
if you want exposure, whatever
spending this
comes,
much on something that you can make at home for far cheaper.
I think you need to do it before 8 p.m.
It's always been that way, Jenny. And so the concept of elasticity of demand, which is what you're talking about, at some point this is going to get to a point where it's too expensive and people will stop going. Have we gotten to that point yet? But the more interesting thing to me about this, Jenny, is the fact that yeah, it's gotten more expensive for us as consumers, but Starbucks isn't benefiting from this. They're just offsetting higher labor costs and higher food costs. So that's not to say that they need to keep raising prices, and I want to see that. It's just, it hasn't been a situation where Starbucks has taken on the heat of these higher costs. It's just simply passed them on. So that speaks to just how robust their customer base really is. Yeah, and I guess that's a theme that's pretty much true across all consumer products right now. I mean, we're seeing that from grocery chains. We're seeing it from restaurants, that these higher prices that are then being passed on the consumers aren't necessarily boosting these companies' top lines. It's just necessarily, I would say, that helping them sort of break even given the rising costs that companies are then facing. So that's a good point because everything right now is more expensive. It just feels honestly more egregious to pay $7 or something for a latte. Couldn't agree with you more. Well, then if you buy it through the app and you got like 34 cents in, you got to add $10 and you're just constantly giving them more money than you really want to. But you talked about China. China's not expected to be back yet, and that's because, of course, January had lockdowns still in China. It seems crazy now that we're 3 years later that we're still talking about this, but same-store sales in the U.S. are expected to grow basically in line with earnings, about 8.5%. So we'll see if that happens. From a
thanks, guys. Relax. I appreciate it.
I think you can make an argument for a lot of different style trades because depending on how you look at this name, you can tell yourself a different story. You can
Jenny never pays for a latte.
10% off its all-time highs.
The Jenny quotes have become
a meteoric rise over the last few months off of its lows, but also one that clearly has a fundamental picture that is becoming more cloudy. Increasing costs, maybe a level where we're starting to see these prices being passed to the consumer, starting to affect demand. All of these questions will be answered, but from a trading standpoint, I looked at something that's somewhat in the middle here, Jenny. It's a high probability strategy. It's neutral to bullish, but the best case scenario for it is actually a slightly lower price than we're currently at. It's a skewed put butterfly here. What we're looking at is buying one of the 112 puts, selling two of the 110 puts, and then defining the risk by buying a 105 put. All of this is in this Friday's expiration, so a true earnings-related trade. The break-even is 107.75. You find that, of course, that assumes the 25-cent credit that we're looking at here for this example, but you find that by essentially realizing that that $2 wide put debit spread, the 112, 110, will benefit you at a lower price. Add in that 25-cent credit, subtract that from the 110 strike, and you get to 107.75. You do have $275 in risk on this one. That takes place below 105, of course. That would be your max loss potential.
I told you I'll never answer A's.
Risk defined, high probability, no upside risk. Most best case scenario here, a slow grind down towards 110. Hang around there on Friday afternoon. And you got a decision to make.
Yeah, and I think this will be a really good read into if the consumer is still trying to spend on some of these more luxuries, I would say more expensive items like this coffee. And I guess if that is your consumer staple, I completely get it, but it does seem absolutely ridiculous to me. But we'll leave it there for our FOMO segment. Coming up next, we'll look at Uber rallying after earnings. Shares are up almost 11% after they did beat estimates for revenue, while also giving narrower than expected losses for their first quarter. We'll dive more into those numbers with Caroline Woods coming up next.
Why'd I close this buy? Melt up. Of course it's gonna melt up all day. Such an easy trade. It's scary down here though. Ooh. Yeah, they did announce Chapter 11 like a week or so ago. BBY. Jenny would never wear that V-neck. You've not seen Jenny when she's not working, Ace. It's not a V-neck either. That's a blouse. Talk about my mom. Yeah. Jenny finds that amusing.
which is kind of lost on me, so I had to actually read what he was talking about. But he said this is a major step in the right direction for Dara and company. They sound confident, and the company will continue to expand aggressively while growing profitability at an impressive rate. Obviously, that's the big key metric there. They really point to adjusted EBITDA as a sign that they're on the right track. Saying strength in trips while utilizing less incentive highlights its strong competitive position. So he actually boosted his price target to $44 from $40, kept an outperform rating. I will say the median price target for Uber is about $45 right now. 90% of analysts look at Uber as a buy. And when we talk about its strong competitive position, you compare that to Lyft, which Lyft shares actually are higher today, but only by about 0.5%. They've been very much underperforming Uber this year, and we know that they're in a transition stage right now. They just laid off 30% of their workforce to try to cut about 50% of their costs, so taking really drastic measures. Only 20% of analysts at this point have a buy rating on Lyft. Almost 80% have a hold. So both companies only one sell, but definitely analysts much more cautious on Lyft. I will say the other key takeaway I think that we heard from Dara Khosrowshahi on that call was that he says the days of chasing market share at the expense of profitability are over, and I think that is music to a lot of investors' ears because they're so focused on that path to profitability, and it's not because of incentives for drivers, incentives for customers, and I think that's really boding well. We'll have to wait and see what we hear from Lyft on Thursday. They'll report on Thursday, but as I said, modestly higher today, but still lower on the year, low single digits in terms of a decline on the year, but quite a bit different than Uber.
No kidding, and I almost feel it's difficult to compare the two now based on their performance, and that Uber One loyalty program seems to be paying off because I pay for that. I think it's actually a pretty good deal because you get discounts on each of your rides, but then it also, in turn, I never take Lyft anymore because I'm already paying for this Uber One program. So probably further strengthening Uber's position as the more dominant ride-hailing service, and you can see that from a chart perspective, but we will leave it there. Appreciate all the insight. Caroline Wood, Senior Markets Correspondent for the network. Now, coming up next, it's time to look at a name that is moving the other direction quite steeply today. That is Chegg, with shares down almost 49% now in the session. We'll discuss that move more with George Tillis coming up next.
Been tainted with BBBY. I was gonna go back long on SPY, but I'm just gonna stop. I won't chase. That gas didn't even to drop here. What a crazy looking chart today on the SPY. Like, doesn't even look real. BBBY cat ears? Don't even know what those are. New low, then rocket. Biden campaign planning fundraisers featuring the candidate as soon as next week in New York. Ryan Cohen has said the Fed may have to choose between fighting inflation or bank contagion. We got a Ryan Cohen tweet. Now, how does that mean that he's buying the BBBY? Lazards or Sazazags says Fed should not hike rates this week because regional community bank pressure is disinflationary. Musk said the Fed is making decisions using stale data, like driving a car while looking out the rear window, fine when the road is straight, but destined to crash when the road is winding. I'm gonna put a poll on here for you guys. This was coming too. I wish I didn't close so soon. Oh, you're talking about the chart. Like, what are you talking about, Rally? You have money? A dude's name. Where you're from, Julian, it is. Over here, it's you could be a girl's name too, probably, or more likely, at least.
This one says outlook not so good, or the outlook's bleak. Like, that's the response you're getting from that with regards to this particular company based on the metrics and the words of the company's leaders. But my question to you, George, is more about
we have Julie here, and Julia.
We know AI technology is coming. There's not necessarily a reason
I
to
thought
be
you were a
scared
girl
of
for
that.
the
It's
first
going to have
while,
impacts,
and I was like,
clearly. There's going to be things that benefit from that, things that are done more efficiently, and there's going to be things that are impacted negatively, and there's potentially even going to be jobs that are eliminated. All of that can be true at the same time. So I think of it as we have to now consider companies that are going to be good at adapting to the situation. Let's think about Roku, for example. They initially came to market with a device that helped bridge an old device to the new world. We don't need that anymore. All the new devices have that technology embedded. So what did Roku do? It pivoted to become a digital ad and software company. To various degrees of success, clearly.
That was heavy
it's a company that was able to see the writing on the wall and shift to something else before it was too late. And that's going to be important, I think, George, in this AI revolution as well.
Julian could be like long for Julie.
But what is your general thought about where this is all going?
Well, in general, I mean, you have to think about the disruptive technology behind artificial intelligence.
Get a little volume here.
It's all about enhancing productivity. There's 24 hours in the day. How much productivity can you squeeze out of 24 hours? OpenAI is helping squeeze out more productivity. Anything that's going to cut costs, but also time is going to be value accretive. And so businesses, again, that have gone digital, like Chegg, even though, again, the ecosystem is remote and digital, that's going to face competitive challenges, especially when there's a free option out there. Speaking of the prohibitively expensive aspects of higher education, and it's not just college education, they support K through 12 as well. I think that's also going to be a challenge for their subscription-based model. So what I can say is look, this is definitely a disruptive technology.
This is one of those cases where
it's going to create some jobs.
Probably most cases, but SPY didn't quite get to VWAP there. But if you look on the futures, it's at VWAP. The market really moves on the futures, I think, more than anything. You'll notice with support and resistances, with VWAP, they're close, but sometimes they diverge some. Because see, look, yeah, that's rejecting. It's like not even to VWAP yet. But potentially this will keep moving up to VWAP, and it'll just kind of blow through a little bit on the futures.
Has to, from an executive standpoint, and of course, board of directors look at internally what they're doing to change their business model. And I think that's what's going to happen in the next couple of quarters. You're not going to see much price movement, in my view, in the stock. You'll probably see it just drift sideways with low volume until the next quarter or the quarter after that, until there's some issues brought about, reduction in costs or changing their business model. But at the end of the day, I'm not surprised to see the stock down this much because of the fact this is a growth company that's facing some growth challenges.
Yeah, and George, that adaptability, we know that companies have to have the ability to withstand some of these disruptions. I mean, the pandemic being one of the more recent disruptions, companies had to adapt. Yep. Obviously, the transformation of now mobile technology, companies had to adapt. So it does seem like Chegg now, while it has seen a pretty massive move to the downside today, they have to find ways to adapt here moving forward.
Yeah, I mean, I'd like to see it move back up to here for the cup.
Appreciate all the insight on a really negative story right now in Chegg today.
This is a crazy price action day, though. This is almost
the network, and that also does it for Alex
fake.
and myself for Next Gen Investing.
The selling and the
We
buying.
have the watch list with Nicole Petalides.
It's just way too smooth. Did you think? Homeland Security Department has asked Defense Department for additional 1,500 personnel for Southwest border for 90 days. What is going on down there, Ace? Mnuchin says Fed was late in increasing rates, then raised too quickly. Says we're going to see inflation back to 3-4% range pretty quickly. The dollar is losing its reserve status at a faster pace than generally accepted, as many analysts have failed to account for last year's wild exchange rate moves. Yeah, oil and gas are both down today. Lazard CEO Peter Orzog says, when you move rates really fast, you break things, and things are breaking. Mnuchin says he sees one more Federal Reserve rate increase. Former U.S. Treasury Secretary Mnuchin says debt ceiling needs to be raised quickly. What? Sounds conflicting. He says they were raised too quickly, and then earlier he said need to raise them quickly. Oh, the debt ceiling. The ratio of U.S. small caps to U.S. large caps is at its lowest level since February 2001. Wow. Ratio of small caps to large caps. Interesting. Not there. Yeah, I didn't hear about that Haitian invasion. 7,000 people living under a bridge from Haiti? Yeah, see, this is rejecting the VWAP on the futures on the ES. Considering a short. Got data tomorrow though. I don't necessarily think we'll just continue to sell off. Good though. Today was pretty ugly. I mean, this might spill over into tomorrow until now at least. What a weird move, man. Smooth up, hits VWAP. It's like Algo's trading today. Like Batman airs upside down. What? I think you nailed it, Rally. Border Patrol on a horse? Really? Just eating the horse. Yeah, a lot of people are buying. Now I should change the poll. If you never watched PP, would you be buying? Would you be selling or not? It was like hard to borrow. Yeah, that's interesting. Not sure. Yeah, let's look at the borrow fee. The borrow fee kept coming down. I assume that was just from the dilution. It's kind of flattened out around 10%.
Experience for customers.
Right. Thank you so much. Good to see you. Appreciate
Good one,
it.
Dink.
Thank you. Renita Young.
Good one.
All right, let's get a look at the bigger picture. Keith Buchanan's with us, portfolio manager at Global Investments. Thank you for being here. First, before I get to the Fed, you want to talk a little bit about your thoughts on what's been going on with the regional banks. I mean, there are some who say the Fed should not hike another day because of the struggle that we are seeing in the regional banks, and blame some of it on the trajectory, how quickly the Fed raised rates. It was the quickest rate in 4 decades.
Absolutely. That's part of a lot of work we've been doing and a part of our broader thesis. And thank you for having me on today. We feel like the debt that's been sloshing around our economy has grown over the past generation, but particularly over the past few years, will manifest itself in ways that we don't really recognize, and we haven't recognized over the past 6 months, and even some to come in the future. Call it black swans or just resurgence of risk. That kind of bubbles up when you have debt at this level and rates that move higher to increase that cost of carrying that debt for any particular economy. Our economy isn't immune from those disruptions, and we've seen that over the past month and a half within the regional banks. We saw even before that in cryptocurrency, and it just manifests itself in different ways, but that risk just hasn't been absorbed, and the risk of that debt and those prices declining put more pressure on the economy than we've seen in the past. So we're really have been, part of our thesis has been, how do we as an economy grow out of this debt latency that we've become accustomed to? And how does that manifest itself in ways that we just don't recognize at this point? The regional banks, again, have been kind of the microcosm of that over the past month and a half. We feel like there are other disruptions that are perhaps yet to come, that debt level continues to increase and those interest costs continue to increase, putting pressure on our economy as a global.
Understood. So at this point now, the Fed is likely to raise rates, right? Tomorrow, we're expecting that. Do you think that in June they are going to raise rates, because they are adamant about taming inflation? And we are still, while we are seeing things going in the right direction, we got JOLTS opening, fewer jobs, factory orders, less orders than expected. In fact, we saw layoffs in the JOLTS report for everything from, and even hospitality and leisure, things that were starting to bounce back and gives a boost, but things are going in the right direction, but still very hot inflation.
Absolutely, and you see it all across our economy, that inflation has started to somewhat turn over, but we're still at very high rates. We feel, and we agree with what the market has priced in, that the Federal Reserve will push rates higher, 25 basis points this week. After this May meeting, we're still trying to understand what the Federal Reserve's risk is, what they view their risk is. And what they've communicated to this point is the risk that inflation reemerges like it did in the 70s. He invokes Volcker a lot still. But as that fear is still the risk that they want to avoid going forward, we feel like that they can continue to have this debate of, should we lower rates, should we keep them higher for a longer period of time than the market's pricing in. The market's pricing in 2 or 3 cuts through the end of the year, and around 150 basis points going into 2024. We just think it might be premature to price in that much dovishness until we see inflation really start to come back to levels that they seem to be comfortable with, which is around 2 to 3%, at least at this point. So we're somewhat concerned that the market might be a little more optimistic about those rate hikes, those rate cuts going into 2024 and the rest of the year 2023, as the market still digests what this inflationary environment really means to our economy, and also what it takes to really stamp out inflation and its finality in this economic cycle. So we're somewhat concerned about the optimism that the market has in price cuts this year and next year.
Yeah, understood. When we think about the risk associated with crypto, we even had crypto deposits at Signature, and when you think about the risk, right, FTX, Silvergate, and even the others too, to a certain extent, the exposure to having crypto, you have them withdrawing their deposits anyway, and then you have the volatility of crypto. I mean, where's the risk going forward? Where's crypto's place in our society?
Cryptocurrencies definitely have a place in our society, in our ecosystem, our financial ecosystem, if you will, going forward. The prominence of that will be dictated, I think, by the next 2 to 3 years. Again, we've had a massive and sensational collapse of FTX, which was a very broadly accepted crypto exchange. So the place of Bitcoin and the larger cryptocurrencies has definitely been established, and the mechanisms of which have been well established and are growing. But the magnitude and the direction of that growth and just how quickly the broader economy continues to accept that as a mode of a transfer of wealth and store of value in a more particular sense may actually be delayed over the next couple of years, and that growth might be stunted a bit as the market really starts to ascertain. Again, kind of going back to our thesis of as liquidity comes out of the market, it affects those assets and ideas and concepts that have absorbed that liquidity in the march higher. And largely, cryptocurrencies have been a beneficiary of more broad liquidity. And I think, as a firm, we think that can sustain itself as that liquidity the growth in that liquidity starts to subside. But it will manifest itself in different ways and evolve as time goes on. So we're concerned about the growth of cryptocurrencies as a broader sense. But we don't think that it's going away anytime soon.
I would like to get some investors some advice. I know you have some sort of areas that may be a little more recession resistant. I'd like to hear about those. But I will say the debt ceiling is looming, and that's another thing that's weighing on the markets because the reputation of the USA is at stake with this. And, there's a lot of shouting out there, how much the American people will suffer if we were to default. So maybe a thought on the debt ceiling, and then what would you tell investors?
Look, the full faith and credit of the United States of America has always mattered and always meant a lot since we really established the monetary system that we still rely on right now. It's really hard to pinpoint from a scientific standpoint. Our economic science is built a certain way. Political science is a totally different beast, and it's really not easy to dictate or really point in a certain direction that will shift. We tend to think cooler heads will prevail over time. The markets have priced in a little more risk this time than we've had these debates in the past around the debt ceiling. And I think the timing of which may be more of a debate than if. It's more of a matter of a when instead of if. But we do have, our system is built on, and the global monetary system is built on how creditworthy the United States of America is. You could dovetail that with, again, how much debt is out there in the system. If there's more risk in any level of debt, any monetary instrument, the price of that instrument goes down. The price of U.S. currency is built into U.S. Treasury rates and interest rates in general. So that's pushing upward pressure on rates that, again, is manifesting itself in negative ways over time and what we look at as our global financial system. So we're concerned, like everyone else is, and we really want to make sure that we end up on the best footing. But from a political standpoint, we kind of steer clear of making bets on which way the political winds may blow, because that's something we just didn't really have a whole lot of clarity on. I think the rest of the world can say the same as well. So we like to at least steer our clients clear of those risks as they kind of bubble up in our economy.
All right. Keith Buchanan of Globalt Investments, thank you very much. Glad you were able to be with us.
Thank you.
Appreciate it. All right, later this hour, Chipotle's chief restaurant officer will join us and break down the company's earnings. The stock has been at a new high in the last month or so, one to watch, and a deep dive into the cybersecurity stocks ahead of Fortinet earnings later this
Well,
week.
kind of coming down here. I didn't take the short. I'm
Preview here with
being cautious. I feel like it might just trade in a range for a bit until an hour or after.
After the bell, we want to look at those names. And up next,
So I'm not expecting to come down here and retest on this move. Could be wrong. Maybe test down here. 409. But I'm just chilling for now. Just reading some different write-ups on just this whole delisting thing, trying to figure it out. Yeah, that's weird. A pretty big candle on SPY though. Probably should have taken that shorter view up. This guy's write-up is saying it's two separate things. The delisting and the suspension are not related. I mean, I guess you could say that. It certainly looks like it, though. Now, I guess what, with all the speculation in tin, what's the motive? Why would they do it this way? Why would they do it this way? Changing filings, trying to mislead. What's the point? Bought $1 million on paper. Yeah, I bought the amount I might still end up buying, but the amount I was holding, so I'm not doing an unrealistic amount. But yes, you can enjoy the ride and the entertainment for the cost of nothing. This is the way. But Annie, do you guys have any motive for why they would do it if they were going to suspend it based on merger acquisition? First of all, why would they do it in advance? You don't need to do those in advance, as far as I know. Once you have the merger acquisition coming, you release that information to the NASDAQ, and then they suspend it. It's not like a futuristic thing. Fun to watch for sure. Just all of this whole big thing just to sell old inventory. I mean, I don't think it's true, but I like that you did come up with something just to dump inventory. Get a lot of attention on this. I mean, the stores are busy, they're full. It's true. Full of people, but not much product. If it was for that, though, I think they would probably be in trouble. If that was the motive. 30% off scuffed vacuums. We got a new coffee maker. Had an old gift card. Finally used it, so we hurt the balance sheet.
Question about whether we're going to get a rate hike. I think we've been talking about the likelihood being pretty darn high, still over 85 or 90% for tomorrow, and a 25 basis point hike. But more importantly, perhaps, is what is the commentary thereafter, of course.
Yeah, I was hearing the discounts weren't even that much.
Traders here,
like
that
20-30%
level holds a ton of water right now, down to
which
maybe
isn't like
4,050, under which
blowout
things get a
sale
little bit more
prices
intriguing.
where it's like
We're just going to
50
look
to
see if we
70%.
maintain the process. Basically,
maybe there's not at that
higher
point yet.
lows all along the way. And until that really changes, short-term traders don't have much reason to shift thought process either.
Understood. So as we watch that and we remain under some pressure, you have some charts that you're watching. Technical Tuesday. So the first one that you have your eyes on is MetLife. Why is that?
brands.
Well, so Met got more or less beaten down with the whole banking
seems
situation.
elaborate
If we
just
look
for
at the
that,
chart,
and
what
it seems
happens is
illegal.
that, very recently, there was a continuation of the selling that had been going on since really late February
I think they would be
into early March.
under
And the
investigation.
move we've made has been
That was what they were
relatively
doing.
substantial here. If we just look from March 1,
Talking into buying
basically,
more,
we've
aren't I, Ace?
retreated from 70, got as low as 53. Now, what's interesting about 53 is that it goes back to the pre-COVID peak. We have to go back to February of 2020.
I have some explanation. I'm not scared to buy back into this thing.
We had risen to. Now, it wasn't
my plan of just day trading though fell when it broke the low.
That was the high
But
trade.
I'm still giving myself time till 8 o'clock. Something comes about.
So I find that a little interesting. Now, what's further interesting, of course,
Or
is
there'd
that
be
we
a
made a
reason
really big bounce.
to buy it now, not just
53
wait
was
for OTC.
achieved on March 24, or March 23 rather, and since then we rallied into the 50-day moving average right around 62, added 9 points from that $52 level. Now that does not present, unfortunately, very well. Yesterday this was questionable. It looks today like you're getting a follow through after a rejection at the 50-day moving average. So if there's a bearish traders out there, they're going to watch that ledge at 62. Trades over 62, maybe as high as 63, I suppose. We could start to see traders who have been bearish on this maybe look to cover, but this has the makings of a potential retreat.
I'm going to watch the stock ticker till 8. That's the window I have. If news comes about or there's some explanation or
things will get quite ugly quite quickly.
Some reason this won't go to OTC where I could buy it for potentially 80% cheaper if I really wanted it.
I do.
Tell us about Accenture.
Well, okay, so Accenture's story is simple. This has been in a lengthy downtrend. You have a stock that underwent about a 40% retreat from peaks to lows in 2022.
It'll be the same stream.
Problem at this moment is
check it, it'll
simply
have a
the
queue at the end.
downtrend remains consistent. That line and the highs that are making lower highs along the way here, Nicole, spell the entirety of the story. It's really difficult for a bullish trader when you're at a major area of resistance.
It might have little head and shoulders here on the 5-minute.
Coincident with the 200-day moving average, a very clear series of lower highs along the way. New bullish traders here are actually trading counter trend, counter to the longer run trend of about 15 months in a down scenario. So shorter term, I can understand traders wanting to take some chances on the long side, but it really presents as a bearish chart. And bears would be in charge here until we start trading and making new highs that would take us over about 290. So you've got some wiggle room here, perhaps to be consistent with trading the existing trend, that being that downtrend using the recent levels as areas where short-term traders might cover any short side trades. But if you're a long side trader, odds are those traders are waiting for some moves, giving them higher lows in the short run.
As in your brokerage, if they'll let you buy it
290 is going to start to be feeling better about it. But both of these unfortunately present rather bearishly. And
most of what you sell it,
Nicole, that when you're given the kind of market
but it sounds like you're maybe overseas.
At this moment,
I heard some overseas brokerages will just liquidate you, so I'm not sure about that. But I think in America, at least, all the brokerages, I don't think anyone will liquidate you. But you might not be able to buy it. You might be able to sell it.
All right, coming up, we're going to dive into some burrito
it will be
bowls.
the same. We'll just be watching that ticker, just like all the OTC ones we just looked at. For BORBQ is OTC. They're just not much to look at. Like, maybe it'd look different because it's might have more volume. Yeah, it's not like a different stream or anything. It's nothing's different. BWKS. Oh, one of you guys mentioned this one. Nice consolidation above VWAP there. BBBY is suing companies? I haven't seen that. Who are they suing? And why? add to this short here. Again. I'll look at the news. Is it just only the Q? Yeah. Yeah, it's on a different exchange, but you can still view it and trade it on your brokerage. Just like you can trade New York Stock Exchange, stocks, NASDAQ. Time will be dogs, cats living. Ocean carriers for product retention. Are you talking about news on BBY? Takes millions from ocean carriers. This is a sign of bankruptcy to you? What? This. Can't look at the chart while I have this up? Okay. They're suing a container shipping company, tens of millions of dollars, claiming the carriers willfully abandoned service commitments at the height of supply chain turbulence to reap enormous profits from the market turmoil. So you're saying this lawsuit is spurred on because they're in Chapter 11 and the creditors are trying to squeeze out money from wherever they can? Not the creditors, but BBY. I've never known that to be a sign. That's interesting if that is. I mean, we didn't need a signal. They filed for Chapter 11. Right? Like, I need another signal.
People in the C-suite look at, right? CFOs and chief restaurant officers. Tell me about the things that you're facing, the hurdles.
Absolutely. Well, fortunate for us this year, we're starting to see labor inflation begin to moderate. We're expecting somewhere around mid-single digits for the year.
Yeah, exactly. Lawyers are
my large assumption here is as retail demand begins to wane, a lot of that unskilled labor is now migrating back to leisure and hospitality. And of course, we're the beneficiaries of that transition. And so we're seeing heightened levels of staffing, which improves the overall team member experience, which is helping us lower costs as we're seeing the best retention numbers we have experienced as an organization in, gosh, the 5-6 years I've been with the brand. And of course, that's paying huge dividends culturally, as well as lowering our overall wage rate and bringing down overtime and things that really move the needle in a material way as it relates to labor. So we're seeing some tailwinds there, which we're excited about. And that will play out to be really helpful for the back end of the year as we continue to grow top line and improve margins.
And I don't mean to sort of hit you with this, but we have been hearing about a lot of companies on the earnings calls talking more about layoffs than they are about the search for labor. That it sounds great that you have now retained the labor and that is working for you. You can give me a thought on that, how you are.
Coinbase launched Coinbase International Exchange and will begin offering Bitcoin and Ethereum perpetual futures settled in USDC with up to 5 times leverage to international institutional clients in eligible jurisdictions outside of the US. That's interesting. Is that part of the reason it's rallying?
as the year unfolds to support both organic restaurant growth as well as new restaurant growth. And so hopefully that answers your question. We're hiring, we're open for business, and if you want to join a winning team and a winning culture with what I believe to be industry-leading benefits, please come to your local Chipotle and sign up.
Oh, you're saying the beginning of chapter 7.
Okay. As for new products, Nicole, you did ask about.
Tell me.
Sorry to cut you off. I apologize. We're in the middle of our chicken al pastor launch and campaign with incredible results so far. We think it's one of the best chicken innovations that we've put to market in recent years. Feel really good about the product. And we'll continue to lean into different types of food innovation for the balance of the year, whether that's some other type of protein and maybe a dessert down the line, things that we are testing. Can't talk about today, but things we're looking forward to.
Good. I'm looking forward to it too, Scott. I have to say, every single person I know, particularly the younger folks, they love Chipotle. And I will always love Chipotle myself as well. Scott Boatwright, love having you on the show. Thank you very much. Best to you and the team. Keep working hard. I can't wait to hear what the new dessert might be, you know.
A dessert at Chipotle?
Thank you very much. Good to see you. Still ahead in the second half of the show, TD Cowen's analyst tells us all about cybersecurity.
30. Pentagon says new inflow of U.S. troops to arrive at U.S.-Mexico border as early as May 10th. Apple's 7.2% weighting in the S&P 500 is the largest for any single company in the index, with data going back to 1980. Yep. Apple is SPY. IBM 84.5. Chicken sucked? What chicken? Oh, that chicken? This motion carrier sounds like I should not trust on the board because they have only problem around and get nothing. Oh, I haven't even tried it. AI pastor chicken flavor? It's called AI pastor chicken? Like A1, oh, A1. A1 sauce? Or are they trying to get that AI hype going also? Ah, Mullen kept going. I love their normal chicken. What was that? 34%? AL. Oh. Alabama. SPY might be breaking out of this head and shoulders. Why I didn't make more on the futures today is confused with this kind of drop. And then this rally that I even timed somewhat. Perplexed. So somewhere in here, like one of these choppy trades that maybe did 2 of them that just wrecked it. They're always the ones that get you. There's another write-up on the DTC bank haircut. Share. Al Bundy.
We're seeing associated with this sell-off, but let's keep an eye on these products. Again, something to watch as we head into the middle of the week, end of the week.
BBBY
We also have the ECB. It's not just the Fed. RBA
today,
raised
22%.
rates this morning unexpectedly,
most
and
people in
lastly, the
chat
Bank of England next week as
talking
well.
about
So a
selling
lot on
today.
the plate
That was a pretty
for
good
investors and
indicator.
traders, to say the least, Nicole.
Yeah, I'm
I
glad you
just
brought that
ignored
up.
it.
We'll watch for that as well next week. Joining us, we're going to talk about cybersecurity next. So thank you for that, Ben
People have
Lichtenstein.
spoken.
Appreciate it.
This is the way.
I guess I'm super excited to talk about cybersecurity. Shal Yal's with us, Senior Research Analyst, Cybersecurity. at TD Cowen. So we had Checkpoint earnings yesterday. I want you to tell me about that. But I think that I'd love to hear your thought on the big picture of what happened. FTX, Silvergate, Signature, SVB. I mean, all of that, you know, when you think about all these banks and, you know, cybersecurity is a big part of all of this.
No, I sold it.
Let's just get to the names.
I've sold it many
Tell me
times
a little
though.
bit about that one.
Absolutely. What we had seen with Checkpoint yesterday is on the one hand,
I bought it yesterday.
billions miss. On the other hand, the company
bought it the day before, sold it yesterday.
Its annual guidance intact.
Been just overnight holding it for news.
You can argue that moderately positive.
But we keep not getting it. Dang
These
it.
guys keep generating plenty of
long,
cash.
Or my shorts for a loss.
Annually, they keep buying back the stock. But I think from a bigger picture perspective,
I'm full for it.
they left investors with some sort of a mixed view. On the one hand, the first half of this year slightly more challenging. On the other hand, maybe the second half could see a little bit of a bounce back. I think the fact that they kept it intact for the entire year, I think could be viewed as a mild positive for the entire industry.
Yeah, and so then we'll have some of the other names. I know we're watching for more. How about a name like Cloudflare?
I make money? Not on this trade, no.
When that dropped, had a big downward movement. It took down
I bought it yesterday's lows.
along with it. Ticker symbol's net.
Oh, I said, you know.
Absolutely. I think what
I sold once and broke that support from yesterday.
Given
not even
the
actually
customer
broke
mix
the
on the
support
one
from the
hand,
low.
given the exposure to
down here.
S&P that you've mentioned
lost money on
before,
that trade.
some other banks.
Only yesterday's work though.
I think that weighed on the company's
here.
guidance. That
My average was like here, and I sold
31% year on year
up here.
from 37 to 38%.
Hoping for a
prior.
repeat, but
I think that reflected also negatively of
could have just
everything
shorted it today.
Related to cloud spending. I think also coming off some of the commentary AWS left with respect to cloud spending, I think it all kind of corroborated for that 20-something% downward move that we had seen.
There's
with
no physical possible way I could have made money from yesterday.
Understood. You know, I think about when I was thinking about these banks, I was thinking how
it was never
just
above
credit
price from yesterday.
will be tighter, and a lot of the concerns about higher rates.
I timed the bottom perfectly yesterday.
I
still wouldn't have made money if I sold it at the perfect time today.
That there are concerns about lending and tighter lending and just the higher rate environment, which makes it tough on these kinds of companies. Can you give me a look at Fortinet, which reports later in the week?
Absolutely. I will say, you know, good point about the banks. When we think about the banking vertical as representing contribution to the overall cybersecurity, it is probably the biggest at about 20, at times 30% of total revenues from the various companies that we've mentioned. As it relates to Fortinet that reports later on this week on Thursday, the checks actually have been coming back quite positively. They also have quite a probably a sizable banking exposure, but I think on the other hand, given that they play on the on-premise, the core infrastructure, as well as the cloud, I think that could actually alleviate some potential concerns heading into their results later on this week. I think also the fact that in their case, we are talking about profitable growth. We are talking about a rule of 50 company, one which is able to grow low 20s, mid 20s on the top line with the mid 20s operating margins longer term. I think this is what draws investors to the story. But without a doubt, what we had seen from the group as a whole over the course of the past week does not reflect positively from a near-term perspective. Longer term, the view remains absolutely favorably intact.
Yeah. And then there's a name like CrowdStrike, which is a winner this year. It's up about 11%. What are your thoughts on that particular name?
I'll tell you this, on CrowdStrike, this is where we start talking about these platform providers, companies that are morphing themselves into big Walmarts of cybersecurity into the enterprise. This is exactly what we have been seeing from CrowdStrike over the course of the past 18, 24 months. Their ability to upsell more into their growing customer base, generate more profitability. These guys generate already healthy free cash flows at double-digit rates. So on the one hand, near term, they had already de-risked their guidance. On the other hand, we do like management to move into some additional adjacencies and without a doubt representing a leadership position within their category.
All right, and so with that, do you have favorites in the group or buy ratings or anything like that that distinguishes one from the other as your best bets?
So we continue to like Fortinet that we've just mentioned on the play on-premise and off-premise infrastructure security. We do like the profitable growth names. One additional name that we like tactically and strategically is Sentinel-1. Actually, it does compete with CrowdStrike. It is the smaller CrowdStrike, which probably would become profitable later on this year. They de-risk their growth as of late, and there's a massive consolidation wave within the cybersecurity arena. So I think it puts Sentinel-1 also at some sort of an acquisition target near term, maybe even longer term.
Shaul Eyal, thank you so much. Great to see you. Appreciate your look here at these cybersecurity names. TD Cowen. Thank you so much, Shaul. Still ahead, we will bring in our panel to discuss Starbucks ahead of the earnings. Coming up.
Spies moving up here. Guess I'm glad I closed out short. Get a double top on market here.
has been a win for the company. And then lastly, just looking at kind of the overall number of visits, what we're seeing is the shift in behavior, the later day parts, late morning and early afternoon, that continues to be an area of growth for the company. We're seeing visitation trends up there. So a lot of things from a visitation standpoint supports what we're seeing. And, Andrew's point, maybe a slight beat in terms of same-store sales for the quarter here.
Yeah, and I want to hear more about China and where that fits in here. Andrew, your thoughts about the guidance and what the China story says for Starbucks going forward?
So I'll save you that this is unprecedented in terms of what we've seen in China for the last 3 years and reopening as well. I don't think they're going to be really giving quite a bit of context into what they expect for China going forward, just given how volatile it is. What we're looking and what we're hoping that they say is that they're seeing sequential improvements in January through April. I think that'd be kind of a best case scenario here. They're able to speak to that. If they can give predictions on China, then I think that'll be favorable, just given that means they've got confidence in what they're seeing. And so I'd like to think that comes through. But one thing we do know is that last quarter, the international business ex-China, so big markets like Japan, for instance, Canada, for instance, seeing quite a bit of strength here that really gives us confidence that ex-China international will be strong enough to really drive international same-store sales beats.
Yeah, understood. There's some of the other coffee stocks related. I'd love to hear what anybody has to say. RJ, any quick thoughts on some of the other coffee names? Where does Starbucks land in this list going forward?
Yeah, I think Starbucks has got a good position coming out of the pandemic, especially to the point about being more convenience focused. I think that's really one of the behaviors that we've seen consumers, move towards, much more of a convenience play, even with kind of return to work being slower than a lot of people anticipated.
Right on
they're doing a job on the drive-through, and that's honestly where we've seen a lot of momentum in this category. The drive-through coffee names, so Dutch Bros being one, Dunkin' being another. I think that those are the ones where we're seeing some really impressive visits per square foot numbers. Some really impressive numbers pre-pandemic to post-pandemic, some really impressive things. So I think Starbucks, as they continue to do that, we're also seeing some of the reinvention plans, Starbucks, as they invest more in the crew and are able to get more throughput, particularly at peak hours. That's been a positive, development from a throughput into traffic standpoint as well. So, drive-through, and I think that's really kind of the future of the coffee industry. Although there still is a place for experience in that third place that Starbucks pioneered back in the day.
Right, understood. I mean, you both talked about traffic and drive-through, and it's just not a morning place anymore. You mentioned daytime and afternoon, and part of that is the post-pandemic world, right? A lot of people work from home now, or they get lunch or something. I don't know. When you think about what's going on here going forward, with the possibility
like wants to come back down
and guidance that's looking good, is there a hurdle or any worry that you have, Andrew, big picture? I mean, we could have a recession looming, we could have more layoffs happening. What kind of labor issues are they facing?
It is about
inflation, but not just wage inflation, just the cost of their stuff and the labor.
Yes, if you go back to the prior bull cycle, from basically 2009 to right through right at the beginning of COVID,
I'm surprised RC's Twitter's not been hacked yet.
Correlation between their traffic stacked on a 2-year basis, as well as non-farm payroll growth. And so that quantifies the common sense.
Maybe it has.
People are employed, they're going to Starbucks, they're stopping for breakfast or coffee on their way to work. And so I'd really underscore that we've seen very healthy job growth through March, certainly slowing, just given that we're at trial unemployment rates. And so certainly there's just not a whole lot of growth left to come here. But job growth remains very strong. I'd also point out, too, we're looking at underemployment, which also remains strong. And that, I'd be more concerned if we were to see unemployment start to tick up, just showing that the consumer is trading down within their job and taking jobs they're overqualified for. I think that is a risk to restaurant industry sales. We are not seeing it yet. And so I think just given the strong job market dynamics here, I think RJ summed it up well, just the stickiness and the convenience of the business. And one point just to underscore that is that drive-through, if you go back to 2007, roughly 33% of the store base at the end of 2007. That's nearly 2/3 today. And so we're seeing tremendous growth in a very sticky, higher margin, higher volume channel for the business. That gives us a lot of confidence that this analog is very different from 2008, 2009 in the backdrop of a very healthy labor environment.
Yeah, and I see you have outperforms on all of these. We just spoke to Chipotle, one of the executives there. It was a great conversation. McDonald's, Dutch Bros, and also Starbucks, you have outperforms. And RJ, final thoughts here as you talk about Starbucks or just the big picture of the consumer demand.
Yeah, I think your point about potentially settling in a recession is fair, and I think we're probably headed that direction in the back half of the year. But I do think that this is a different business model than we were before, and I think that's really important to drive home for this stock. Labor is really kind of the number one determinant when looking at visitation trends for Starbucks, and Andrew made a good case that that's going to be that fact, and where we are a pretty healthy jobs market. But I do think just behavior wise, and the way people interact with the coffee category as a whole has changed, and Starbucks is ahead of the curve on that. So pretty positive on that one. Certainly we'll probably see some slowing as trends continue the rest of the year. I mean, we're seeing it across retail right now, but I think that they've got a good, better than average chance to remain above those trends as we look to the back half of the year.
All right. Thank you both very much. Andrew Charles and RJ Hottovy. Thank you. Great to see you both, and a nice preview there.
Added to my shorts up there.
Those other names. That's going to do it for us here on the watch list. Join us tomorrow, 2 p.m. We have a special Fed show. Don't forget that. I'm Nicole Petalides. Thanks for being with me. Dow's down almost 400 right now. Keep it right here. Oliver Rennick and Market on Close next.
Break your heart. Always buy back in. Holding and hoping is one of the first problems you have to learn as a trader. Get over. What's a skyrocket? These are the thoughts that keep you holding something you shouldn't. There'll always be another stock, there'll always be another trade, there'll always be another opportunity. Kill losers quickly. I need to start a risk management course. This retracement. Actually not quite there. VWAP would be 50%. You're counting from today's high, then yeah, you're right at 50%. I'm gonna hold these shorts. I say that every time. Breaking through the high there. Oh, the SPY might want to break this level. It's still below VWAP on futures. Jeez, why won't each? Webull just needs to let me look at it. I don't even need to trade it. The best traders are the best losers. BBBY is coming down here. See if we make a new low or a retest on that 747. Freightliner taking off to the moon or to Earth's core. Big flush there on BBY. A looser. 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 If you can't trade extended hours, if you trade extended hours, you have till 8.
Sizable pop here, and given how much volatility had dropped and the way VIX had been really plunging, perhaps then maybe we could argue some of this selling as a little bit of equilibrium coming back into a market where there are still risks very much lingering, but the market had become quite complacent, judging by the persistently lower volatility measures that had been forming here over the past month as equities remained well bid and bonds and the dollar also pretty static. So the macro backdrop has been generally favorable to stocks. However, just based on the last 3 years, perhaps this backdrop is most favorable or will be most favorable to gold. The precious metals up just shy of 2% today. There's some other stuff that's up too.
Almost to the lows of the day.
And lo and behold, Bitcoin is up too. But look at the chart here for gold, because we've got a move sitting at 3-year highs after the big rally. Gold last year did exactly what gold is supposed to do, which is preserve capital. While the bear market thrashed through equities and crypto, gold held its own. It was choppy, but it ultimately was unchanged in 2022. Now, as risk on returned to the market in the first quarter of this year, gold
starting to
dropped
show
down.
this double
If we
top.
stay with that chart for a sec.
Being the right
gold
play.
dipped, but then it's come back now. I think this is really important because we've got
Might
a
just
very
go for a scalp
different
here and close it
regime from a
this
macro
level.
perspective this year, as
Get greedy with
signaled by
it.
just about everything else that we did last year. But gold's working. So the macro
BBY
regime this
just
year has been a focus on
blushing.
recession over inflation, in which inflation last year was the main threat.
Fat years and then a
Investors
big
seem to be
drop.
thinking more about recession, hence the cuts
Precisely.
getting
New
priced into the
all-time low on
Fed,
Bed Bath
the
&
worry
Beyond.
about
Congratulations, you
banks.
guys.
So gold has worked in
We're
this
here. We did it together.
recessionary
Down 27%
environment.
today.
Gold held its own during the
746,
inflationary environment last
745.
year. And then, of course, gold actually caught a bid alongside everything else
744.
during the no alternative COVID
743.
speculative boom. So sitting back at 3-year highs, there just is not really anything else out there like that right now. And I think that's very interesting, because if we combine last year's economic regime with this year's economic regime, you've got inflation from last year, recession, concerns of slowdown from this year, and some of these data points are adding up to that
4 cents would
combination,
break
which would be
6.
something like stagflation.
That's so far from here.
Inflation plus a slowdown. That's not good.
When's your time frame on that?
Print we got yesterday. The top
6
line
is
was
another
below 50.
almost 20%
That means
from here.
contraction, but the prices paid were rising.
4?
That's inflation. It's a very, very complicated and tricky road for the Fed to walk down right now. And that's where the drama is
4 is
tomorrow.
almost
I'll
40%
also
from
point out
here.
that intraday, you got to move Bitcoin.
I mean,
here.
yeah,
It's
into
really
OTC, I
interesting,
think, for sure.
Because BTC is up 3.5% while
It'll never go
tech is
below
down.
7, ever.
Now for the coiners,
Just
they
like it
would
never went
love
below
to
10
see this continue.
NASDAQ.
If Bitcoin can trade
Flushing
alongside
there.
gold consistently,
Down almost
that
30%.
is huge for Bitcoin. I see
Could've
that
shorted
as
it today,
the biggest
really.
doubter
Nice little short.
that is out there about what Bitcoin has been and what it could be. But price is king, and the charts will tell us. Thus far, in moments
Oh, actually, I couldn't. I'm still out of
of
day trades on that
difficulty
account.
and risk off, Bitcoin has traded like the worst risk off asset out there. But if it can hold next to gold on days like today, then that will be really it's the payoff, basically, for what Bitcoiners have argued for years. Let's see if it continues. One day is not a trend. Keep in mind, Bitcoin got hit the last couple days before the stock market did, so it did soften up here coming into the session. But keep your eyes on it, because it potentially could be very exciting. All right, I got Renita Young, Kevin Hinks here with me to talk about some of the action here today. Kevin, how much do you think the data points are contributing to this overall risk-off session? Of course, the banks are the main highlight, but I do think it's important to recall that this morning we also got a pretty big bond rally right when that JOLTS number came out.
Well, the JOLTS number was stronger than we expected, Oliver, and a really good chunk of those open jobs came off the board, from 9.9 million to just under 9.6 million. But Oliver, all you have to look is to the Russell, where I think this sell-off gained some momentum. Now, there's fear out there about, or uncertainty about the Fed and what they're doing. There was plenty of things to get nervous about, Oliver, before PacWest and before the regional banks took a hit and the Russell went down. I saw the lows about 2.8%. It was down at the lows of the day. So I think there was already enough to be concerned about. I think if you look at the Russell and the banks in the financial sector, it's a pretty ugly picture. And you've got PacWest is now today's headliner in the regional banks. I've got it down about 25%.
I mean, FINRA's being sued right now.
Chicago hour, Oliver.
There's definitely fraud, I think, in the market.
If you're one of those proponents of where there's smoke,
buying
there's
a stock
fire,
is not
we got another problem
doing anything
here
to fight that fraud, though.
With another regional West Coast bank, Oliver. And even though Jamie Dimon told us yesterday he thought most of the banking problems were behind us, it doesn't look that way right now, Oliver. I hope that Jerome Powell is writing his speech for tomorrow in pencil, because he's going to have to change it a couple times, Ali.
Yeah. Big declines here across the board.
401k.
Back down to recent lows. PacWest in particular.
Like
seems like FRC is basically to blame for
1K was 10,000 shares, so you're over like 1,700 shares?
Are doing, but just in terms of the timing, there's not like some earnings came out that really bombed here. It just looks like the market is kind of projecting, because this is a little bit removed. I mean, these banks had, like PacWest had earnings last week. It seems like this is just kind of a little bit of a delayed reaction. The market's looking around and saying, all right, what are the other banks that share the same characteristics as the ones that have gone bust?
Exactly. So this is definitely the majority of the story, right? There are some ancillary things that have happened today that are impacting these stocks. But just as you said yesterday, when the fourth bank failed of the year, people are looking around and go, hey, who's next, right? And so today we see PacWest, Western Alliance, and Zion among the biggest losers today. Everyone's got their eyes on them. Now, PacWest, it had fallen as low as 39% today. It's taken back some of those losses, but still down on the day. Western Alliance, as low as 25% on the day. Both of these were halted multiple times. But check this out. Today, the board of directors at Western Alliance declared a quarterly cash dividend today for shareholders of record, or as of May 12th, and it'll be payable May 26th. Look at this two different ways. Hail Mary, saying that everything is fine, the company saying everything is fine, or from the company's perspective, they may want to obviously reassure their company or this bank, they want to reassure their customers that they're fine. They want to reassure their shareholders that they're fine. So they're declaring this dividend. Zion Bank down at least 10% at one point on the day. And of course, that acquisition of FRC,
getting back to how I used to trade futures when I kind of first got into them.
A couple other things though. Bloomberg reported that an investment
I did better at it then.
That was just they sold
taking off basically all the risk by setting stop losses pretty soon after I opened it.
At our strategy right now,
I needed to work in my favor a little bit, and then instead of stop loss, just into profit.
Liquidity assets as well as loans. And then we have another look.
I'd missed some trades for sure because it'd stop me out and then it'd go. But
analyst who says that, hey, when we consider the acquisition of FRC from JP Morgan, listen, this is showing that these regional bank failures are going to have an impact on earnings, a negative impact on
you're going to get some upside moves on it, but the bounces are going to be short-lived like this. Like, we just can't just bouncing on its way down.
This
is a bouncy ball now.
Be passed on to consumers in the form of fees as well as higher interest rates on loans.
Sure. I do think that
each bounce
potential
could get
for
smaller, just
new regulatory
more
measures
sketchy.
to come down the pike as well makes things further complicated in this regard.
Well,
but
today,
at the
63
moment,
cents.
buying deposits on a deep discount seems
if I do
to
buy
be
back in,
rewarded
I'll
by
wait
the
till after
market
hours at least.
with these companies like JP Morgan up near 52-week highs.
Either way, Julian.
As long as we have the giant
it could stay the same stock, same ticker, could get relisted, or could have a new ticker name.
Because I would imagine there might be a
Jay
little
from
bit
Bay,
of
where the heck you been, man?
Here
I was gonna make you mod today,
JP Morgan
but
was being
didn't show up.
punished
So
for their actions, that seemingly would be quite a bit of a different sentiment. Otherwise, it seems like these are literally physical branches that will be bearing a new name, a new CEO, and perhaps more support financially from a bigger entity. But other than that, no major economic disruptions.
Well, Jamie Dimon is two things, Oliver. He's a very smart businessman, number one. And number two, he has the experience involved in taking over these banks, and he remembers what he did right and what he did wrong back in the financial crisis. And he's been through this before, and he made sure he got a deal that you saw the price action on JP Morgan when that deal was announced. That stock rallied quite strongly, which means they probably got a pretty good deal. A pretty their
BY's
bank got
bear
bigger
flagging here.
At a much
it very well could come down again.
Sure.
They acquired these
Maybe
assets.
break this all-time low.
That's what it'll be, Oliver.
Again.
I mean, no one's going to dive on a grenade unless it's a good deal. Now the
AG
depositors,
is halted.
that's
Halted to the
different story.
upside. Look at that.
They'll always, it seems, be covered, right, going forward. But stock and debt is pretty much the general theme here is any of your stock, any of your debt, which means your bondholders, wiped out in these takeovers. So yeah, these guys have drawn the line in the sand. It's all about the depositors, and stockholders are left out in the cold, Oliver. Jamie Dimon's been through this before, so he basically set the template for how these might happen if they happen again.
Okay. It's also just not banks that are the only sector down. Real fast, Renita, tell me about BP, because the stock's down 8%, and we're getting this energy trade that is going hand in hand with this bank trade. It's the second time we've seen this. Investors are kind of just selling things that are generally connected to economic health, it seems like, overall.
It does seem like it. We also had briefly BP earnings.
Yeah.
Shares are lower today. Revenue did grow 14%. Earnings and revenue did come in better than expected, but it was the underlying production that dropped, as well as the company giving a downbeat outlook. And a few other things are hammering crude oil today, which is down about 5%, maybe a little bit more than that by now. We see the stronger dollar coming. It's increased refinery activity that is having analysts believe that U.S. crude oil stockpiles are going to decline for a third straight week. And this is also nervousness ahead of the Fed decision that's coming tomorrow. So a few things impacting the price of oil today and other energy sector areas.
Growth slows down a little bit, and there is kind of this problematic gap now between crude oil, the commodity, down back near $71, and then a lot of these energy stocks that were just making highs a week ago. So that's a little bit of an awkward gap to have to close. It seems like maybe we're doing that now.
And to the journal's credit, they said that it looks like because of the market reaction we're seeing right now, that the expectations that shareholders have of BP have not come down to earth as quickly as energy prices.
There you go. We saw Goldman cut Exxon yesterday, and they had been bullish, so they said to no longer buy the stock. Right, appreciate it, guys. Thanks, Rena Young, Kevin Hanks. Let's talk some more about what to expect from Jerome Powell with Danielle DiMartino Booth, the CEO and Chief Strategist for Quill Intelligence Research, QI Research. Danielle, always good to have you here ahead of the Fed tomorrow. What's going to be the big highlight? How Jerome responds to this financial situation?
I think so. The last time he was at the podium, he had to, he certainly had to voice the opinion and the concerns of other members of the Federal Open Market Committee who were concerned that Silicon Valley Bank Signature and Silvergate, the combination of them would set off a credit crunch of sorts. And now,
is anybody thinking different than 25?
Before he goes to the podium, bank
like a
failure to talk about, to contend with, while we've seen these regionals begin to act like they're playing a very treacherous game of dominoes. So he will certainly have to answer to why he feels that it was important to continue tightening policy,
40 votes. Wow,
even though
80% of you are not selling BBY today.
is doing a lot of tightening on its own.
how do you measure that? Where are we seeing that show up? Because the stock market has been quite joyous since this whole bank situation
because that
began,
vote is 80%.
as people are trying to front run any slowdown from the Fed, piling into risk assets. So it's not in stocks. Where else are we seeing the crunch?
You're absolutely right, Oliver.
What's a rate
not
hike?
In stocks. We have seen risky assets continue to behave very well. On the second hand, though, the Fed is privy to its own data that shows that commercial and industrial lending, we're talking about capital to pay for your operations, your inventory, pursue mergers and acquisitions activity, which is absolutely cratered. We've seen many layoffs on the street due to M&A activity falling so much, but we've seen commercial and industrial lending come down more than $50 billion since Silver Lake failed, and that is something that will indeed get the Fed's attention.
Down here.
In addition to that, the Senior Loan Officer Opinion Survey, which is not going to be released to the public
RSI
until
divergence
Monday,
on the futures.
is in the hands of policymakers
here too.
right now, so they'll be able to see if the tightening
I don't like it on the shorter time frames though.
Followed through into
Might
the
take a
second
short, though.
quarter. They'll have that information in hand. They may even have some information in hand on what's happening with the
last 10
payrolls,
minutes.
since that report is so close by
Almost have
as
to
well.
go long.
Is it worth playing the blame game here, Danielle? The speed of the hikes, the latency of the hikes when inflation was running rampant and pretty obvious coming out of
let's
COVID.
See.
Is this
How
the
much
Fed's
cheaper
fault
can
we're
it
dealing
get,
with
trader?
this, or is it these companies?
Well,
keep coming down and down and down.
It's
That's
a
the point.
combination of both. To
Come
suggest
down
that the Fed was
68%
on
into
transitory
OTC.
for too long and knew that they certainly
You're at
should not
23
have been
cents.
playing in the mortgage-backed securities
come
arena
down
for as long as they were, that they should have been
90%
normalizing policy earlier.
OTC.
That's
You're
as easy as shooting fish in a barrel.
fraction
By
of
the
a
same
a
token,
penny.
after the Fed had pushed through
They can
with
come down.
2 or 3 abnormally
now it's just
large rate
not even
hikes of 75 basis points
sense,
apiece,
but,
it was long gone.
the point is it can always
time
get
for the
cheaper.
banks to have stepped aside from piling into very low yielding
But yeah, I
instruments,
think
risk-free
if
instruments.
it
So
comes
I
out
think
of
that there is blame to go
if there's a buyer,
around if you
they most
really
likely
wanna
will be
play
paying
the
more
blame
than
game.
$34 million
about
market cap for it. I would assume, since they're doing over $5 billion in revenue.
Is relevant here for Powell, because if he feels he is
5x,
at fault and to
10x
blame,
from
then
here.
he might have
I
to
would
change his
think
course.
at least be fair
But
value.
if he feels that this is collateral damage,
But
that
if there's only
should
one
be
bidder,
part of the plan,
maybe there wouldn't be much of a
then
premium.
it would behoove him
They
to
have all the leverage.
continue. Where do you think he sits on that
Even without good news.
spectrum?
Oliver, I think that this is really the critical question. Before
Bar
we
for
had
futures?
First Republic, there were even
Yeah,
rumbles about
I
was
like
there
the
going
longer
to be a
trends on
subsequent
futures
rate
also.
hike in June. And
The
I
daily,
think more to the
that's what I
point, the
really
last
like.
time Powell was at the podium, he stated clearly that he did not plan to lower interest rates in 2023. I think tomorrow is the time
But-
that the reporters in the press briefing step up to the plate,
Yeah, I
ask
try
the
and
chair about his intentions when it
get
comes to
into
shrinking the
longer time
balance sheet.
frames
If just
intraday
because there
and
might be a
hold overnight
pause
at least.
here after
So
tomorrow's
I like my
meeting,
shorter
if
trades to
he
turn into
intends
longer
to
trades.
continue to
Don't
roll
always close them.
securities off the balance
I mean,
sheet,
like
which
today,
is in and of itself its
well, if we
own
didn't have Powell
form of
tomorrow,
tightening.
I
If
probably
we're looking
would
forward to that,
try and find a
more
nice
of that
short
between
entry
now and
by
December,
end of day or
as the
whenever
debt
before
ceiling
bed.
showdown in Washington
And hold
heats
it
up
and
further.
just- and
we're
then,
going to see
yeah,
more
trade at the
tightening,
longer
and the
time
Fed's
frame.
policy
Try and
is
get a
going
big,
to continue
one
to
of these
hurt
bigger moves.
if he keeps up with quantitative easing. Quantitative tightening. Freudian slip.
Yeah, how do those things go hand in hand right now, Danielle? If he does signal pause, does that also mean that he needs to pause the QT as well, the balance sheet activity?
No, that's exactly my point, is that he has decidedly
doing
separated
futures on
the
your
two,
mini account?
one into
Yeah.
another. The New York Fed put a
Paper
report
trading? What
out
are you
that
doing?
said that the Fed's balance sheet was going to be trillions, plural, smaller, lower, more shrunken by the end of 2025, meaning the Fed's policy intends for rate policy and balance sheet policy to run parallel to one another and not in a coordinated fashion. Will this work? We'll have to see, but that's what their intention is right now, to continue shrinking the balance sheet.
Okay. If they do that, then that gives them a little bit of maneuverability is the point, right? They've got kind of two levers that they can adjust here. Is there enough damage from what you see for them to actually go to cuts at this point? Would tweaks to the balance sheet be a little bit more amenable than having to do a full reversal to cuts by the end of the year?
Well, I think that that's I think that that's what they're looking for in terms of flexibility. I think they're trying to say, we're just going to put a pause on rate increases. We might actually return to them if inflation does not continue coming down to our 2% target. I think they want to leave that balance sheet alone, but you're right. They will have another lever. They can say, you know what, instead of lowering interest rates, we're going to taper off the rate at which we're rolling assets off the balance sheet. That's something that they could do. They have gone in reverse with tapering in the past as well, not just in QE, but coming out in QT. So that certainly gives them a little bit of optionality. But Oliver, to be honest, the way these things typically play out is when you're reading bankruptcy headlines and saying this firm, that firm, and this firm, which is what I was reading last night, are in line to declare Chapter 11, declare bankruptcy, sometimes credit happens a lot quicker than what appears to be right now controlled demolition in the U.S. financial system.
Okay. Well said. Appreciate the catch-up, Danielle. Good setup for us for tomorrow. Thank you very much.
Thank you.
Absolutely. Danielle DiMartino-Booth from Quill Intelligence. When we come back, let's trade some Apple. From macro into the big stock headline for this week. Of course, it is the giant, and Tony Zhang is doing a little bit of a fade.
Think about primary BBBY. Yep. Top was starting to move earlier. Shut down. BBY is a great trade. Very clean pattern. Clean price. I mean, you had no shakeouts on the short side. Not sure what's wrong with this trade. You have huge percentage gains. No variance from the slope. Look up. Maybe. Could be rally. Could be. I don't know. I don't think this is a short squeeze on top. Just so happens that all these sketchy Chinese companies that don't do anything are short squeezing. The collateral, up and dump, liquidity grab, no catalyst. But yeah, it's not something to hold. I agree there, especially now that it's made its bounce. Keep it on your watch list and see you in 6 months. The buy taste broker works. What are you saying, trader? Some people aren't able to buy it anymore? Almost a new all-time low here on BBBY. Almost gonna hit it again, guys. Hit 2 congratulations in one day. Oh, the buy button's already not available? We were hearing that weeks ago. Not maybe about a week ago, like a week ago. International brokers were allowing it to be bought.
Demands a higher valuation relative to the market because of its profit margins, its relatively strong history of growth, and its strong balance sheet. But I think 55% premium to the market right now, given the growth expectations, is fairly hard to wrap your head around. And then if you look at the chart here of Apple, it's a stock that the range, and there are signs of exhaustion on the left of higher highs in price, no longer confirmed by higher highs in momentum. These signs of exhaustion simply point at a higher probability of a pullback, and certainly earnings could be the potential catalyst for that reversal from what has been a very strong bullish trend over the past 4 months into what could be a more bearish trends here. So from my perspective, if you look at the technicals, you look at the fundamentals going into earnings, I think that the chances that Apple beats earnings and trades at 30 times, forward earnings or even higher just seems a little bit hard for me to digest. I think it's more likely that you see some slowdown in the consumer, some perhaps weaker guidance that, re-rates this stock at a lower valuation in my perspective.
Yeah, I've heard of reports of that
chart,
for
super
I think
interesting
a couple
one,
weeks now, Trader.
And with the lower highs that have held despite some pretty
I'm confused as to why they would even shut it off, considering
and we're
they've not even said it's going to be delisted
so if
or suspended.
this thing does make a higher high, it would probably be a pretty important technical event, but so far that hasn't been the case. So I get the bias kind of going into this. Where do you figure out which strikes to use, and how much time do you want to give yourself after
at a share offering probably?
Yeah, so
which
what's
is interesting.
Really
These Chinese
interesting
stocks
not
never
only do you have an alignment
offer shares,
between
it
the
seems like.
technicals and fundamentals, but you have a very, very rare event, in my opinion, where the IV percentile or IV rank of Apple is near its 52-week low going into an earnings event. You almost never see that. So you can actually go out to the May expiration, which gives you about 3 weeks time, plenty of time to play earnings.
Oversold is usually
and if you look at even
referring
just
to the
slightly
RSI
out of the money
technical
put
indicator.
options, 167.5, which is the first strike out of the money, you're only paying about $3.60 for that 3-week at the money option. Now that equates to just a little over 2%
I'm not sure what you're talking about, Summer.
of the stock's value.
They had a
and you're
share
getting
offering,
full unlimited
or
downside
someone
exposure
offered to buy them?
Apple if it were to tumble on earnings, while only risking 2% of the
What do you mean,
stock's value.
offering
So
at
from
8?
my perspective, that is an incredibly rare event. Normally, when I trade options around earnings, I usually spread them because implied volatility is usually higher. You want to lower the cost of buying premium. Here, buying the cost of premium despite earnings is still rock bottom. So this is really where I'm choosing to just go simple, buying a straight put and playing for some downside moves here in Apple. And if I'm wrong, I'm risking only 2% of the stock's value.
Okay.
Juice is buying more BBBY.
Looking for a little bit of time on this too. You can let it simmer a bit and come back and look at it towards the end of the month. Not quite that ways, but all right.
Your ears are playing out.
Looking for
Rally.
Apple to struggle a bit. Thanks, Tony, for the trade. Appreciate it.
Lopsided, upside down, cat ears.
Chief strategist at Options Play.
Bat ears.
All right, we're looking to see Apple drop a bit here and get rejected from that higher high on the chart. Tom's got some bearish trades of his own in the options corner coming up next. We'll prepare for match this afternoon too, though, where he's got something bullish on the dating biz. Stick around.
Limited announces registered direct, priced at the market under NASDAQ rule and private placement. Yeah, it's like a share offering, right? Has entered into a definitive agreement with several investors for the purchase and sale of an aggregate. Oh, it's a share offering to a private investor. Or wait. Yeah, it's not just an offering, it's to specific buyers. Refunded warrants, yeah, it's an offering. Common stock at a purchase price of $8.27 a share. Yeah, so it's warrants that are Priced at 827. That's interesting. That's like one of the first offerings I've seen from a Chinese pump and dump. Getting smarter. So yeah, basically those warrants are worthless if the stock's below 827. Oversold, overbought has nothing to do with that. That's a term used on RSI. It doesn't mean it's going to go over 827. And the news itself is bearish. They're diluting. It's similar to what BBY did. Heck, I've been buying, man. I think the same thing's gonna happen today that happened yesterday, maybe. I'm in a short position here. We're coming into the last 10 minutes. Like, what? It's 20 minutes from now? I think we'll probably come down, but I think I'll probably flip from short to long for the last 10 minutes. I don't know. We'll see. Maybe it just flushes into close. This was not much of a bounce into close yesterday at all, but the last 10 minutes today should be pretty volatile with how big of moves we made. Put an order to close it around here. Not sure if it'll get all the way there, but it's a case. Take the emotion out of selling it. Still money bag holding. I like how it's a money bag, Emperor. It's genius. Bags of money are heavy.
15 over the next 10 days. It's about 9% above the current share price within that one standard deviation move that the option market's pricing in. Call volume, about 3 times normal daily average volume that we've seen over the last 5 trading sessions. So, yeah, somebody setting up for an earnings beat. They only bought about 2,000, but typically we don't see massive size or big orders.
Have a plan, stick to it.
In a name like Match.
Don't regret it.
This is definitely an earnings play
to
the upside here.
Got an engulfing candle there on the 5-minute.
Big turnaround, which
but
this
we did
has
just
shown no
bounce on the
signs
support
of.
here.
No matter what's happening, post-COVID recovery, people going
25
out.
minutes to go.
Matches
You do have till after hours too.
Caught any of that trade.
Watch the short interest build up on this one because if they
Congratulations,
do beat,
you guys.
the stock starts going up.
Down
There'll
today.
be some short covering also.
714.
Like I said,
Just
the
saw it
option
here
market
first.
price in 11%.
BBY stock price is at 714.
Either up or down.
Bumble's also been getting
screenshot.
slammed, so it's like online dating. Maybe it's become too
been prophesied.
Perhaps. Either way, market doesn't like
buy at 714.
You've got 2 bearish trades here. The first one's in Comerica. Let's talk about it.
Yeah, down sharply today on the back of a lot of falling in the regional banks. You look at some of the sell-offs that we've seen in Western Alliance, WAL, West. Those are down both over 20% earlier on in the session. So seeing some weakness in there. That's equating to losses of over 2% in the Russell 2000. This one's taking it on the chin once again today, off 44% so far this year. If you looked at their last earnings report, though, on the 20th of April, Oliver, they beat on EPS.
So what you want to do is make the plan before you ever open a position.
NIM was 3.5%.
And even if traders don't have great plans, if they're always sticking to their plan, they outperform traders that don't have a plan.
During that quarter. So they had a good quarter, but all of this stuff took place you know, towards the tail end of the quarter. So I think that's a concern for a lot of these banks. Everybody thought after the JP Morgan acquisition of the assets from FRC this weekend that we were through any part of this regional banking crisis. And this is the moves today are telling you that we might not be through that. Fed's expected to raise another quarter of a basis point.
Let's see. Now you have to consider.
And then maybe pause.
Since you didn't have a plan entering it, so what's the best plan at this point?
Here in the banking sector,
and it's always okay to cut losses.
500 to the downside. Besides, energy is actually leading to the downside. Financials are number 2 on the loss column.
But
somebody setting up for maybe even some more losses.
That is true.
In here
Nothing's worth losing sleep over.
Trader bought over 4,000 of the May 35 strike puts. Average debit of about $3. So that break even of 32 over the next 2.5 weeks is about 13% below the current share price.
Up to 20 minutes
put
to
volume
close.
about 8 times normal daily average.
We still could get a little more downside before maybe at
trading.
Last 10 minutes.
But then you're also seeing, Oliver, as far as unusual option activity goes,
I have my order to close this. I'm going to change it to a market order.
Banks, Regions Financial, you're seeing people load up big on puts because once that snowball starts, even though their fundamentals
with all the trading and how big of ranges we did and how my timing was almost perfect today, I don't know why I didn't make more money. Does it actually make sense?
You're seeing a lot of people putting on protective puts, maybe like this trader is here, or just speculating to the downside that we're going to see further weakness in this sector.
All right. And we're certainly getting it right now as these are breaking down to new lows. A lot of these stocks.
This engulfing candle on the 5-minute,
rough session for sure. However, if you really zoom in, you know, to the last month, some of these levels have actually, you know, been seen already.
Yeah.
In the first 2 weeks of March, when Silicon Valley went bankrupt. I mean, a stock like FRC, of course, cuts below those on its way down to goodbye.
Yeah.
But some of these others, actually, like PacWest, for example, that traded $5.
Yeah.
In the first week of March. Even this one did too. CMA for a flash for a moment there got below
27, I believe.
Yeah, it got below $30. Yeah. So, yeah, it's a bad move. It does seem to extend the move lower, but kind of oddly enough, still within this very messed up range that we've been in.
Yeah,
it's nothing good, but
and that's why I brought this one as opposed to talking about Key
Head and Shoulders maybe
or Regions
here.
Financial, which also saw
I didn't
a
use the
lot
1 minute
of
enter
put buying
That's
in
what I
there.
need to do.
Key Corp did make a new low today.
Yeah, and that's a concern because CMA, considered by the street one of the healthiest banks out there in the regional space, and that's a concern where even good names get dragged down when there's a bad story out there that might not even affect this company, but somebody's setting up for some more downside here.
All right.
Or protection.
Yeah, okay. How about Coinbase?
Yeah, no, I agree. It probably won't just completely get liquidated and the name will keep going.
Yeah.
What's up? Coinbase is up.
The shareholders, the current shareholders, though,
Bitcoin's up nearly, what, 4%
most likely
today?
won't have
someone's
any
fading, right? You got a bearish trade.
company.
Somebody is fading it. And remember, just yesterday, Citi
bankruptcy
came out and
pays out
downgraded
shareholders
Coinbase
last.
down to 65 from $80.
If there was enough money to
even though they're the
pay out
category
shareholders,
leader,
they
they've
probably
got the
wouldn't be going
Wells
bankrupt.
SEC's Wells
They could
notice
pay everybody,
overhanging. We
their
did start
bondholders,
seeing
pay
some
debtors or
cracking
creditors,
in Bitcoin
and pay
over the
shareholders.
last week and a half, but having a nice day, up 3.8% today.
Jay from the Bay,
That's leading
trying to make up for that.
gains of over 2% for
Missing this morning.
Coinbase. But
I'm
somebody
just kidding. Thanks, man.
fading
Appreciate
this
it.
move here, as we saw some buyers in the May monthly cycle. Trader came in and bought over 5,000 of the May 50 strike puts for an average debit of 475.
Experience to understand that.
So that break even of
Even if BBY
45,
makes it,
25 over
doesn't
the
mean
next
that you're going to
17
have
days,
position in
about
it.
12% below the current share price in here. So getting a nice pop here on the rally in Bitcoin, but this is, remember, you know, this stock just got downgraded yesterday, was weaker yesterday. With
What Tom said is
Bitcoin
highly
also,
probable,
so
not
somebody
certainty,
fading this move
yes,
and thinking
that is
that hey,
most
over the
likely
next
the outcome.
2.5 weeks we're going to see some more downside here for Coinbase.
Okay. All right, so 2 bearish trades,
Yeah.
1 bullish. Interesting to see
it's-
them fade Coinbase.
That's the
Not
reason why
surprised
they
to
want
see
to
them
buy
fade
it when it's in
on
bankruptcy
Comerica
protection.
further.
They don't have to pay
All
out
right,
all this
appreciate
stuff that they
Tom,
owe,
thank you very
including to the
much.
shareholders.
When we come back,
They
let's get
can
an update on the
renegotiate their
jobs and
debt.
market.
They can pay
As we
less
saw from,
on everything. They're protected from it, including paying shareholders. So it's a clean slate. It's a refresh. If you go bankrupt, you do that so that you don't have to pay off debt. You don't have to pay things out. Hurts your credit. You'll rebuild it. Whatever. It's a big reset on your balance sheet, your financial statements, on everything. It's just a big reset. So it's possible that shareholders get paid out. It's not possible, but it's unlikely. See, Tom. You're not going to close before it gets suspended, Tom? You know it's getting suspended? You're coming in here ragging on us trading BBBY when you're trading it too? Somehow you have the perfect entry to every trade also. It's very impressive. The purchase would need to be greater than the debt plus debt financing for current shareholders having the equity. If price is equal to or less than the debt, then shareholders get squat. Yeah. Shorting it from here is stupid in my opinion. Unless if you're just day trading it, which yeah, the short this morning opening up would have been smart. What are you talking about, Tom? What's your point in not realizing your gains? 741 close. It's been prophesied. 345, we're coming up to it. Okay, I think that's all the drop we're getting. I want to hold this into 10 minutes to the short side. Maybe the long side, not short. His name was Tom Figure. His name was Tom Figure. His name was Tom Figure. Great movie. Alright, here we go. 15 minutes to close. If BY closes at 741 today, I will buy a share in after hours. One share, maybe 10,000, I don't know. I don't know. MACD's bearish. We got red under the 9. We might get a flush into close. Maybe just screwed myself out of a nice trade. Tom Finger. Dang, I missed the flush, dude. It's always scary coming to the last 10 minutes. Volatility gets crazy. MTC. Sounds like a drug. Tech. Bounce. Last 10 minutes, wild. How is Finger doing, by the way? Yeah, Finger's still kind of maintaining that trend. 740. All right, I'll screenshot the 741 also, not just the 714. That would be. I literally would buy shares.
The ego on you.
That you, Ace? Thank you, Ace. Appreciate it, man. you trying to snipe Tom Bigger? I would be stoked if he was a member. Come on, baby. Alright, coming into the last 10 minutes of Fugazi. Old Ben. I'm trying to pay attention to this stock. I gotta get the screenshot. Ben H. Better get to chat and thank Papa Ace. The eagle on you. Oh my gosh. Dang, that's short. I should just put a stop limit on my purchase. Just wanted the profits. I didn't want to just stop me out and do that. Oh. Well, small gain, small move. I was a little disappointed in the gains today with what happened. Weird. It really is weird.
That about the market rallying over the past month or two, and I mean, I think the reality is it's not about earnings in 2023. It's about earnings in 2024.
Here it is.
And it's yes, there is some tailwinds here, extrapolating the idea the Fed's going to pivot at some point this year, and that's why 2024 matters. And it's also a story though of the haves and have-nots. What companies used last year and have lowered their earnings expectations, looking like in NVIDIA and AMD and some of the other tech companies that have performed, even like a Meta. I mean, got crushed last year, went through, after getting crushed, it lowered those expectations a bit. You're starting to see some of those are the leaders here within it.
Seconds,
and then it's sort of those that have not. And I mean,
we're in a bear flag on the 1 minute.
Companies that have not are the ones that just, they're going to be an L. They're not going to be a rebound. They're going to be down, and then they're sideways or lower. So, and then you got the regional bank problems, but that really highlights the lower rate environment because of those regional bank problems, and then the 2024 earnings where semiconductors have really outperformed this year, and that's the spot
everything's saying it's going down,
where
but
you
here we go.
the supply glut is
still not
supposed to be
741.
sort of solving itself as we look into 2024. That's why we are very overweight. Semiconductors have been, but I think it's going to be continued evolution here as the year unfolds.
Is good enough.
Who's going to be the new leadership if things change? And so you always got to kind of stay on the ball in that part. But switching gears back to what you asked about, where the quadrant of safe havens.
Yeah, real fast.
Yeah, I really like what we've seen in gold and silver. I mean, you can't ignore how beautiful this setup is. Not just since November rally, not just since the March surge on banking news. I'm talking about the last decade.
BBBY people just adopted it.
A beautiful decade-long pennant in silver. You got
I can buy an OTC,
handle, whatever you want to call it, and
you have to
gold
figure out your
going
brokerage
back
if you
to
can.
2011. I mean, we really have a beautiful setup here.
7 a sign for dinner for one.
In these markets. I think those are the ones to watch as the year unfolds and the Fed finally pivots.
All right.
Yeah, what is this 10 minutes of Fugazi? This sucks.
Thanks.
Bill Baruch, president at Blue Line Futures, liking the gold and silver setup. When we come back, let's continue this conversation. Liz Ann Saunders and Colin Martin joining me from Schwab as we see stocks still near the lows of the day with about 10 minutes
might just
left.
get in the last 5 minutes. It's just that 5-minute punch. Tomorrow it's getting suspended. So long or short, better hope you're doing right. Come into a suspension. And options, I would probably close. I don't have any options on it basically. Just kidding. Yes, nice little pump there. There it is. Going. 41.42. 41.43. I'm just gonna put an exit right now on it. Hate doing this, but it's good to do. Did it hit 741? Oh. We're gonna get 741 and a limit close on my futures at the same time. It's gonna be glorious. Nice fatty green candle. Oh man, I really don't want to close it, but I should. I'm gonna close it. I'll let it go. How far down? We could get like a massive pump. Oh, it was way too much fear. Jobs market, the banks, all bad. Ah, was that it? Our #1 meme stock. It will rally into close. That's something for your watch, Tommy boy. $741. I mean, I'll probably buy 10,000 shares, maybe 50. I mean, I feel like I would have to. I mean, think about it, trader. Think about it. That's about as good of odds as anybody's going to get of this thing rallying. Might as well base it on pure astrology. Pure hype created out of thin air. It's like monkeys picking stocks. They outperform individuals. Long dated puts on Bud. Yeah. Good. I mean, I think typically alcohol does pretty good in a recession, though. That's the only risk. I think long dated puts on pretty much any tech would be good if you got a nice entry. But I think it's pretty strong in a recession. That's my only concern with shorting beer stocks. And I know what's going on with Bud. No rate increase, a pause. All right, we're in the 5 minutes. I don't think I'm gonna get my my limit. Just close it here. We'll put a stop and just let it go, and after hours see if we get a pre-market rally. We could. Pretty big sell-off today still. Still down 1% even after this huge bounce. Takes his wig. Yeah, no, I've seen the all of that, but that's, yeah, as far as that ongoing continuing to kill the stock, I don't know. Now you're just looking for earnings plays to see if it actually hurts sales and how much it hurts sales, and you're not going to see that for 2 earnings reports probably, or I guess maybe the next one, depends on when it ends. Oh, jeez. I'm on 741. Here's a little yes, this will make it happen. Yeah, if you only have a few $100 worth on it, I mean, it's all relative to what that is to you and how much you put in originally. But yeah, if you put in multiple thousands, I guess worth the risk if you want the risk. Should be more get by them all. It's true. $14,000 shares, Tony. Gonna lift the suspension. Right. Not gonna give us 741. I guess I'm not buying back in. One minute. Not much of a pump, but not bad. We'll get some after hours. I think let's do a stop limit. Unless it gets filled right here. Which it might. Seconds. Oh shoot, I need to close this. Okay, we shouldn't get a bell. No, Spider. We're going the wrong way. Really? It passed 741. I missed it. Freaking spy. You distract me. All right, there it is. Ding, ding, ding. 751. Not quite. Not quite. Not this time, BBBY. Not this time. Alright, there's the bell that no one heard. I'll give you a golf clap instead. Good game, good game, good game. It was close, 751. Very, very close. Putting a stop loss on this thing. Triggered. Hold. Hold. Average is 50 cents. If it makes it, I mean, that's market cap wise, it's a great deal. You guys are not terrible. GME closing green. Courtesy goes to 3 cents, 33,000 shares. Shit. AMD earnings tonight. Yeah, that could be a catalyst for my futures. Selling fee picks. Another 4 hours or after hours, yep. Extended hour, I mean, yeah, I could just leave a stream out, extended hours going. I don't know what you want to expect to see. SPY's gonna probably be volatile with AMD going. Yeah, we don't play Skyrim. And get our 741 close. That literally would have been my favorite part of this whole thing. It might have been worth all the money I lost. Nothing to see here. Well, thanks for the support, guys. I appreciate it. I've got 41 likes today. Much obliged. Ace, thank you for the gifted memberships. Once again, I appreciate the generosity. Very kind. We got 20,000. 20. Thanks, Julian. Thanks, Tony. Thanks, Ace. Thanks, Kitty and Trader, Jay from the Bay, Passing Cloud. Thank you, Tom Vigor, CDB, Mazimus. See you guys on Discord if you're not already on there. Link is pinned. And we'll see. I'm not gonna do a video today. Too late yet again. But yeah, curious what happens tomorrow. I'm assuming wake up and it's going to be suspended. If it comes out of suspension and I miss a move up to $5, that's just going to happen. I'll probably trade it then, because if this thing does have some sort of deal, even if it's at $5 a share, it very well and very likely would go past that. And there's still trade opportunities. Not to say it won't settle back at $5, but yeah, it goes to OTC. I'll watch it. Maybe I'll trade it. We'll see. Yeah, but it'll be fun regardless. Go to moon. Thanks, Christopher. You guys back on the market. Yeah. Thanks, Taryn. Play some League. Thanks for joining, guys. Appreciate it. Have a good evening. Sub up, like up, comment down. Happy money sticks around. Okay, peace out, guys.